the rebound. But again, if you do dig a little deep like I did, there are some positives to be had, which is 24,000 is a medium term support zone that should be respected. Interestingly, Friday's call on a lot of stocks also wasn't really clubbed with as heavy volumes at as it has been for the most part of this month, so which is also a healthy sign. And also the monthly RSI, that has actually formed the base of the cautious view that we've discussed for a while now, which had hit 83, is now approaching that support zone of 67. So a couple of points suggesting that the risk reward ratio in the near term may not be as favorable for a short position. We will look for a rebound trade, but again, we won't preempt it. As in when on the daily basis, on an intraday basis, the markets do indicate, that there is a rebound to be played, we will, perhaps initiate a long position, just not yet. Also, on Friday, we discussed that, there is a round two of selling that might come about, after, let's say, a dead cat bounce or a technical rebound. Not sure if entirely the first wave of the selling has also been completed, given how the index moved on Friday. So cautious warranted, on the Nifty. But yes, from here on at least, near-term perspective, short is not a position that you want to take. We'll look for rebound.
Okay, look for rebound. I have to take a very short break, but we'll be right back. Top stock picks. We'll take Aditya's call. I'm sure he has a lot to say about all of the banking results which have come in. All of that after this break.
The festival of joy has arrived and the property market is back on track. From Delhi NCR to Mumbai, Lucknow to Chennai, there are countless options for new homes. Are you ready? NDTV Real Estate Conclave, 28th October, only on NDTV.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens
as you turn your efforts into profits. Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
This festive season,
let money work for you.
And light up your future with prosperity. Let's celebrate growth,
wealth and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back to India Market Open. Does the spirit of Diwali and the sentiment around Diwali lift our markets? Here are the first trades. Will be all over the place. We'll of course get to them once they settle down a bit, but I'll watch out for ICICI Bank. Does that really have the strength to give the support? Remember last week a day it was ICICI, a day it was HDFC. Can ICICI Bank do the trick today? Let's pull that stock up for you and see what it is doing in the first half, because really that is the big one to monitor. In addition to, of course, Interglobe Aviation, maybe down because of the commentary that has looked very wobbly. Interglobe Aviation's case, 10% slam dunk. This may change really. Let's wait and watch. I really doubt it will not be 10%, but let's wait and watch what happens here to some of these stocks. Okay, before we get in stock ideas, I think Aditya Shah is with us as well to take a quick stock of what some of the results have looked like. Aditya, since Interglobe is top of mind, maybe ICICI Bank too could be, but I want to start off with Indigo. What did you make of the numbers? More importantly, what did you make of the commentary? Because they've sounded very cautious for what will arguably be a very busy flying quarter.
So good morning, Neeraj. On Indigo, I've time and again warned the market cap of the company is extremely high. The stock has rallied nearly about 100% in the last 1 year. However, the results that we are seeing due to volatility in the crude oil prices, as well as the competition now starting to rev up in terms of Tata's coming into one brand, which is Air India, Indigo will start to face the heat over the coming next 1 to 3 years. So my perspective really is this is a one-off quarter. We've seen crude oil prices also coming down. So that's not really the major pain point for Indigo per se. But now the expensiveness of the stock combined with competition framing up in terms of Tata's is a real concern for me at this stage, and I will try to avoid the stock. On top of this, the groundings of their A320 Neos is still a concern, and that's not being sorted from Pratt and Whitney per se. So my perspective on the stock is absolutely very clear. It's a clear avoid. You cannot be into an industry where a lot of factors are beyond the company's control, and the competition is really intensifying at this stage. Although a great company, we've seen the promoters selling big time on the Indigo stock, and that's a very clear indication that a short-term top for the stock is starting to get formed. Aviation is a multi-year decadal story. However, a lot of it is priced in the short term for Indigo. So a clear avoid at this stage. The results are not very good, not very enthused with the sector valuations per se, and be very, very careful on the entire sector as of now.
Aditya, is if you're sitting long on this stock, fresh allocations sure not warranted, but I think analysts and investors would be concerned if they've sat on this counter over the last couple of months. Sony, but we're getting close to market open. Top trading ideas this morning, what do we have?
So, Samina, we have officially recommended a buy and a sell in a balanced approach. The buy is for Bharti Airtel to buy on dips with a stop loss of 1690 and a target of 1730 to 1750. That's the first buy. The sell recommendation over here is in November futures for Titan. So one can sell around 33 with a stop loss of 3365, a target of 3100 to 3050. So this is November futures.
Okay.
Right. So, Kush, sorry, what about you? What are your top stocks that you're recommending this morning?
Well, as the case has been for a while, a mix of long and short. Forge is a long. The stock has seen a very smart rebound from the 50-day moving average, and continues to impress with fairly decent volumes even on a weekly basis. So the targets for this one are 78, 80, and 80, 40 for the long position. 7600 is where you place your stop loss. On the short side, you've got Bata, which continues to reel under pressure, and every bounce has been taken as an opportunity to sell. So on the short side, Bata with targets of 1345, 1330, and the stop loss on this one comes in at 1385.
Okay, so those are some ideas for the morning. Hopefully you can work with some of those. Well, Pasupati Advani, founder of Global Foray, also with us. Pasupati, good morning. Thanks for joining in. We were talking about some of the banking numbers and how they've turned out, and how maybe the street will bifurcate between an ICICI and an HDFC versus the rest. We'd love to think how you think about how banking has shaped up in the quarter. What is it that has stood out for you in the results? Is it ICICI Bank? Is it something else?
No, I think what's happened is that a lot of banks have chosen this quarter to draw blood, and they've given taken some surprising losses and all. As you said, there is three bifurcations. One is the ICICI Bank and the HDFC Bank. Second is the smaller private banks, and thirdly is the Indian PSU banks. So they're all sort of basically consolidating. I particularly am not very fond of the fintech space, and I think that the fintech space is going to now sort of create havoc in the banks. So it depends on how these banks have lent to these fintech companies. But I think it will take time. So it will be a slow, painful drawing of blood, as I said. Thanks, Neeraj.
Mr. Advani, hi, Tamanna here, and I must say, absolute pleasure to speak with you after so long. And we're talking at a very important time, where concerns. You talked about banks briefly, but if I were to ask you to widen that lens a little and look at Q2, are you worried with what you've seen so far with corporate results?
Well, Q2. It's always good to show. Sort of take all the sort of losses that you want to take, because then Q3 and Q4 look better. So I'm not so pessimistic about that. But where I am pessimistic is the fact that, where I am optimistic is the fact that, it looks like the Israel situation seems to be getting a little calmer. Crude has come down, which is also very good for India. So I think, the macro around us, in the external factors are definitely going to make a big difference. And I think that's going to help our markets. Again, companies have taken a chance to, show whatever losses they're going to show. So I am expecting Q3 and Q4 to look better for all these large companies.
Hi, Mr. Advani, it's Amina. What is the advice that you're giving your clients right now? Do you buy into this weakness? Do you stay on the sidelines, wait for a better time, or just stay put?
So I think the big equation for right now is what's going to happen on November 5th in the US with the elections. And obviously, I think a Trump winner would be good for markets. A Kamala Harris winner would be not so good for markets globally. And I think some of it will be affected here. There's a lot of watch and wait. If you're looking at all the markets today, you're seeing the Far East markets. Most of them are very quiet, and everyone's sort of waiting till next week. We in India have also got Diwali between now and then, so I think there's a bit of optimism for that. And, so I think there's a bit of bounce. But I think the reality is we're waiting for November 5th for the fun and games.
Mr. Advani, are you concerned about the significant foreign outflows from India?
No, I think that was bound to happen because, if you look at our market, we are sort of considered to be slightly on the overvalued side. Plus, China is sort of giving some rumblings that they are giving some opportunities and doing some cleanup. Again, I think they're also waiting for the elections, and then they will decide whether the sort of things that they're going to pass will be aggressive or they'll be soft, depending on whether Trump's in the White House or Kamala Harris. So I think next week's going to be really very interesting. I'm guessing we don't get a result on the 5th itself, but it will be nice if we do. But, I think that China is waiting to open the doors or not open the doors. But certainly a lot of the money that has come out of India has gone into Japan and also into China, which look like, markets worth investing in.
Okay, so that's the first set of things that we now have to focus on. Then some of the stocks which were taken a slam dunk, I just want to see. So Poonawalla FinCorp had this big down 17% downtake. Let's pull up that stock. It's down another 2.5% in the session today. It is looking, God bless Tamanna, very, very wobbly currently. So the question really is, what happens to some of these stocks which are getting damaged very, very brutally? Now, Aditya, you saw Poonawalla FinCorp. There was also this letter floating around. I don't have the knowledge of the veracity of the same, but the results itself didn't look very good. What's your sense here to Poonawalla or some of the NBFCs wherein the numbers have looked very wobbly?
Neeraj, so I will set the record straight. Poonawalla FinCorp did a lot of crazy things which I don't expect a lender to really do. They sold off their secured housing loan business to another firm, and now completely went into the unsecured side of it. Now the new management is blaming the older management for aggressively going into the unsecured space when the RBI Reserve Bank of India itself was cautioning the entire market about unsecured space per se. Now what has happened is they have taken a 666 crore of provision on the small ticket size loan when the credit cycle has really turned around. Now it is very difficult to very difficult to trust the management per se, because out of nowhere they have already come out with a significant loss, and now there's no understanding of how the company will start to move forward. So rather than investing time on social media and paying influencers on promoting the stock, the management must start to build a secured plus unsecured book, and that's how they are going to protect the company per se. So no love lost for Poonawalla FinCorp. They really need to work on the turnaround of the business, and it is not the next Bajaj Finance per se. Fund managers have got it all wrong, and now all the smaller NBFC will start to face the heat as the credit cycle turns. Micro lending, you've seen IndusInd Bank take a 18% hit on Friday because of their poor results per se. The cycle has turned. All smaller lenders will continue to get hit, and that's where the class of ICICI Bank and HDFC Bank is starting to come about.
Credit Access Grameen is in that same bucket for you, very quickly.
Yes.
Aditya?
All micro lenders are clear avoid right now at this stage.
Okay. Very quickly, let's get Harsh on for the big brokerage call this morning. Harsh, what's on your list?
Well, you have HSBC on Dixon Tech, very constructive, hiked their target price from 14,000 to 16,600, offering now a 10% upside versus market prices. They believe that Q2 has been significantly better than what the consensus estimates were. In fact, even X, the acquisition of the mobiles business, they have grown at 110%, which is fairly healthy. They believe that this one will continue to compound in terms of EBITDA at 50% over FY25 to 27, so very healthy there, and also EPS CAGR of a similar number. They're assigning a higher target valuation on this one at 70 times versus the 63 times earlier, and they believe that improved confidence in Dixon's ability to capture opportunities profitably is what is keeping them very interested in Dixon. Of course, just about a 10% upside, but it's very interesting the way in which this note is structured.
Indeed, Harsh, this one is an important one, and it has been such a wealth creator for investors in the recent past. The stock in pre-open trade is expected to see a gap up after, of course, what we saw on Friday, which was not a great day for Dixon, despite earnings largely beating street expectations. Sony, I don't know whether you've talked about how you would play ICICI Bank this morning. If we do get a gap up in the first few minutes of trade, would you buy into that? And also anything on consumption, because these stocks have been beaten down all through October, and there's a recovery that's got to come, even if it's a dead cat bounce. I'm assuming the HULs of the world should see a little bit of a bounce back. So any trading opportunities between the banking names like iBank and consumption names?
So, Samina, if we talk about ICICI Bank, it has been holding quite strongly above 1220. Even in Friday's volatility, we saw the stock never breach that level. It was indicating that it can test somewhere around 1300, 1320. That's the level to watch out for. So on today's gap up, if it's sustaining above 1260, it becomes a buy on those dips, but with a very strict stop loss of 1260. And a target of 1320 can be seen. So if it's able to sustain these levels, not immediately jump right after the gap up, but maybe just give a 5 or 10 minutes of a break before getting into the trade to see if the levels are getting sustained. If you talk about the entire consumption space, it continues to look quite weak rather. And the only stock that can be accumulated on a dip would be ITC. Now, ITC is holding above a 200 EMA, which is around 465. So it becomes a sort of a dip, accumulate on dip around 470, 465. That range should play well as a good support. The stock can perform, however, it becomes a good medium-term play. So I think anywhere closer to those dip, one can accumulate, and the stock can see heading higher towards 520, 530. More of a positional play rather than an intraday play.
Okay, Kush Bora, 20 seconds. Your top call for the morning.
Yatharth Hospitals has done well, good volumes. Targets are 685, 670 and 685. On the downside, you have a stop loss around 640.
Okay, well, so those are some targets to work with. 15 seconds for the markets to kickstart trade. Keep in mind, it is a lot of stocks in focus. Interglobe Aviation is certainly something that we'll highlight, but ICICI Bank from the index, probably the main force for the Nifty today on the positive side, if it is indeed like that. Well, 0.41% higher and the Nifty Bank up 0.5%. So clearly, ICICI Bank working. Mid caps and small caps very quickly. Are they moving at all? about 0.25% for the mid caps, small caps, 0.5%. Let's see if it's a dead cat bounce or no. But bring up the heat map because ICICI Bank is taking the bank nifty high for sure. And Shriram Finance too, 4.7% higher from the financial space. But ICICI Bank, 2.5%, really strong move. Bharat Electronics, a couple of brokerage notes constructive there. BPCL doing okay, Sun Pharma, the crude price fall essentially. We didn't mark that, but BP, HP, IOC, maybe some paint companies, all of those would be in focus. A lot more green, very little red. JSW Steel stands out for the 3% down tick today. Coal India, wobbly numbers, down. ONGC, crude downtick, down. L&T ahead of the numbers, down about 1%. Bharti Airtel could be interesting. Sony had mentioned it as an idea. Let's see if this dip is something that she buys into or no. But more red, more green than red, even though the markets have cooled off and ICICI Bank has strengthened, Shriram has strengthened. So financials pulling out a trick, Tamanna.
But strength in the market still, you have to wait and watch whether you will actually see that kind of strength in the market because markets are coming off apart from those clear winners on top. Let's just look at the sectoral heat map for a second before we go to specific stocks and it's all about results today. PSU banks, the nifty PSU bank doing fine, finance banking, so that whole lot doing largely okay because of a couple of heavyweights, Shriram Finance and ICICI Bank largely. But on the lower end, the nifty CPSE, energy stocks taking a beating, perhaps crude prices are hurting there. Not half bad, definitely more green in the broader markets as well today. So after the drubbing of last week, some relief over here. But let's look at specific result impacts because it's all about result. Sirma, Bank of Baroda, Bandhan, let's pull that up first in the lot of three and look at how they are responding to their numbers. Sirma doing well, 3% up. Decent set of numbers. Bank of Baroda and Bandhan was not too bad. Bandhan, we talked about this in the morning, definitely in the bucket of banks which have not disappointed this quarter and under the new management as well. Nearly 6% up. Bank of Baroda also doing pretty well in today's market. I want to pull up Shriram Finance. We talked about it briefly, but also CDSL. Shriram Finance 5% up. CDSL also a good set of numbers that have come in, about 3% up on CDSL. IDFC First, Inox Wind are the others that we should look at. IDFC First taking a knock to the chin. I mean, this is a KO this morning, 8% down. Inox Wind, a good set of numbers on our watch list as well, about 3% up. Interglobe is the other one that we need to talk about. They've turned a loss after 7 quarters. The outlook and the commentary has not been great. A solid 10% down on Interglobe. So it's all about the numbers, but I would say that the overall mood is not as bad as perhaps we've been seeing. We'll have to see if we sustain those, Samina. That's really the question.
It takes me back to last Diwali. Exactly before the Maharashtra trade last week was last year at this time was actually a tough time for the markets. And then the markets turned around and then we know exactly what happened in the last 1 year on the street. Nifty 500 is in positive territory, so that's a little bit of positive news. But I don't know what's happening in Archean Chemicals. If you can pull that counter up, it's your top gainer on the street. Volumes are okay, they're not over the top, but the stock is up 14% in terms of trade this morning. It was higher by 15% just a few minutes ago. So going from strength to strength in Archean Chemicals as we see it. Asset management companies are looking good. UTI Asset Management is up 8%. Yes Bank post earnings is seeing a reaction, up 7%. Bandhan and Sirma, Tamanna highlighted for you. HPCL crude has gone back down 5%, which is good news for HPCL. The stock sees a 6% up move in trade. CDSL is high by 1%. Angel One is up 3%. KFinTech is up 2%. DLF post earnings is up 3%. Macrotech Developers, if I can pull that one up. While we take a check of earnings, DLF up 3%, Macrotech up flat as we see it, despite the fact the numbers were largely better than what the street was expecting. On the sell side, no surprises there. Interglobe Aviation is your top loser. The numbers were very disappointing and the stock now is bearing the brunt of that. 10% lower is what we have. Poonawalla FinCorp, there's been some reports recently in some sort of post doing the rounds on social media about a few unhappy employees. Maybe that has an impact, but Poonawalla FinCorp not looking good in morning trade, down 6%. Credit Access Grameen, Tamna mentioned, is up down 6%. Intellect Design, numbers were weak. The stock is down 6%. JBM Auto is down 5%. IDFC First is seeing weakness. Coal India, numbers weren't good. The stock trades with a cut of 3.5%. ITD Cementation as well, while we are at it. Brigade Enterprise down 3%. ITD Cementation is seeing a cut of 5%. Shareholders potentially not happy with the deal that they're getting as they sell stake to Adani's Enterprises arm. Brigade, on the other hand, seeing a 2.5% correction. Adani Enterprise will report numbers today. The stock is looking lukewarm ahead of those numbers. So that's the trade. It isn't a great morning, but it's not too bad. The start to the week, giving up gains as we see it. The Nifty 500 was up 0.3%, now trading as flat as we can. The Nifty has moved into negative territory. Actually, the Nifty 50 is up about 60 points, but the broader markets aren't looking too well placed in early trade. Praj Industries seeing a cut of 5%. Sony, what are you making of market open? What is happening in Archean? Have you been tracking this one at all in terms of chart performance?
So if we look at Archean, then certainly today the weight has given a trendline breakout. It's just almost trying to hold above the 200 EMA resistance, which should act as a support, provided it's able to close above 670, 671. The stock can see a positional move towards 725 to 740. So I think that's very important to watch out for this. Decent volumes as well in today's gap up opening. So I think it's all about holding and defending the 670 level.
For Archean, I would love to know, Kush Bora, what do you do with the two nifty leaders, Shriram Finance, ICICI Bank, at these prices?
So, ICICI Bank. So Neeraj, ICICI Bank is something that you can accumulate. I wouldn't say that go out and buy for a short-term positional trade because the stock has given up gains. But if you're in it for a medium term, then yes, this zone of 1250 where the stock has consolidated for a while will continue to act as a very strong support zone. So from a medium-term perspective, ICICI one of the outliers, not only in terms of results as you highlighted, but in terms of price performance as well. From a medium-term perspective, ICICI is a buy. Perhaps 1250, 1240, that zone should act as your stop loss. And on the way up, you're looking at 1325 and 1360 as your targets. Shriram Finance, not so much just yet. There was a trendline breakout that we saw today, but given up most of those gains, or at least quite a few of those gains. So you have to be a little watchful. A close above 3350, which I know is still some distance away, but close above that level will put this stock in the near-term upward trajectory. So bullish on ICICI Bank, a little cautious on Shriram Finance.
Okay. Indigo is the one which is the big sulker in trade, and look at that. Now, this is despite crude prices at 68. So that tells you something's off with Indigo's commentary, which is hurting, right? And Aditya spoke about this at the start of the show, but Pasupati, I'd love to come to you. I mean, if you have always wanted to buy Interglobe Aviation because the world is flying, India is flying, rates are higher, etc., crude below 70, Goldilocks scenario, a stock is available sub 4,000. Would you buy, or is the muted commentary a concern?
I think the muted commentary is a concern. Air India is becoming a serious player and they're getting their act together. And, aviation is very tough it's a super tanker type model. So, it's very difficult to get out of the way. And I think that any institutional shareholder of Interglobe is having thoughts, given that, Air India's, you can only go down from the top. They had more than 50% share and they're losing it. So I think and Air India is going to be definitely up there. So it's going to be an interesting space. Maybe Air India will get listed soon. So that'll be fun too.
Yeah, very quick view on what you made of what's happening in the consumption story in India. Early this year, we were all betting on a rural pickup, but no one was talking about an urban slowdown. Now, the rural part of demand has picked up. Urban, unfortunately, is slowing down. Raw material prices are on the up move. Inflation is a worry. How do you play the consumption theme in India?
Well, I think you have to go back to the basics and buy the big guys again, and buy something like a D-Mart, even though it looks expensive. I think that that should be looked at because, at the end of it all, people are coming to shop in the rural areas, and I think, and the urban areas, and D-Mart's one of the places where they go. Again, Jio will be a player later, and God knows if any others are going to get involved. But certainly, those two are the big players for now.
Okay. Poonawalla FinCorp feeling the pain, Phoenix Mills on its numbers feeling the pain, Credit Access, Grameen, IDFC First, Interglobe. Interglobe is of course the big loser of the day. What's working? Bandhan Bank, Yes Bank, CDSL. Aditya, are you tracking CDSL? And were you enthused with the numbers? Is the capital play at least one safe pocket for some time?
So yes, Tamanna, it's our portfolio stock. CDSL has taken a march on NSDL and they continue to do extremely well. The results were exceptionally really very good as expected. However, the stock price has rallied and the stock price is really very expensive at this stage. Remember, we are in a bull market and we have not seen a meaningful correction to test how the retail investors will really start to play out. A meaningful correction of about 1-2 years or a deep correction of about 20-30% very quickly will then start to test the resilience of retail investors that we've been seeing over the last 2 to 3 years. No meaningful correction has really happened to test them. So my perspective is a great company. However, valuations are extremely expensive. No new positions should be taken here. If you have the stock, you should continue to ride the momentum, but it will, to my opinion, it will also be a cyclical play where downturns will come in when the stock markets start to correct.
Sony, anything that's you've spotted in the last 10-12 minutes of opening? HPCL also seeing a wild swing this morning, probably on back of lower crude prices in early trade. Apart from that, you've also got asset management companies that are looking good. So UTI Asset Management is up and about, up 7.5-8%. The other asset management companies trying to play catch up. Anything in the OMC place or asset management universe?
I think OMC, overall, although if we talked about HPCL, I think there's very strong resistance around 400. The stock has become a sell on rise. So, if it's not able to sustain above those levels, any move towards 400 becomes a good sell on rise. And, only above that level, you can see some amount of short covering. So would like to avoid the entire OMC space. The structure is quite neutral for the day. I think the similar for the AMC spaces also as well. So, but talking about just one particular stock, HDFC AMC, which has given a break below 50 EMA today morning, and the stock continues to remain weak below 4,400. So it's a good sell, keeping a stop loss of 4,400 and a positional target of 4,200 can definitely be seen
today.
Okay, last top call, Kush. Anything that is looking exciting?
Deepak Fertilizers, extremely exciting in a market like this, at least, because the 1135 resistance taken out quite handsomely, pretty decent volumes on the back of, or rather, for the early minutes of trade. This is one stock that can be considered on the long side. Now 1135, the support zone will start acting as your stop loss, and 1200 and higher levels will start acting as target. So Deepak Fertilizer is one more stock that is standing out in a market like this.
Fertilizers is a standout as per Kush, but
just one quickly, Tamna, just look at Yes Bank. I don't know what's going on. I mean, of course, its earnings, the stock was up 3% only a few minutes ago, 10% higher now on Yes Bank. 10% on Yes Bank. So I think this is another outlier in terms of the response. Sony, very quickly, 1 minute to go. Buy Yes Bank at 21.28.
So definitely an avoid, Samina, in the stock, although one can see it crossing the 20 EMA today. If it's able to close above 21.2, then it becomes a buy. From this level, you can see it heading towards 23. But a close below the 21.2 is going to be very crucial. So one can just wait and watch for the day and see how it closes.
It's at a crucial technical level, but looking very good as we see the second biggest gainer on the Nifty 500, followed by Archean, of course, up 12%, Yes Bank up 10%. Well, it's the thick of the earnings season, and we are part of all the action that's happening. We caught up with the joint MD and CEO of JSW Steel, Jayant Acharya, to talk about their second quarter results, which was impacted due to the pressure of lower steel prices.
Quarter 2 was a challenging quarter. As you said rightly, the international prices were weaker, and that resulted into domestic prices also reflecting the same. we were able to manage that through offsetting through costs, and that by and large gave us a similar EBITDA to what we had for the quarter one as well. The Indian operations did quite well. I think the Indian operation, the production was the highest ever, the domestic sales was the highest ever. The EBITDA was actually a little better for Indian operations than the quarter one. Our international overseas subsidiaries had their challenges with respect to the pricing environment, as well as a shutdown which was there in Ohio for a maintenance. But I think on the exceptional item which you asked, this is with relation to a mine in Orissa, which is the Jajang iron ore mine, which we decided to surrender because it was becoming uneconomical to use this low grade which is left in the mine. And that is why we decided to surrender that. And we have taken a provision to that extent in our books in quarter one.
Got it. And what will be the implications of the closure of the said iron ore mine?
It will be positive. Basically, because this particular mine was of a very low grade, which was not economically viable to use, because the specifications did not result in a cost advantage. So therefore, we decided to surrender it. We have other mines which are able to provide a better quality, which is required by us. So therefore, surrendering this mine won't have a negative impact. Actually, it will have a positive impact because the quality of the alternate material will be better.
EBITDA and realizations per ton have also taken a hit. What's the outlook on pricing for the rest of the financial year?
So, in China basically has been a key player in the international market, as you're aware. China exports have increased by about 20% plus in the first 9 months. However, the China stimulus announcement has been positive. That has been taken well by the market at large. Not only the stock market, but I think the commodity markets also reacted positively to it. Steel prices also reflected an improvement. We saw a similar improvement in India. The prices in the month of October went up after bottoming out in September. H2 being a seasonally stronger half, we expect that the pricing environment will be better. We see from a cost positioning point of view, our coking coal costs are going down. Last quarter, our coking coal cost went down by about $27. We expect in this coming quarter also the coking coal cost to go down by $20 to $25. It's through one is the international prices went down, and the other one is that we changed our blend and sourcing to make it more sustainable. So therefore, we are benefiting on the cost. We expect slightly improved prices. We have increased the prices by about 1,000 to 2,000 rupees in the month of October on different products. So we expect that to sustain on a seasonally strong quarters ahead.
And if you could give maybe a range that you see EBITDA per ton stabilizing at?
I would not like to comment on an EBITDA per ton or on EBITDA spread specifically, but let me put it this way that we have new capacities which are coming on stream. JVML blast furnace has been commissioned. The SMS is under commissioning. We have seen the BPSL capacities getting completed. So in the second half, our volumes will be much higher. Therefore, our guidance of sales and production, whatever we have given, we stand by that. So increase in volume will result in increase in absolute EBITDA, and that will improve the overall profitability of the company. It will be difficult to comment on the spread at this point of time.
Let's now talk about demand. Now, in terms of customer-wise segment demand, what's working? Has there been any impact in the recent slowdown in the auto segment?
Well, as a matter of fact, our sales to automotive went up. We actually had, in H1, we had the highest ever automotive sales. There are different reasons for it. But so, first of all, just to reflect back on the demand last half, the India demand first grew by 13.5%, which was a very good growth, in spite of the fact that we had elections and a monsoon disruption in between. The automotive sector has seen some impact with respect to the growth, as you rightly said. But because of various approvals, because the auto typically takes time to approve a particular steel product. So therefore, from a penetration point of view, I think we had a good sale. We see infrastructure capex picking up in the second half of this year. That will drive steel demand. We also see a better monsoon resulting into better rural recovery. We have already seen two-wheelers going up, appliances going up. The third piece is the energy transition. We are seeing more demand coming in from solar and wind, which we are ourselves also adding in capacity. to turn to more of green, let's say, and reduce our emissions. So the demand on the energy sector is also going up. Overall, I think we are quite positive for the second half. Increased volume from our side will help meet the demand, and I think that will improve the general EBITDA for the company as well.
Export sales is also something that was significantly impacted with a 43% drop. Could you maybe give us some understanding into the current difference between Chinese and Indian steel prices, and how could this shape up going forward?
So in quarter two, yes, the international prices, specifically from China and FTA countries, zero duty impacted us. We have seen an increase in international prices after the China stimulus. So we are, I think we are seeing a situation where probably international prices from China and domestic prices are near parity. I think we will see some moderation in the winter months from China. Their production has already moderated in the month of August and September to about 78 million tons. Hopefully that will result into lower exports out of China, but that's a hope. We'll see how time goes. But I think on a pricing environment, because most of the steel makers have narrow margins, my sense is that the pricing has bottomed out and will improve. We have seen that in India as well, where prices in October have improved. And that should be positive in a seasonally strong quarters, which we see ahead.
The company's also lowered its FY25 capex to around 16,000 to 70,000 crores. Why was this revision made, and why has the BF3 expansion been rescheduled to next year?
Yeah, so specifically on the capex, we had planned about 20,000 crores. You're right, we have recalibrated a bit to 16 to 17,000 crore, primarily on account of two reasons. One, the slurry pipeline project we are transferring to JSW Infra at arm's length pricing, and that would give us a reduced capex because that would be now spent by the infrastructure company. And the BF3, where we have postponed the modification, that also releases some capex in this financial year. That's why these are two main reasons why the capex has been recalibrated. None of the critical projects have been impacted. However, if I look at why the BF3 we had to reschedule, that is primarily because the JBML blast furnace got delayed and the commissioning has just happened. The ramp up will happen in Q4. So after the ramp up is stabilized, we will take the shutdown of the BF3 after April. So that's the reason for the change, nothing else. And that has also caused recalibration of the capex.
Got it, Mr. Acharya. Q2 also saw a 6% quarter-on-quarter increase in debt to over 85,000 crore rupees. Why was this uptick there, and what levels could debt remain in FY25 end?
So, debt uptick, as I said, we have spent about 7,850 crores of capex. We had a tough H1 from international perspective. So one was the capex. The second one was investments in a coking coal mine, which we have done. So we have done an investment in Illawarra coking coal mine. We spent $120 million on that to have a 20% look-through interest. And the third reason was that working capital basically has increased, primarily on account of some inventories which have got increased on lower exports. Also, new inventories for the upcoming capacities which are coming on stream. As we go into the year, we will be releasing some of these working capital. Increase in EBITDA from additional volumes will help us deleverage as well. So those should improve the debt positioning, and we expect the debt in absolute terms to go down as we end the financial year.
The company has also recently announced the acquisition of the ThyssenKrupp Electric Steel India company. How will this be funded, and what was the rationale behind this venture?
So ThyssenKrupp Electrical Steel is a joint venture between JSW Steel and JFE. Both together have acquired the asset. This is a CRGO asset, which is primarily a product which is imported in the country. This goes for transformers and generators, where the country's demand is really going up fast. Overall, actually, the world demand is going up fast. And we are integrating this to make, for the first time, right from iron ore to CRGO in India. We have also acquired the technology in this process, and that's a very good positive for the technology has been acquired by JSW Steel. So we will now have the technology for CRGO in India. This product is a high advanced technology product, which very few in the world have. This will provide us much higher EBITDA numbers in terms of because the price of the product is far better. So therefore,
well, that's JSW Steel, and the stock has flattened out completely after starting off lower. But I'll tell you what, the index too and the Nifty should come up on your screen in a moment, because this JSW, but the Nifty should come up on your screen. Look at that, flattened out completely after starting off well. Wonder what ICICI Bank is doing, and I wonder if that is probably one reason, because that was giving that strength. That is still up 2.5%. So maybe the quantum of losses or the losers have gone up. If you can just get the point contributors on your screen in a moment, because I know ICICI Bank is doing on the other side what the best thing, but it is probably the others which are contributing to the downside, which is leading the markets to do what it is doing. L&T, ahead of its numbers, is looking very, very wobbly. Okay, a quick mention here from Sirma SGS as well, because the numbers came out mixed but had some positives, and as a result of which it's 7.5% higher is Sirma SGS. We spoke to the management, hear out Mr. J.S. Gujral, what he had to say for the quarter gone by.
This quarter has been good for us. And as I had alluded to in my commentary on the first quarter, we service various verticals, and each vertical has its own margin profile. So if in a particular quarter, a vertical with a low margin profile constitutes a higher percentage, the EBITDA margins take a hit. Last quarter, my consumer business was 54% of the total business. We were estimating annualized basis about 39-40%. This quarter, my other businesses in automotive, healthcare, exports have picked up, and consumer business is only 1/3 of the revenue. And we believe this trend for the next 6 months would continue, and we are on line of achieving our top line growth of about 40-45%. With the guided EBITDA of about 7% plus. So that's the thing. For example, in this quarter, my exports constituted 23% of my revenue. For the half year, they are 19%. So the first quarter, the exports were also subdued. The recovery in exports is visible. We are confident that going forward in the next 6 months, we would be able to maintain the trajectory of our growth and profits to deliver what we had guided the street.
Okay, and a quick programming reminder, NDTV Profit is kicking off its Diwali special programming today with Cracker Stocks. It's a conversation with Deven Choksi, Amisha Vora and Vijay Chopra on what are the top stocks you should look at this Diwali season. We have an exciting lineup, Neerajan. As much as the market's mood is flailing, the fact is that it is a time to celebrate the gains we have made since the year or so, as far as the markets are concerned. It's been fantastic. So a little bit of a profit booking kind of a scenario is perhaps just what the doctor ordered.
Yeah, or celebrate the fact that anybody who hasn't been able to get in gets better prices to get in.
Is that what we are seeing with some of the BFSI pack? Rahul Malani, DVP Fundamentals Research at Sharekhan BNP Paribas, joins us now to talk all things banking. Rahul, great to have you on, and thank you so much for joining us. As you know, we're celebrating this festive season, but we're also talking about what we've seen in the banking pack. Let's start with some of the winners. ICICI Bank, Shriram Finance and Bandhan, if I had to pick three. Numbers which are giving some comfort?
So firstly, good morning and season's greeting to all of you. So basically, if we look at the results of ICICI Bank, it has continuously outperformed the peers on most of the metrics. In terms of asset quality also, if we look at the net slippages have been around 50 basis points annualized, which is even better than HDFC Bank, which is the leader in terms of maintaining the asset quality. So apart from that, deposit growth is also healthy. Loan growth continues to remain healthy. ROA compression, which was expected around in FY25, around 10 to 15 basis points, versus the now it is estimated that ROA will remain stable for ICICI Bank apart from other lenders, which will be seeing compression of around 10 to 20 basis points in the ROI. So, given the current valuation premium, which is trading to, which is versus the peers, it is likely to sustain, and more sustained earning progression will help to give further re-rating to the stock, given the sector is going through the various headwinds and challenges, and ICICI Bank continues to remain standing tall in all these things.
Okay. So, sure, ICICI Bank is probably better even than some of the others, Rahul. But the question is, do you reckon that over the course of the next 2 or 3 quarters, until things change, the street and you may want to give a premium multiple to the ICICI banks and the HDFC banks vis-a-vis the others?
See, yeah, you because in the near term there is no re-rating trigger for the whole BFSI sector in terms of profitability or return ratios. So basically, the top leaders, HDFC Bank and ICICI Bank, will continue to fetch higher multiples and higher flows into it, because other banks will be struggling on the asset quality front, because unsecured continues to be around 10 to 20% of the overall total loan mix, which will lead to higher slippages and at least higher credit costs, at least from in the next 2 to 3 quarters. So the outlook remains negative on the profitability as well as the return ratios.
I'm sorry, Rahul. I'm sorry. Rahul, sorry, were you finishing your point?
So basically, apart from the HDFC Bank and ICICI Bank, if we kept set aside these both banks in the sector, overall profitability and return ratios outlook remains negative, at least for the near term 2 to 3 quarters for the rest of the banks.
I just, there was a lot of commentary since morning, Rahul, and I wanted your take on this, on how the smaller lenders are going to start feeling the heat when it comes to the quality of assets in microfinancing. Which do you think are the most vulnerable? So, for example, we've seen IndusInd Bank already being hit and IDFC. Do you think these are going to be some of the vulnerable ones, or Credit Access Grameen perhaps?
See, already if you look at the price damage has been made in all these stocks. So basically, it's a matter of time. The current expectation is that the pain will be continued for at least 2 to 3 quarters. So we believe that they will continue to underperform in the next 2 to 3 quarters as of now. But already price damage has happened, so we do not feel that there would be much downside from the current levels. But overall outperformance will not be there in the next 2 to 3 quarters per se.
Okay. Just one more question. IDFC First Bank is due to speak to us in a moment, Rahul. Any thoughts on that one? Would you be a buyer? Would you avoid it? Any thoughts here?
See, IDFC First Bank is not in our coverage. So
let's leave it out. Okay, fair call. In which case, anything, Rahul, very quickly, anything within the NBFC or the banking universe which was a shocker, which you will not buy even if the prices come down until things change fundamentally?
See, as of now, the cautious stance have been maintained on the MFI, NBFC's MFI. Other than that, we will be watching out for the trends where the NBFCs like Punawala, FinCorp and other NBFCs which have unsecured personal loans, higher exposure to this, will see underperformance, while the vehicle financiers specifically will continue to perform well in at least from the near term to medium term perspective, because all these things because overall the outlook continues to remain robust, at least from the profitability or return ratios perspective, at least from the next 1 to 2 years.
Okay, Rahul, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. That's the view from Sher Khan on the banking space, and clearly a bit of a void on MFIs. That seems to be the consensus. Anybody having exposure to unsecured personal loans is an avoid, simple because of the nature of the commentary that has come in around some of these lenders, if you will. Now, IDFC First Bank is in focus as well. Vivek Dhanathan, Managing Director and CEO of IDFC First Bank. It posted second quarter earnings. Asset quality took a hit, unfortunately. Let's hear him in conversation with my colleague.
So this was a bit of a freak incident that happened because the concerned state government made toll free. So our client for entry and exit out of Mumbai, and our client got stuck in the midst of this. It's a force majeure incident that happened. By the way, this client, our exposure was 1,100 crores when we started maybe 5 years ago at the time of merger. This was an account coming from pre-merger times. It came down to 500 crore, or 480 crore. But it was still paying. But now, because of this incident, we know they can't service the account now. And we never know when the state government is going to settle this issue with the client, etc. So we didn't want to be hostage for the future profitability of the future quarters. So we took it all upfront. We've taken 100% provision for that account. And that took the profit down by 250 crores this quarter.
What about the microfinance portfolio? So there, multiple banks have come out, banks as well as NBFCs have come out and said that there's been some slowdown, especially in the eastern part of the country, districts showing some amount of delinquencies coming in, largely led by election-related movement. If you can just throw some light as to what your portfolio is looking like.
So we too have an exposure to microfinance. It's a very important part of the priority sector book of the bank. It meets multiple kind of priority sector, weaker section priority sector, small marginal farmer, and so on. So it's an important sector for the bank, and we have been doing this business for 7 years. But of late, there is a stress in that sector for the last maybe year or so, but accentuated recently. It came from heat wave, it came from floods in Tamil Nadu, it came from elections, some promises of waiver, etc. So confluence of many things came together, a bit of over leveraging and so on. So we saw that last 3 quarters at a stretch, our pre-NPA stage, that is SMA 1 and SMA 2, that has been inching up very sharply. It was like 1.27, now it already touched 2.5 within 2 quarters. So we are like this only. We always take our issue directly. We don't find cute solutions around those matters. So what we did was that normally at 90 days past due, our bank takes 75% provisions, even normally. And at 120 days past due, we take 100%. This quarter, because seeing the stress in the sector, we've advanced that number and we have taken close to 100% provision or 99% provision at the 30 days past due itself. So we just accelerated it so that we just want to recognize the true stress in that sector.
Ahead then, from your road account, of course, there's unlikely to be any stress because of the 100% provision. But from microfinance, is there anything further that you're expecting?
Whatever flows subsequently happens from now on, it'll come. But because we already recognize this issue early on, our flows into a delinquent bucket should be relatively lesser from now on.
Right.
I also want to quarter, you should see some improvement.
Sure.
Yeah, sorry.
Sure. I also wanted to touch on the credit card book. At this point in time, you are not seeing an elevation in your delinquencies. It's stuck at about 1.4% on the 90 DPD. The industry started seeing that sort of rise in delinquencies. Are you looking at cutting down exposure there on the credit card portfolio?
See, it's very important to understand how a credit card sector is built, and I'm actually happy you asked this question so that I can explain to everybody. In the credit card segment, as you can see from numbers, we have put out the civil TransUnion data about what 30 DPD, 90 DPD delinquency is. We put out our data, and we're significantly lesser in terms of NPA, 30 DPD and 90 days past due compared to the industry. Now, there should be reason for this, for this to behave well. The key reason is that we are lending our credit cards largely to our own customers who are on the savings account side.
Okay.
And our bank is on the savings account side attracting slightly higher end customers. Our average balances are much higher. So since the profile of the customer on the liability side is a slightly higher income profile, and we give credit cards to them, by definition, therefore, that our portfolio is behaving well. We don't intend to change the strategy. We'll keep growing, but we'll be very cautious because we're seeing the numbers of the other players. We will check and double check our practices, our underwriting once again.
Would you say that this applies for a broader unsecured space as well? Are you turning cautious as far as that is concerned?
Of course, we are very cautious because we got very cautious. We are always cautious, but about a year and a half ago, we became cautious on this segment because the regulators started talking about it again and again. So we went and tightened all our criteria, and we're happy we did that. Today, our unsecured book is 15% of our book on the retail unsecured. And the the retail unsecured plus consumer durables plus education loans, which is a specific end use financing, which is also unsecured. That segment put together, our gross NPA is 2.03% and our net NPA is 0.5% only.
Okay.
So we have our SMA, the leading book towards unsecured, is also only about 1.09%.
All right, so that was IDFC First. Let's just pull up that stock. One of the losers of the morning for sure. IDFC First profits have come down nearly 70%, but that's because of higher provisioning. It's actually come off its lows of the day, about 4% down, but definitely off the lows of its day. We'll take a very short break, but before we head into that break, the stage is set for Maharashtra elections on November 20th, and speaking at the NDTV Marathi conclave, Maharashtra's Zahirnama, Devendra Fadnavis, the Deputy Chief Minister, emphasized that exit polls reveal valuable insights into the accuracy of electoral predictions. Listen in.
लोग स्टैटिस्टिकल मॉडल तैयार करते हैं. मैं सेफोलॉजी के खिलाफ नहीं हूँ, और सेफोलॉजी एक साइंस है. इस साइंस में जो आप स्टैटिस्टिकल मॉडल तैयार करते हो उसके आधार पर आप प्रेडिक्शन करते हो. लेकिन कई बार जिस समय एक टाइट चुनाव होता है या जिस समय चुनाव में एक अंडरलाइंग मुद्दे होते हैं, ऐसे समय ये स्टैटिस्टिकल मॉडल फेल हो जाता है. तो ऐसा कई चुनाव में हुआ. कई बार ये यशस्वी भी होता है जब एकदम अंडर करंट होता है. ऐसे समय ये स्टैटिस्टिकल मॉडल ठीक भी होता है. लेकिन मुझे ऐसा लगता है कि हरियाणा के कारण सभी लोग असमंजस में पड़ गए कि भाई ये एग्जिट पोल करना है या नहीं करना है. मैं ऐसा मानता हूँ ये इमर्जिंग साइंस है, इसलिए करते रहना चाहिए.
The festival of joy has arrived and the property market is back on track. From Delhi NCR to Mumbai, Lucknow to Chennai, there are countless options for new homes. Are you ready? NDTV Real Estate Conclave, 28th October, only on NDTV.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens.
as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity.
let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home
Thanks so much for tuning into Talking Point and a full house today, talking about the big listing and then talking about a special show. But Waaree Renewables and Waaree Energies should be something that you should keep in mind because the listing promises to be a good one, Tamanna and Samina.
Yeah, and I think we're getting those first rates up. Let's get those pictures in also for Waaree. Definitely 68% up on its debut. Deepak Builders has not been that great, not a mainline IPO in that sense, but Waaree has completely taken it away at a time when IPOs have not necessarily been faring too well. Well, at least a good morning for Waaree.
No, it's fantastic. I think it's slightly not as good or below what the grey market premium was. The expectation was at some stage that the counter would list with a 12 to 1400 premium. 927, I don't think the founders are complaining. It's a significant one. It's a big one. Anchor investors that have come in are also very marquee locally and globally as well. This compares to Premier Energies. That's the other big one that listed recently in the same business, but far more stretched in terms of valuations. Deepak Builders, I'm sort of disappointed because the grey market premium on that one too was indicating to a start with a gap up of nearly 20%. It's actually opened 10% lower. Remember, Deepak Builders was oversubscribed by 46 times. Waaree, on the other hand, was subscribed 76 times. One of the most, rather the largest oversubscription that we've seen in the last few months. So this is a big one. It's settling down as we see it. 2300 or 23.6 is what we have on Waaree Energies. But I think on to a more exciting conversation, or equally exciting conversation, I may say.
Well, yep. So viewers, thanks for tuning into this edition of Talking Point, and let's just set the stage. There is a bearish mood in the market, and some of the reasons why this could be the case: weak Q2 results, the GDP outlook seems to have come off, and a lot of private economists or private sector economists have actually spoken about how Q3 might be weak as well. There are concerns over valuations, and they always continue. So one reason is the GDP outlook lowered. Let's move on to the other reasons as well. Consumption concerns have mounted, and that has always been something that is people are now starting to talk about after Q2 results. And last but not the least, the rate cut uncertainty in the US. I think that is probably the big one. And let's get in our guest to talk about the same. Rajiv Batra of JP Morgan with us to talk about his thoughts on what's currently happening. Rajiv, great having you and to you and yours out there in Singapore. A very happy Diwali and a prosperous new year. Good talking to you today.
Thanks, Neeraj. Happy Diwali to yourself, your viewers too.
Thank you, Rajiv. Now, Rajiv, I remember a conversation that we had at your investor conference wherein you had mentioned that things may wobble a bit in October, but they may change for the better post-October. I would love to understand, does the theory still hold, or does a possible reflationary trade because of a possible Trump victory change that outlook a little bit?
No, all the points which you have just mentioned a few minutes back, this is what we were alluding to when we came out with our report back in August and September, that this is the period in October and November where we will revisit. Markets will take a breather, some consolidation will there. And most importantly, you will be seeing a furious rotation at a sectoral level where you will not have any clue whether we are moving defensive or cyclicals or large cap or mid cap. That's the phase we are in right now. But the good part is a sizable amount of a correction is over, and maybe a 5% down the line from here will get India back to the trend valuation which most of the foreign investors and long-term investors are eagerly waiting for. At the same point of time, whether it will be a red sweep or a blue sweep, neither of them in the sweep scenario have talked about a fiscal consolidation. They are still talking about a fiscal support, which will be positive for the risky asset classes, global equities overall. That's a different point, who will outperform and who will underperform. But just jog your memory back to 2017. Once the 2016 election was over, we saw 35% return in EM equities and close to 20 to 22% return in DM equities. So people who are extremely bearish on the markets or even on India needs to be a bit cautious from here on, taking that kind of an opinion and sentiment for 6 to 12 months basis.
Interesting. So Rajiv, sorry, am I getting this straight that you say that at these mean valuations, assuming there is a 2-3% further correction, would you be a buyer? Part one is that. Part two, flows, Rajiv, is the big thing, right? Over 1 lakh crore of outflows in October. Now, do you believe that can reverse in November? Because I remembered back then in September, you were talking about a possibility of large global funds moving into emerging markets like India. Can you talk a bit about that? Flows.
Yeah, and after a chat, we saw what happened in a day or two. China unleashed one of the biggest stimulus packet and support to the market. So that's where the first installment of outflows happened in India, where not only foreign investors started neutralizing their overweight on India and going to making China a marginal underweight or a neutral territory, but even the domestic investors in India were subscribing more to China-based fund in the first week of October. So that was the first jolt India received. After that, to put entirely blame on that money is rotating from India to China is absolutely a wrong notion, because we have seen money have been going back to the US or precious metal like gold, silver, even some places cryptos too. So the US election uncertainty and most importantly, the stronger data points started coming back into the US market that made people shift towards dollar asset class, and hence India, which was one of the well-owned market along with some few other markets in EM by foreign investors, that gone into a profit booking kind of a mode overall. Now, can money make a comeback over here? My answer is absolutely yes. Remember, nobody was giving a chance of India getting FI flows while we were going into the Indian elections in June. But what we saw after the election result, from June early start onward till almost till September end, India received $16.5 billion inflow in matter of 3 to 4 months. So once the risk of sentiment goes away, markets get the clarity who is the US president, who controls the US Congress. We get the clarity from Fed to what kind of a cycle or a path they are adopting to. I think the normal service will resume in market. For now, coming up from a very high level with kind of a returns which India along with other markets like Taiwan, Malaysia, even with US equities they have generated, there is an expectation of some kind of a breather and consolidation in market happening, and we are exactly right now in that situation. Does the long-term path change for India? Absolutely no. We continue to maintain our structural overweight on Indian equity market.
Rajiv, hi, good morning. Tamanna here. The tough bit right now is to quantify when does this long-term structural overweight outlook kick back in? When does this period of uncertainty end? Do you think that the rebalancing that you talked about in favor of China is at the fag end of its process, or there's more pain to go?
So first answering on China. So in case of China, the process is still on. As we are talking, they will be going into the policy making meeting next week, and there are a few more meetings to come in December. China definitely is trying their level best to come out of the problem which they are facing in equity markets, in terms of a higher debt level or in terms of a real estate markets too. So they will try to, they do their level best to generate a higher growth and resolve this issue. JP Morgan has revised this current quarter GDP growth in China higher to 6.9% quarter on quarter basis, and even for the first quarter next year we are calling for 5% growth. But beyond this near term jump in growth, we still believe headwinds persist in China, and that is the reason why our advice to investors have been to be neutral on China, which means they will keep on looking for a sustainable growth places or countries which can offer them earnings visibility and clarity, not from 1 or 2 quarter perspective, but at least for 3 to 5 years perspective. That's where India sits. Now, what can give back that confidence to investors that India is on that path? We definitely need to see high frequency indicators start moving up. Recently, we saw a 40-month low GST print, a kind of a year and a half low PMI prints over there. So that data points came down in terms of heavy monsoon season which we have, which impacted demand, and then lower spending from government due to elections and then monsoons. But all these factors are going to change, where we do see government spending expected to pick up in the second half of this fiscal year. The cyclicality of rural consumption have not been clicked in yet. That will also start with ongoing festive season plus marriage season that will become. And last but not the least, the base effect. Remember, now your first half base effect is quite low. So even if you perform little bit higher over there, the amount of jumps in the growth in Q on Q basis in third quarter, in fourth quarter will be way significantly higher. So I will again caution, you have seen the negativity in first quarter, second quarter, but don't extrapolate it to the second half of this fiscal year, because we do anticipate second half of this fiscal year, growth will kick back along with some support from private capex too.
Hi, it's also Samina joining in. Domestic investors have a home bias. So what should long-term investors do? While nobody argues, or there is a clear consensus that we are in a structural bull run, intimate volatilities are very difficult to stomach if you're a long-term investor, right? So what should the strategy be? Buy more into this weakness? If yes, what do you buy? Do you buy banks? Do you buy consumption? Do you buy IT? I mean, the universe is large, though restricted and limited for most investors to India.
Thanks, Amina. I will say that the Indian equity investors are quite smarter, the domestic investor, because we have seen they only follow one factor of investing into the market, and that is earnings and earnings momentum. So there are spaces where there's a structural kind of a support in terms of an earnings and growth. So power is one such ecosystem and theme that will keep on doing well for multi years overall. Similarly, on the healthcare side also. But on the other spaces, as you mentioned, be it financials or consumption, there will be some cyclicality clicking in. Right now, we have seen a cyclicality clicking in for consumption also. We had very good second quarter in terms of performances, or even early third quarter also for consumer staple sector. But as earnings kicked in, consumer staple sectors and defensive started going down overall. But does it mean that theme is over? That theme does not have leg? When we look at the macro indicators, the GDP per capita, or when we look at wages or rising in incomes overall, that still remains supportive as a theme. So the only lens we should apply on is earnings, and taking that into account, there are some structural themes and there are some cyclical themes. Beside power and healthcare, I will say even the capital market intermediaries, because even today, the household balance sheet is not fully exposed towards equity and equity-linked investment. So capital market intermediaries will do well. And then based on the cyclicalities of earnings, the tailwinds are behind your IT sector. There is some tailwinds behind even your industrial spaces or cement spaces overall. So that's what the gods people will need to do in. And I will say that if one needs to invest in the market, it has to be in a regular, healthy SIP, or you can say in investment monthly or a daily or a weekly kind of a mode, so that that healthy practice remain. Because India's GDP growth is expected to remain above potential, at least in a relative term compared to the other EM markets, other Asian markets, which means the risky asset class in India will keep on doing well relative to their global EM or a DM counterparts.
Just, you talked about where the tailwinds are, but in the context of the quarterly numbers as well, where do you see the largest pain points or any areas of concern?
So I'll say too early to say on earnings right now, because so far this mid cap has not even started. We have large cap largely in, and most of them were IT spaces who have given the earnings. So definitely revenue, if we look at X financial, is still disappointing. YOY basis, it's almost flatlined over there. And in line with the expectation, earnings, that is bottom line on a YOY basis, are only X financials 2% up, but disappointed based on the JP Morgan forecast, which was plus 3%. That's the ongoing run rate. We will see how the earnings progress overall. But the top line disappointment coming is a concern. And we hope that it's an aberration just for first half of this year, and things start improving in the second half on the top line side, because margins will be difficult to defend if you don't have a much support from factors of production, particularly from input prices. So hence, this is the reason why I'll say top line for slowing down is more a concern for me in this ongoing earnings season.
All right, thank you so much, Rajiv, for speaking with us today. Rajiv Batra there saying that tailwinds still exist for quite a few sectors, and the long-term story on India continues to be positive. In the short term, though, we are feeling the pain. And Manav Chopra now with us. He's Director Technical Analyst, Nuvama Institutional, in our studios. Manav, great to have you here.
Thank you.
You know, and even as we're kicking off the festive season, it's not looking too festive out there.
True.
More pain in store.
Yes, I think, looking at the overall structure of the markets, we are in an intermediate correction of a larger bull phase. So there is, the short-term correction is what the markets have been used to overall. You see a quick 4-5% kind of a dip and market makes new highs. But, this time around, my sense is that we have already made an intermediate top. I think to our previous discussions, we were calling for some bit of an exhaustion in the mid cap. Which has seen a reasonable amount of decline. Absence of any leadership in the frontline names, take most of the sectors. I don't see any of the sectors forming new highs in times to come. Barring few sectors like IT or maybe select names from financials. But largely the sector construct has really been dampened in last few weeks along with the broader markets. So, you might see an odd trading bounce. The short-term sentiment has come to a near-term oversold levels. You might see an odd trading bounce. But my sense is that the broader construct would be similar to what we witnessed in October in 21-22, where you were grinding, forming a correctives rallies over the period of 3 to 4 months. Similar in the first, initial months of 20 to 23, where you did see a 3 to 4 months kind of a decline. I think this is what the market is going to see over the period of time, and any trading bounce might be led with some short squeeze formation, but largely the construct of the market has been on the intermediate correction zone, and that's my sense you'll be seeing in next few months.
Manav, the last time we spoke, which was maybe a week ago, you talked about a 10-15% correction in the broader markets.
Correct.
The mid-cap space is in a 10% correction. It's officially gone into a correction phase, like they call it, from its recent highs.
Right.
If you do anticipate some more pain, where will the pain come from? And I think just before this correction began, the argument always was, will it be a price correction? Will it be a time correction?
Right.
It seems like we've done a price correction, and now you're saying that there could be a time correction coming away. So give me a sense of what more. I mean, you buy in a correction phase, don't you? Or
yes.
start nibbling in that sense?
We do. So let me just give you a little bit of back end. So we have seen a rally of 6 quarters non-stop in the market, let it be your broader markets or your frontline indices. And I haven't seen historically, even post-COVID, after 6 quarters is when you started getting into a corrective zone. So sentimentally, we were at the highs. And a pullback or a sideways traction with the price correction is going to create a platform for the next bull market. I mean, it's easier said than done now, but how do we navigate this intermediate correction is going to be challenging. If you look at the Nifty Infra Index, which constitutes of your cap good names, some of the cements, your power utilities, they have actually started to crack down. And when we see a sector like that also giving away, it calls for poor market breadth eventually, which will lead for some more laggards. So my sense is with small cap index, which has a very, very strong support at 17,800, 18,000, which has been, which is a neckline of an important head and shoulder pattern. Once that starts to give away, you might see more pain coming in. What is holding the frontline names is your heavyweight names like MCX, BSE, CDSL, Glenmark. In case if any of these capital market names starts to give away some profit booking, the frontline stocks which are holding the small and mid caps, that will create some more pain in the markets going forward. I think it happens on immediate or maybe after a few weeks. I think the time will decide, but we have been quite aggressively telling clients to trim their positions at least in this mid, hide in the low beta. The navigation is going to be difficult, but we'll wait and watch how it goes.
So, Manav, you are not buying anything. What is it that you are comfortable selling after the pain that has already come about?
Sure. So in the recent few weeks, the only sector which is reasonably at near to highs which are seeing fresh breakdowns is your cap good names, let it be your Siemens, ABBs, or even Cummins. This is a space which have started to form the first initial of a lower high. It's not yet breached its recent lows to form its a lower high, lower lows formation. I think the cap good names will start witnessing some more pain, at least, which could last for a few more months. This sector has been in a very, very strong uptrend of 5 years. So possibly a few months or maybe half a year of corrective decline very much there on cards. So this is one space where you will see some pain coming in along with these cement names and power utilities for that matter, has been doing a good amount of rally, which has been the savior in the public sector space, and any fresh breakdowns is definitely a thing that, we are quite cautious about.
Sir, any opportunity at all to buy in the large cap space? Because they've been bearing the brunt despite not witnessing the good times in so many ways, right? So any of the frontline names that you think may be showing early signs of adding. So your Infosys, Wipro, RIL, HUL, I mean, look at what happened to them on Friday.
Absolutely. I think one sectors which we are recommending clients to be in low beta or start nibbling longs, it has been IT for a while, but now the FMCG space have declined close to its 100-day, 200-day average. So we've seen historically in any tough times, FMCG index usually tries to form an early base around the 100-day, 200-day average. I'm not sure about the construct of whether to be aggressively buying HUL, but what we are recommending is names like VBL or names like Britannia. As the segment of FMCG, I think you might not see a V-shaped recovery, but some base formations, at least in these names, is where hiding is there. The insurance names are also kind of likely to be a bellwether in this scenario with some frontline private banks like ICICI. So that's the only space, nothing being very aggressive, because I think for the near term, you might see some better opportunities, at least at lower levels.
ICICI over HDFC and any of those larger NBFCs that you are finding tempting right now?
See, the NBFCs in such markets, where you see some bit of markets getting weakened in the broader space, NBFCs usually gets hit equally. Barring few names, but largely I think NBFC, the structure still remains quite weak. I haven't seen any bit of a recovery. There might be a short squeeze bounce, but not that I'm expecting a good, meaningful buy and hold kind of a scenario coming for the NBFC's name. So when we're looking at the financial Nifty chart in general, it's been quite range bound only because of some private banks holding the guns, but largely if the bank Nifty is in a range of say 5,500 to 52,500, and that has just been the savior from the private banks. So my sense is that the NBFCs would be an avoid, but certain private banks you might just want to have that place to hide in, nothing like a aggressive buy and hold.
Which are those apart from ICICI?
So at the moment it's ICICI and HDFC Bank, which looks fine, but the broader construct even in the other private names are on the weak foot.
What about an HUL, ITC, Tata Consumer? And I ask you this because ITC for the longest time has been called the Rahul Dravid of this market. I think people have changed their mind after what we've seen in the last 10, 12 days. Right. But not accumulating those names because they are defensive and they are supposed to be bought when the markets generally aren't feeling great, right?
I think a lot of rules of the markets have changed. We have seen where people would talk about hiding in a lot of the FMCG, but it's become very, very stock specific within the sector itself. I think the sentiment of the markets in even certain names have changed a lot. I'm not sure about HUL at the current juncture because it has actually violated key supports, but just nibbling into certain ideas in a phased manner is only what we would suggest. But in the pecking order for us, ITC is still an avoid name, and we would still want to be with names like Britannia or VBL for that matter.
What is the Nifty outlook?
Okay, so for a medium-term perspective, I'm not expecting Nifty to go beyond 25,000, 25,200. My sense is that yes, we have declined from the recent peak of 26,500 all the way to 24,000. This is the zone where the short-term sentiments are at the oversold levels. Let it be your breadth, let it be your short-term momentum, or even the sectors. They are at the short-term levels where you might see a short-term trading rally. But in the medium term, I think eventually the market would be grinding on the lower side. My medium term, long term, at least I anticipate that the right or an aggressive levels for the Nifty one to initiate for a medium to long term perspective is still wait, but a possibility of down towards 23,000, 23,200. And that's when we would want to go for more aggressive stance. But I think in times to come, you will be seeing those levels, not on the immediate basis, but in next few months.
And how much more on the Nifty in terms of downside, A? And B, I find it hard to believe that your trading desk is not calling clients right now. What are you calling clients and telling them? Because everyone wants to do something even in a falling market, right? So I know Neeraj asked you what you'd sell, but just build on that a little bit more. What are they doing? What is your team doing is what I want to know. You can't go quiet for sure.
Of course. I mean, that's on the sell side. We have to always be engaging clients. But the perspective is that, managing risk in this scenario is the key important thing. Not taking an aggressive bet is also one of the calls that we've taken recently of, shifting our stance from the high beta names or the mid caps getting into the low beta names. We are evaluating some stocks which are coming at key levels, at least on the sectoral front. That is only the part we are
negotiating. Which ones are those?
So, like I mentioned, it's
Britannia
from the
we've got,
insurance names. We like HDFC, ICICI, PruLife, iBank, and obviously within the IT, it's Tech Mahindra, Infosys is something that we are ready to navigate in this scenario. But given the stance, I think for short-term traders, we are recommending the few sectors which might see some bit of a short squeeze is going to come from the metals and real estate, but not something like we would want to buy and hold at least in the near term.
Well, not doing anything is also doing something. So in that sense, it's worth it. Okay, great. Madam, good talking to you. Thanks so much for taking the time out. Really appreciate your time. And viewers, with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.
The festival of joy has arrived and the property market is back on track. From Delhi NCR to Mumbai, Lucknow to Chennai, there are countless options for new homes. Are you ready? NDTV Real Estate Conclave, 28th October, only on NDTV.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens.
as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth,
wealth,
and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renew. Hello and welcome. You're watching the FNO show, and of course, it seems like the festive week has brought with it some cheer for the bulls. The Nifty is looking okay in kissing distance to 24,400. The breadth of the market also not too bad. 198 points on the index is what we have. Good morning, Agam. It looks okay this morning, but I think in the larger medium-term picture, the bears still in complete control.
Yes, Samina, you're absolutely right, because at the moment, even when you're actually seeing an advance for the benchmark index, there is nothing to suggest that this is here for the long term, that the worst is behind us. Because in terms of pricing, and specifically when it comes to the broader markets, we really haven't seen any encouraging signs. In fact, we're just about seeing flattish movements for a lot of these stocks which have come off significantly from their own respective life highs. And at the moment, even though the benchmark may be indicating an up move, we are seeing very little traction when it comes to your stocks individually on the up move. So there hasn't been a lot of short covering just yet. Can that change over the course of the next few days? Well, you never know. But it's going to be a wait and watch on that one. But when it comes to the futures and options space, again, let's take a look at how things are faring. Coming down to the Nifty futures. That should be up for you on your screen, and that should give you a fair idea about how things are faring. But don't forget that this is the expiry week as well. So we will see an expiration this coming Thursday for the month, and which is why you will see unwinding as well for the Nifty futures for the October month. But moving on, as far as the Bank Nifty is concerned, let's see whether or not there is a little bit of build up in open interest, or is there unwinding in the Bank Nifty too. Let's pull that up and see how things are going on. But I'm just going to take a moment. We have the Prime Minister who's inaugurated the Tata aircraft complex for Made in India. That is a C295 aircraft. Let's cut across.
Economies and almost 4 times the average growth forecast for the Eurozone. So if Indian companies want to grow, believe me, they can trust Spain. In 2026, the first C295 manufactured in India will produce by this plant in Vadodara. This aircraft, it is a symbol of the Spanish and European aeronautical industry. In addition to contributing to modernizing India's defense capabilities, it will also drive technological development, particularly for the state of Gujarat, India's leading manufacturing hub. Thousands of direct and indirect jobs will be created here, and a new generation of highly qualified engineers and technicians will be trained. Many of them are currently studying at university, and they will find in this center a first-class professional horizon when they finish their training. Spain will also fulfill its commitment to technology transfer. This is essential for the creation of an authentic industrial ecosystem in this sector, from the manufacture of the aircraft to its delivery, from the production of parts and their assembly to the performance of all the test and aircraft maintenance tasks throughout its life cycle. Projects of this magnitude have an additional value. There is spillover effects for micro, small and medium-sized companies. In short, the possibility of creating an entire business ecosystem linked to this advanced final assembly line. I know very well what something like this represents. I come from a country where 99% of companies are micro, small and medium enterprises. They play a very valuable role in promoting social and territorial cohesion. This plant perfectly summarizes the excellent state of bilateral relations between Spain and India. This relationship has grown over the last few years. Today we are taking another step forward, a strategic step focused on a key industrial and technological field. The presence of Spanish companies in India and Indian companies in Spain is growing. This growing presence is based on three pillars: a long-term vision, the search for reliable partners, and the commitment to develop industries at the local level to create jobs and wealth across all the territory. I believe that foreign direct investment must be productive and transformative. It must be more than just opening up new markets. It is a commitment to the future of the receiving country, generating local added value and contributing to the extraordinary future that awaits a country like India. Dear Prime Minister, dear friends, more than 7,000 kilometers separate Madrid, the capital of Spain, from New Delhi. But we have long known that this distance can be bridged with will and with talent. In the late 1960s, the talented Paco de Lucia and the great Indian musician Ravi Shankar brought our two countries closer through music. Together, they managed to fuse flamenco and Indian classical music, the Spanish guitar with the spirituality of the sitar. Perhaps they did not know it then, but they were building a bridge between cultures that would open the way to the future, a future that has the face of projects like this. This plant will be a symbol of industrial excellence, an engine of growth, and a testament to the close and growing friendship between Spain and India. Once again, thank you very much, Prime Minister, for your leadership, and to Airbus and Tata and all those who have made this project possible, I wish you every success. Thank you very much.
Thank you so much, His Excellency Mr. Pedro Sanchez, for your valuable address. जिनके मार्गदर्शन, दूरंदेशी नेतृत्व और उत्कृष्ट नीतियों की वजह से भारत हर क्षेत्र में आत्मनिर्भर बन रहा है और आज जिन्होंने भारत को मेड इन इंडिया C295 के लिए टाटा एयरक्राफ्ट कॉम्प्लेक्स की अभूतपूर्व भेंट प्रदान की है, ऐसे हमारे यशस्वी प्रधानमंत्री श्री नरेंद्र मोदी जी को आइए उनके प्रेरणादायक विचारों से हम सबको संबोधित करने के लिए सादर आमंत्रित करें।
Excellency Pedro Sanchez, गुजरात के गवर्नर आचार्य देवव्रत जी, भारत के रक्षा मंत्री श्रीमान राजनाथ सिंह जी, विदेश मंत्री श्रीमान एस जयशंकर जी, यहाँ के लोकप्रिय मुख्यमंत्री श्रीमान भूपेंद्र भाई पटेल, स्पेन और राज्य सरकार के मंत्रीगण, एयरबस और टाटा टीम के सभी साथी, देवी और सज्जनों, नमस्कार। बुएनोस दियास। मेरे मित्र पेड्रो सांचेज जी के उनकी पहली भारत की यात्रा है। आज से हम भारत और स्पेन की पार्टनरशिप को नई दिशा दे रहे हैं। हम C295 ट्रांसपोर्ट एयरक्राफ्ट के प्रोडक्शन की फैक्ट्री का शुभारंभ कर रहे हैं। ये फैक्ट्री भारत स्पेन संबंधों को मजबूती देने के साथ ही मेक इन इंडिया, मेक फॉर द वर्ल्ड इस मिशन को भी सशक्त करने वाली है। मैं एयरबस और टाटा की पूरी टीम को बहुत बहुत शुभकामनाएं देता हूं। कुछ समय पहले ही हमने देश के महान सपूत रतन टाटा जी को खोया है। रतन टाटा जी आज अगर हमारे बीच होते तो शायद सर्वाधिक खुशी उनको मिलती, लेकिन उनकी आत्मा जहां भी होगी वो आज प्रसन्नता का अनुभव करते होंगे। साथियों, C295 एयरक्राफ्ट की फैक्ट्री नए भारत के नए वर्क कल्चर की उसको भी रिफ्लेक्ट करती है। आज किसी भी योजना के आइडिया से लेकर एजुकेशन तक भारत किस स्पीड से काम कर रहा है ये यहां दिखाई देता है। 2 साल पहले अक्टूबर में ही महीने में इस फैक्ट्री का निर्माण शुरू हुआ। आज अक्टूबर महीने में ही ये फैक्ट्री अब एयरक्राफ्ट के प्रोडक्शन के लिए तैयार है। मेरा हमेशा से ये फोकस रहा है कि प्लानिंग और एग्जीक्यूशन में अनावश्यक देरी न हो। जब मैं गुजरात का सीएम था तब यहीं बड़ोदरा में ही बॉम्बार्डियर ट्रेन कोच बनाने के लिए फैक्ट्री लगाने का फैसला हुआ था। इस फैक्ट्री को भी रिकॉर्ड समय के भीतर ही प्रोडक्शन के लिए तैयार किया गया था। आज इस फैक्ट्री में बने मेट्रो कोच हम दूसरे देशों को भी एक्सपोर्ट कर रहे हैं। मुझे पूरा विश्वास है कि भविष्य में इस एयरक्राफ्ट फैक्ट्री में बने विमान दूसरे देशों को भी एक्सपोर्ट किए जाएंगे। फ्रेंड्स, प्रसिद्ध स्पेनिश कवि अंतोनियो मचादो ने लिखा था, ट्रैवलर देयर इज नो पाथ, द पाथ इज मेड बाय वॉकिंग। इसका भाव यही है कि लक्ष्य तक पहुंचने के लिए जैसे ही हम पहला कदम उठाते हैं, रास्ते अपने आप बनते चले जाते हैं। आज आप देखिए, भारत में डिफेंस मैन्युफैक्चरिंग इकोसिस्टम नई ऊंचाइयां छू रहा है। 10 साल पहले अगर हमने ठोस कदम नहीं उठाए होते तो आज इस मंजिल पर पहुंचना असंभव ही था। तब तो कोई ये कल्पना भी नहीं कर पाता था कि भारत में इतने बड़े पैमाने पर डिफेंस मैन्युफैक्चरिंग हो सकती है। उस समय की प्रायोरिटी और पहचान दोनों इंपोर्ट की ही थी। लेकिन हमने नए रास्ते पर चलना तय किया, अपने लिए नए लक्ष्य तय किए और आज इसका नतीजा हम सबकी आंखों के सामने है। साथियों, किसी भी पॉसिबिलिटी को प्रॉस्पेरिटी में बदलने के लिए राइट प्लान और राइट पार्टनरशिप जरूरी है। भारत का डिफेंस सेक्टर का कायाकल्प राइट प्लान और राइट पार्टनरशिप का उदाहरण है। बीते दशक में देश ने ऐसे अनेक फैसले लिए जिससे भारत में एक वाइब्रेंट डिफेंस इंडस्ट्री का विकास हुआ। हमने डिफेंस मैन्युफैक्चरिंग में प्राइवेट सेक्टर की भागीदारी को विस्तार दिया, पब्लिक सेक्टर को एफिशिएंट बनाया, ऑर्डिनेंस फैक्ट्रीज को 7 बड़ी कंपनियों में बदला, डीआरडीओ और एचएएल को सशक्त किया, यूपी और तमिलनाडु में 2 बड़े डिफेंस कॉरिडोर बनाए। ऐसे अनेक निर्णयों ने डिफेंस सेक्टर को नई ऊर्जा से भर दिया। आईडेक्स यानी इनोवेशन फॉर डिफेंस एक्सेलेंस जैसी स्कीमों ने स्टार्टअप्स को गति दी। बीते 5-6 सालों में ही भारत में करीब 1000 नए डिफेंस स्टार्टअप्स बने हैं। बीते 10 वर्षों में भारत का डिफेंस एक्सपोर्ट 30 गुना बढ़ा है। आज हम दुनिया के 100 से अधिक देशों को डिफेंस इक्विपमेंट एक्सपोर्ट कर रहे हैं। साथियों, आज हम भारत में स्किल्स और जॉब क्रिएशन पर बहुत अधिक फोकस कर रहे हैं। एयरबस और टाटा की इस फैक्ट्री से भी भारत में हजारों रोजगार का निर्माण होगा। इस प्रोजेक्ट के कारण एयरक्राफ्ट के 18,000 पार्ट्स की इंडिजीनियस मैन्युफैक्चरिंग होने जा रही है। देश के किसी हिस्से से एक पार्ट मैन्युफैक्चर होगा तो देश के किसी दूसरे हिस्से में दूसरा पार्ट मैन्युफैक्चर होगा। और ये पार्ट बनाएगा कौन? हमारे माइक्रो और स्मॉल इंडस्ट्रीज ये काम करने वाले हैं। हमारे एमएसएमईज इस काम का नेतृत्व करेंगे। हम आज भी दुनिया की बड़ी एयरक्राफ्ट कंपनियों के लिए पार्ट्स के बड़े सप्लायर में से एक है। इस नई एयरक्राफ्ट फैक्ट्री से भारत में नई स्किल्स को, नए उद्योगों को बहुत बल मिलेगा। साथियों, आज के इस कार्यक्रम को मैं ट्रांसपोर्ट एयरक्राफ्ट की मैन्युफैक्चरिंग से आगे बढ़कर के देख रहा हूं। आप सभी ने पिछले 1 दशक में भारत के एविएशन सेक्टर की अनप्रेसिडेंटेड ग्रोथ और ट्रांसफॉर्मेशन को देखा है। हम देश के सैकड़ों छोटे शहरों तक एयर कनेक्टिविटी पहुंचा रहे हैं। हम पहले से ही भारत को एविएशन और एमआरओ डोमेन का हब बनाने के लिए काम कर रहे हैं। ये इकोसिस्टम भविष्य में मेड इन इंडिया सिविल एयरक्राफ्ट का रास्ता भी बनाएगा। आप जानते हैं कि अलग अलग भारतीय एयरलाइंस ने 1200 नए एयरक्राफ्ट खरीदने का ऑर्डर किया है दुनिया को। अब शायद दुनिया की कंपनी किसी और देश का ऑर्डर ही नहीं ले पाएगी। यानी भविष्य में भारत और दुनिया की जरूरतों को पूरा करने के लिए सिविल एयरक्राफ्ट की डिजाइन से लेकर मैन्युफैक्चरिंग तक इस फैक्ट्री की बड़ी भूमिका होने वाली है। साथियों, भारत के इन प्रयासों में बड़ौदा शहर एक कैटलिस्ट की तरह काम करेगा। ये शहर पहले से ही एमएसएमईज का स्ट्रांग सेंटर है। यहां हमारी गतिशक्ति यूनिवर्सिटी भी है। ये यूनिवर्सिटी हमारे अलग अलग सेक्टर के लिए प्रोफेशनल्स तैयार कर रही है। बड़ोदरा में फार्मा सेक्टर, इंजीनियरिंग एंड हैवी मशीनरी, केमिकल्स एंड फार्मास्यूटिकल्स, पावर एंड एनर्जी इक्विपमेंट, ऐसे अनेक सेक्टर से जुड़ी अनेकों कंपनियां बड़ोदरा में है। अब ये पूरा क्षेत्र भारत में एविएशन मैन्युफैक्चरिंग का भी बड़ा हब बनने जा रहा है। और इसके लिए मैं आज गुजरात सरकार को, यहां के मुख्यमंत्री श्रीमान भूपेंद्र भाई को और उनकी पूरी टीम को उनकी आधुनिक औद्योगिक नीतियों के लिए, निर्णयों के लिए बहुत बहुत बधाई देता हूं, उनकी सराहना करता हूं। साथियों, बड़ोदरा में एक और खास बात है। ये भारत का एक महत्वपूर्ण कल्चरल सिटी भी है। ये हमारी सांस्कृतिक नगरी है। इसलिए आज स्पेन के आप सभी साथियों का यहां वेलकम करने में मुझे विशेष खुशी हुई है। भारत और स्पेन के बीच कल्चरल कनेक्ट का अपना महत्व है। मुझे याद है, फादर कार्लोस वेले स्पेन से आकर यहीं गुजरात में बस गए थे। उन्होंने अपने जीवन के 50 वर्ष यहीं बिताए। अपने विचारों और लेखन से हमारी संस्कृति को समृद्ध किया। मुझे उनको कई बार मिलने का सौभाग्य भी मिला। उनके महान योगदान के लिए हमने उनको पद्मश्री से सम्मानित भी किया। अब मैं इतना कह रहा हूं, तब तक किसी के गले नहीं उतरेगा, लेकिन हम लोग गुजरात में उनको फादर वालेस कहते थे और वो गुजराती में लिखते थे। अनेक गुजराती साहित्य की उनकी किताबें समृद्ध हमारा सांस्कृतिक विरासत है। साथियों, मैंने सुना है कि स्पेन में भी योगा बहुत पॉपुलर है। स्पेन के फुटबॉल को भी भारत में बहुत पसंद किया जाता है। अभी कल जो रियल मैड्रिड और बार्सिलोना के बीच मैच हुआ, उसकी चर्चा भारत में भी हुई। बार्सिलोना की शानदार जीत यहां भी डिस्कशन का विषय रही और मैं आपको गारंटी के साथ कह सकता हूं कि दोनों क्लब्स के फैंस में भारत में उतनी ही नोकझोंक भी हुई जितनी स्पेन में होती है। साथियों, फूड, फिल्म्स और फुटबॉल सभी में हमारे रिश्ते स्ट्रांग पीपल टू पीपल कनेक्ट से जुड़े हैं। मुझे खुशी है कि भारत और स्पेन ने साल 2026 को इंडिया स्पेन ईयर ऑफ कल्चर, टूरिज्म एंड एआई के रूप में मनाने का निश्चय किया है। साथियों, भारत और स्पेन की पार्टनरशिप एक ऐसे प्रिज्म की तरह है जो बहुआयामी है, वाइब्रेंट है और एवर इवॉल्विंग है। मुझे विश्वास है कि आज का ये इवेंट भारत और स्पेन के बीच ज्वाइंट कोलैबोरेशन वाले अनेक नए प्रोजेक्ट्स को प्रेरित करेगा। मैं स्पेनिश इंडस्ट्री और इनोवेटर्स को भी आमंत्रित करूंगा कि वो भारत आए और हमारी विकास यात्रा में हमारे साथी बने। एक बार फिर एयरबस और टाटा की टीम को इस प्रोजेक्ट के लिए बहुत बहुत शुभकामनाएं, बहुत बहुत धन्यवाद। थैंक यू।
That's the Prime Minister talking to everyone on the occasion of the inauguration of Tata Aircraft, and of course we'll get you a lot more details with respect to that. But with that, it's as far as the markets are concerned, we're looking at gains coming in, about 1% up move for the Nifty, as well as the Bank Nifty advancing by around 1.3%. It does seem like about a short covering is taking place in some of those key indices, but it's a wait and watch as to how long can this strength play out, or whether or not there is a little bit of selling pressure coming in through here as well. But on that note, it's a wrap on this edition of the FNO show, but lots more lined up on the other end. Stay tuned to NDTV Profit.
The festival of joy has arrived and the property market is back on track. From Delhi NCR to Mumbai, Lucknow to Chennai, there are countless options for new homes. Are you ready? NDTV Real Estate Conclave, 28th October, only on NDTV.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
see the world through a brighter lens as you turn your efforts into profits. Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
See the world through a brighter
Good morning, welcome. You're watching the SMID show here on NDTV Profit. I'm Harsh Saita, with me is Anushi Vakharia, and we both wish you all and your families a very, very happy festive week, Diwali as well as New Year. We hope you have a prosperous one. But let's start off with where the Nifty is, because this week has started well for the Nifty. We've done well, at least as the day has progressed. We're up nearly 1% in trade, and from the lows, we're up almost 150 points. So clear positivity there. What's working? Let's pull up the contributors. ICICI Bank, of course, standing out both in terms of numbers as well as in terms of stock reaction, aiding the Nifty 50. And but outside of that, M&M doing well, 2+% higher. SBI doing well as well, chipping in well, 17 points to the Nifty. And Shriram Finance, again on the back of numbers, doing very, very well. What's not doing well? Far and few, but you've got some meaningful in terms of contributors, just about 30 odd points cumulatively among all negative contributors contributing to the index itself. Let's also look at the breadth of the market. Let's look at the advanced decline and talk a little bit about that. There you go. So we've seen a huge amount of divergence both in the advanced decline through the day today, but now what you're seeing is clearly the breadth of the market strengthening over the last half an hour to an hour, and you're seeing 1541 advances to just about 620 odd declines. So clear positive trend playing out after those initial hiccups that we saw in terms of volatility. The India VIX also down around 0.5%, and that bodes constructively, at least for the market. Let's look at where the small and mid cap indices are at, around 0.7% higher on the mid cap index, which has fallen sharply last week in trade, and we also have the small cap index in the green, and therefore some bit of positivity creeping in, 0.9 odd% on the small cap as well. There you go, that the small cap index largely mirroring the way in which you saw the advanced decline as well. A little bit of volatility there at the start of the day. 1.3% higher on the Nifty Bank. The Nifty Auto also up around 0.9 odd%. The Nifty Metal up 2.5%, so doing significantly well. The PSU Banking Index showing quite an outperformance, 3% higher now. Last week was a choppy week for the PSU Banking Index. The Nifty Realty up a solid 1% as well. So those are some of the big buzzers. No index sectorally in the red, at least currently. But let's quickly switch focus. We have three managements. Let's quickly try and get a wrap around the first one. Let me bring on board Mr. Adipalli Krishna Sai Kumar, who is the director at Apollo Microsystems, to talk to us about the Q2 numbers. A steady set, sir. You're on your way to a 50% top line growth. Is that how one should view it?
Yeah, I think we already gave a guidance that we will be up by 45%, 40 to 45% in this financial year, and we are on track.
Mr. Kumar, you've guided for a 50% growth, but if you had to consider the first half, your performance has almost seen about a 70% growth. So can we expect a revision for the guidelines that you've mentioned for be it your top line and your margins?
Yeah, generally the Q3 and Q4 are the anchoring quarters, but we could somehow achieve Q2. This is one of the finest Q2 we have ever recorded till date. So I think like Q3 and Q4 continue to be an anchoring quarters. I think we should be outperforming over and above the guidance that we have given, both on the top line as well as on the bottom line as well.
So as you continue to ramp up and growth has been extremely strong for you, how much of your revenue is recurring versus how much is based on order flows? Just give us that perspective.
So obviously based on order flow, but you will have to understand that the sector in which we are, and specifically the projects in which we are working, these are all the recurring projects only, which are mostly either repeat orders or in the programs where we already have a participation actually. So there's a clear guidance available to us from our customers, how the inflow of the orders would be for the subsequent financial years. So that's how broadly I have to say.
So, Mr. Kumar, if you have to look at your the second quarter, you had secured orders about 131 crore, which are yet to be executed. Firstly, if you can give us an execution timeline for these orders, and for FY25, what is the whole scenario that we should be looking at for overall order inflows that can be expected for Apollo Microsystems?
As the day stands, we have more than 450 crores worth order book, which is orders on hand, other than the orders which got finalized and had to be recognized, where we had to get official orders on hand. But these fresh orders which we have received in Q2, typically you have to understand that 8 to 9 months are the delivery periods which would be there for these orders. And in some of the quarters, we get orders where the delivery schedules will be shorter schedules of 4 or 5 months. So broadly, I think, we would be meeting the guidance, and these specific to these 134 crores, we will be executing in the next financial year.
Mr. Kumar, but if you have to look at the margin picture for these, would these orders also have a 24 to 25% of margins? Because if you look at Q1, you had a comparatively higher margins, which have come down in Q2, if you have to compare just a quarter-on-quarter basis. So for the whole year picture, what should be the average blended margins that one should be looking at?
EBITDA level, there was a little pressure in the Q2 for execution of the projects right from Q1 onwards. So we had to procure some of the raw material at a higher cost, and that's why there was a small dip in the EBITDA compared to the previous quarter and compared to previous H1. But we could leverage on the overall capacity that we already have, and we could still maintain the PAT levels at much better place.
What's the risk of that spilling over into H2 as well as beyond that?
That's a good question, but yeah, sometimes it so happens some of the projects, would be flowing. Generally, Q1 and Q2 are not a very brighter quarters, but Q3, Q4 will definitely be there. We have a proper scheduled, orders that will be executed in Q3 and Q4. You will see that the EBITDAs will bounce back in Q3 and Q4 with the existing, orders that we are having on hand, where the work is in progress actually.
And how much in terms of what's the size of your book currently in terms of execution, and how quickly can you execute that? How many years?
Over 450 crores is the current order book presently on hand. It's the confirmed orders where already the production of it is already started. So as far as the top line, the guidance is already given. So that's how it could be. But at the same time, by end of this financial year, we will be expecting a very large order book in a couple of projects where approvals are being accorded by Ministry of Defence. The size of the ticket could be over and above 1,000 crores single order. So we're just waiting for those projects to hit in probably by end of this financial year as a single ticket projects.
Okay, Mr. Kumar, so for these projects that you'll be focusing on and the additional facilities that we have in development, so when are we expecting the commissioning of these facilities, and for the same, what are the capex plans that you have envisioned for the next 1 to 2 years?
So as we have already told in the market that 3.5 lakh square feet facility is getting ready. The phase 1 will be 2.5 lakh square feet facility, and the phase 2 will be little over a lakh square feet facility. This will be cumulatively, we will be having a close to around 4.5 lakh square feet facility of design cum production in Hyderabad, which is one of the largest facilities, for any mid-sized companies like us, specifically in the A&D sector. As you know, there's, A&D sector in India particularly is in a very, very transformative phase. With a lot of, modernization and a lot of push towards indigenization. At the same time, there's a huge amount of projects which are actually getting into a production phase in next 6 months to next couple of years, for which this facility we have started a couple of years back. The overall investment that will go in this facilities will be close to around 250 plus crores in next 18 months. And phase 1 of the project, 2.5 lakh square feet, we will start occupying from February onwards. Over a period of 4 months, the complete facility will be, occupied there.
Right. I want to try and understand more from a longer term perspective how the trajectory goes. You're aiming for 1,000 crore revenue. You're currently at 370 crore. You're aiming for 1,000 crore revenue by FY27. How comfortable are you with that, and can you maintain the kind of margins you're doing even at that revenue level, or will it at all get better?
So I would like to position like this. So primarily, the existing projects that we are doing are design cum production, and some of them are production orders and integration orders. And the percentage of the production orders, year on year, will be increasing for next 3-4 years constantly. So every 5 to 10, 15% of jump in the production percentage that goes, the profitability also, will be much better on an annuity basis as a balance sheet point of view. Coming to the top line, we already gave a guidance that, we will be growing at a CAGR of, 40 to 45% and maybe 50% and over and above that. For which, large ticket orders are expected. We are expecting an AON from Ministry of Defense for one of the naval program, where the ticket size could be more than 1,000 crores a single project like that. We are expecting a couple of projects from the naval defense itself. So similarly in the missile defense segment also, we are expecting 6-7 programs, very large cap programs which are going to hit production. Overall 15 projects are there which will hit production in next 12 months, out of which 6-7 projects will be a very anchoring projects for us. Based on all these backup that we have in the funnel that we have and the proven products that have already gone in trials and proven in trials, we are very confident that the growth trajectory which we are giving as a guidance, we'll be able to maintain. And that's why too much of capex we are investing, because the facility has to be ready. As you understand that we can't build the facility overnight. So we'll also be increasing our headcount. Currently we are close to around 400 plus, and in next couple of years we are going to double the headcount as a group companies.
Okay, thank you so much. It's great getting perspective from you, sir, and wishing you all the very best for H2.
Thank you. Thank you, Pedro.
Also, let me quickly bring on board Mr. Prasad Patwardhan, who is the CFO at ITD Cementation India, to talk to us, of course, about numbers, and the road forward, given the fact that there's going to be a new promoter coming in. So let me start off with that, Mr. Patwardhan. What's the sense? What changes for you with regard to the company, given that there's going to be a promoter change, 46% changing hands plus open offer?
Well, I believe the change is going to be for the good and for the better. We have a stronger and more reputed company coming in as our promoter. And the good part is the new promoter will have infrastructure as one of the focus areas of their business. So I think it will be a win-win situation for us, where we'll have more visibility and more work coming our way, and the group will also benefit through the expertise that we bring to the table in terms of engineering and construction and execution of the projects.
Hi, Mr. Patwardhan, Anushri joining in. I want to understand from you of the near-term outlook with this kind of change happening for the company, the promoter change. What are you expecting for ITD Cementations? What should the investors look out for the road term ahead? Would there be any management changes as well as if you are to go forward with this kind of acquisition happening by the Adani arm?
Well, it's too early to comment on how things will pan out going forward. Our focus continues to remain on execution of the projects on hand and bidding for new projects that come up. The good part is the Indian government is focusing on infrastructure development. So there's a lot of projects, especially in the sectors where we have the expertise, that are coming up for tendering, and our focus is going to be continue to be on execution of the projects and looking out for newer projects that we can bid for and execute.
Got it. So talk to us about execution. How is it all playing out? You had the Ganga Expressway project, which was completed by around 50 to 55% of it was completed at the end of Q1. Where do we stand on that count? We also had the Chennai Metro project and the Bangalore Metro as well. So how quickly are we completing some of these? What are the timelines looking like?
Well, all these projects are on schedule and the execution is going on at a pretty brisk pace. Q2 generally, because of the monsoons, it tends to be a bit slower than Q1, and we are going to witness the same in this Q2 as well. But overall, the execution is progressing very well, and most of the projects are on schedule, and the execution is going on as per our plan.
Right, Mr. Patwardhan, for FY25, you've seen about you've given a guidance of about 15 to 25% of revenue growth. Now, in the last 3 years, you've had a very strong growth trajectory, be it in your revenues as well as your margins. They've more or less remained stable in the 9 to 11% of range. So, going forward, in the next 2 to 3 years, what can one expect from ITD Cementations in terms of top line growth, the margin growth? What can be expected here?
Well, last year we grew at about 40+%. Of course, maintaining a 40+%, growth in the top line can be difficult. But given the focus on infrastructure development and with the new promoters coming into the company, we expect the pace of work to pick up, and we will continue to execute the projects that we have done in the past, and hopefully the growth rates will be better than what we have seen in the current year.
So with the new promoters coming into the picture of your segments, if you are to see, which of the segments do you think would get a greater push, where you can see more orders, a stronger order pipeline because of the kind of management change which is happening?
Well, we are actually doing road projects, we are doing marine projects, we are doing hydroelectric power projects. So as I said, the focus is going to be on these sectors. We are doing building projects. So the focus is going to be on the areas where we have the expertise to execute the projects, and that is what will continue. Of course, there could be some new areas which may come up, but it's too early to talk about those right now.
And how's the order book evolving? You were at 18,000 crore in terms of order book size. You've done around 8,000 crore of execution last year. So execution, of course, on point. You're up 30% year on year in terms of your top line. But how is the order book shaping up? Are you planning to expand that as well, along with the kind of opportunities available?
Well, the order inflow in this year was a bit slow in the first quarter because of the elections and the results and all that. But subsequently, we have won orders worth about 3,800 crores in the current year. Our order book today, as of September, is about 18,000 plus crores. And after the end of the quarter in October, we have won another order worth about 1,700 crores. So there is a good visibility of new tenders, new orders coming up for bidding, and we are looking at that very closely. And we are hoping that the orders, the order inflows in the year will go up significantly in the next 6 months.
You expect it's still below what you were projecting when I'm looking at it full year for H1. So do you expect H2 to be much stronger, meaningfully stronger? Because you had given a guidance of 12 to 15,000 crore, if I'm not wrong, in terms of order book or new order wins for this current financial year.
Well, you need to keep in mind that in H1, first 3 months were really very slow in terms of new order flows. We hardly received any orders in the first quarter. So obviously we expect Q3 and Q4 to be much better than H1.
But how likely are you to hit that 12,000 crore in terms of new orders?
Well, there is a large pipeline of orders that we are looking at, and we are submitting our bid. The timelines can go a little bit here and there.
Sure.
But we are pretty confident that the order flow will continue in H2 as well.
Sure.
Okay, so the commentary remains on the 12,000 order inflows that we should be looking out for. But on these new order inflows, what is the kind of margins that one can expect? Would it remain in the 10 to 11% of range, or we can see upside from these levels?
Well, there could be upsides on some projects, but we have seen our margin profile improving over the last 2-3 years. So we will, of course, endeavor to perform better, execute the projects faster, and improve on our margins. But I guess the margins, at least in the near future, would be in the range of 10 to 11%. Going forward, we need to see whether we can improve on the margins, and obviously our endeavor will be to do that. But for this year, I think we can expect around 10 to 11% EBITDA margins.
Okay, 10 to 11% EBITDA margins, a healthy order pipeline already, and expanding fast. Thank you so much, Mr. Patwardhan, for all of those insights with regard to ITD Cementation, and wishing you all the very best. Of course, slew of changes. So wishing you all the very best for that.
Thank you. Thank you so much.
Right. Let's shift focus though. Third management on this edition of SMID. We have Mr. Vidyashankar Krishnan, Chairman and Managing Director at Forgings, to talk to us, of course, about the numbers for Q2. Let's pull up the stock if we can, because plenty happening here. There's also, of course, a merger with one of their subsidiaries, and the Forgings stock, at least for today, if we can pull that one up on charts before we go and dive deeper here, because so I want to try and understand with regard to numbers itself. Top line largely muted. Do you expect growth to come through? What's the sense like?
We started off the year, I think, with a more positive outlook, but the CV markets have not been very buoyant in India. So we expect this to be range bound within about 2-3% of previous year's level is where we should end at.
Okay, do you believe a pickup in H2 likely?
All of us in the industry are hoping for it.
Sure. But your visibility, sir, because you've got your ear on the ground. So what's the sense like?
We expect the second half to be similar to the first half.
Okay.
And definitely Q4 to be quite bullish.
So when, sure.
On the whole, I would say 2 to 3% plus is possible, given good tailwinds.
Sure. And so when should the pickup meaningfully start to show on both numbers as well as on industry?
It would largely depend upon the overall economic situation, which doesn't look good from the export front. Not from the export front, from the international front, I would say. And is likely to spill over into the domestic market, into the Indian economy, if things here don't move forward.
Mr. Krishnan,
the pessimism in the in the international markets could creep into India a little bit.
Mr. Krishnan, good morning, sir. It's Puneet here joining as well.
Hi, Puneet.
Thank you so much for joining us today.
Thank you.
And season greetings to you and everyone at Forging. I just wanted to, you sent out an update on DVS Industries that it's, finally been amalgamated with the company. Now, I think the last time we spoke, you mentioned that it had a capacity of about 3.6 lakh crankshafts. What would be the utilization currently? Because, we have seen, as you rightly said, a subdued first half for the CV industry as a whole. What would be some the utilization, and where are you expecting it to go in the next, for FY25 and any kind of range that you would have for FY26?
They are running at about 20,000 cranks a month. So that's about 2.4 lakh, 240,000 cranks a year. All told, this year we should be doing about 275,000.
And do you see the need to have any kind of expansion in this facility, because you're still quite way off than the whole capacity utilization of 3.6 lakhs? Do you see that, till FY26 also you won't need any kind of capex in this facility?
Capex would be necessitated because many customers are moving from, let's say, low-tech crankshafts to higher-tech crankshafts. So some kind of capex will be required, and this will be followed by better value addition within the company.
This already part of the 500 crore planned capex over the next 12 to 14 months?
Kind of. Yeah, I think it is.
Or will it require additional capex? Or
as it stands within the budget.
Understood. And where will this 500 crore come from? So will you be completely financing this from internal accruals given the kind of environment that there is, or will you require to pool in debt, or will you raise equity?
We are looking at the first two, a lot of all the internal accruals and a little bit of debt.
Understood.
Just one question, sir, on the North America truck order. I think the last time we spoke as well, you didn't mention that these orders are good for the next, like whatever orders that have happened in these last 3 months will be good for the next 2 years or so. But what is anything that you've heard in this particular quarter? Any kind of update that you see, any kind of positivity in this particular, in Q3 until now? Any kind of update you can give us on the same?
Sure. Surprisingly,
You are speaking with.
sorry for the disturbance.
No worries.
Surprisingly, North American markets truck markets are doing well, for the moment at least, relative to the rest of the international markets. So we would expect that buoyancy to continue over the next 9 months.
That's great to hear, sir. And we did speak about a bit on the new, the new norms coming in 2027 in the US, and we are expecting, or there is a lot of build-up of estimations and expectations that 2026 will be a very big year for pre-buys. The pressure is now a little higher than the previous quarter because Q2 has also been somewhat subdued. Do you concur with the view that 2026, especially FY26, is estimated to be much higher growth? Because we've not seen that. And any kind of estimate that you see for H2, do you see that the pre-buy should start in H2 itself? And what kind of benefit do you expected for Forging specifically?
Yes, Puneet. Pre-buys should begin from Q1 of calendar 25, which would be Q4 of FY25. And probably a little bit of pressure, therefore, is there even now in terms of volumes of the Class 8 and higher trucks, not higher, Class 8 and generally the truck market in the US.
Well, Mr. Krishnan, thank you so much for joining us today and taking us through Forging's Q2 numbers. We look forward to our next chat, and season greetings to you again.
Thank you,
very
and
happy
season
Diwali
greetings to all at NDTV and your viewers as well.
Thank you so much, sir.
Happy Diwali.
Thank you, sir. Wish you the same. But with that, completely out of time on this edition of the Smith Show. From myself, Puneet, Anushi, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
And light up your future with prosperity.
let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Festive greetings to all of you joining in on this program, which is Ask Profit. My name is Alex Matthew. You're, of course, watching NDTV Profit. And if you were hoping for some festive cheer in your portfolio at the start of this week, well, the markets have obliged. And you have the equity markets that are trading at this juncture with gains, and there is a bounce that took place early on in the session. Let's pull up the intraday chart for the Nifty 50. So early on in the session, you had a brief moment where we dipped into the negative territory, but then we have gained from that point for the benchmark index at least. And you have about 38 odd stocks on the Nifty 50. Last I checked, I'm going to pull that up right now. So 38 stocks continuing to gain ground right now, and quite a few of them on the back of development. So the top gainer, of course, Shriram Finance on the back of earnings. You also have Adani Enterprises, which is gaining nearly 4%. But then you have ICICI Bank, and we'll talk about that in just a bit, 3.5% higher. Mahindra and Mahindra up about 3%. IndusInd Bank, which got a drubbing at the end of last week, is rebounding just a tad bit. Who are underperforming among the benchmark constituents? And you have Coal India, which has disappointed in the second quarter on earnings once again, with a surprise contraction in the margin. Wasn't expected, a decline in the EBITDA, and also a decline in the net profit, which is under a little bit of pressure. Axis Bank, which was doing quite well towards the end of last week, is under pressure today. BEL, as well as Kotak Mahindra Bank and SBI Life also losing ground. Now, the broader markets are not looking as buoyant, but they're still looking good. You have the mid-cap index that's up about 0.8% or thereabouts, lagging behind the benchmark Nifty 50. But you have the small-cap index that's doing quite well. It's up about 1.2%, and as a result of which the market breadth is very firmly tilted in favor of the advances. In terms of the sectors that are doing well, most are actually doing good. And you have the Nifty 50, you have the Nifty Bank that is gaining about 1% or so, but really it's the PSU banking pack that is leading the gains, up as much as 2.9% or so. And you have a few names that stand out here as well. But we are going to be talking about one particular bank at the start, and you've probably guessed what the focus today is going to be. It is in fact ICICI Bank, because if you look at the results that have been posted by banks so far, this is a private sector bank that really stands out. And to tell you about which numbers stood out, and there are a whole host of them, Harsh Saita is joining in. Harsh, you've been speaking about this from morning, and I like the term that you used in the morning. This is what investors are getting in terms of what they paid for. It's not a cheap bank, to say the very least, but it's lived up to its rep.
Absolutely, and I don't want to take credit for that because Bernstein actually put that out. So and I gave them credit for it in the morning as well. But yeah, I mean, that's exactly what it means. It's the most expensive bank currently, among the larger ones, of course, and doing very well. I did mention during preview on Friday in terms of expectations, if they are able to maintain the 2.4% ROA, I would be very, very impressed. And that's exactly what they've come out with. A 2.4% ROA when you are seeing over the last 3 to 4 quarters deposit growth pressure across the board, and you are seeing a consistent NIM compression. along with in this quarter an asset quality issue starting to get reflected in the system. It's extremely impressive that they've been able to maintain the 2.4% ROA, and that's exactly why the stock trades where it trades, and it's 3.6% higher even today, despite that kind of valuation. What's led to that ROA number is, one, OPEX has been subdued. They've been able to control that. And in a very difficult environment where asset quality is concerned, they've been able to maintain their asset quality, possibly even better it, if that was at all possible in an environment like this. And that's what really helps it stand out. It's a beat across parameters, except maybe if I were to pick something, margins would be something that I may be concerned with. 9 basis point NIM compression sequentially, but they've more than made up for it with the kind of growth number that they've clocked. 4% on advances, 5% on deposits, with LDR compressing. It's a very solid number.
And 4.27%, if I'm not mistaken, that even that NIM is higher compared to peers.
4.35, yes.
4.35%.
It's well above peers, but of course not as much as maybe a Kotak. So,
sure.
So
Fair
that's
point.
how.
Okay, so thanks so much for giving us that context.
Sure.
That helps me line up the conversation at the start of the show today. We've got Lancelot Dicuna, CIO of ValueX Wealth Connect, joining in, as well as Rajesh Palvia, who's the Senior Vice President, Tech and Derivative Research at Axis Securities. Gentlemen, thanks so much for taking the time, and festive greetings to you and your family and your team. Lancelot, I'll come to you first on ICICI Bank. What do you make of the numbers, and do you think the valuations are justified, particularly after a set of results like this?
I think the numbers are very good, and they continue to let's say surprise on the upside. But it's a good surprise compared to a couple of banks who came out with results over the weekend and last week. So I think it is positive, but in terms of valuations, the one thing about quarterly numbers is it makes an investor or extrapolate the same kind of growth and the same kind of numbers going forward. And that is where things can go wrong, or things can change, because the past performance is not necessarily a true indicator of the future, because environment changes, the entire product mix might change. So I think one should be cautious when investing in companies with high valuations, because even if there's a negative quarter or two, the valuations can get re-triggered back to lower multiples, and that could mean significant drop in terms of stocks. It's not that the quality of the asset is bad, but it's just that you're buying it at a elevated valuation, and any change in a quarter or two sometimes can re-rate the stock, and then you could be looking at much maybe even losses if somebody buys at this price.
So is it a hold? So it's a hold basically. It's not a fresh entry.
Yes, it's a hold and not a fresh entry. Definitely, one has to look for a correction to look at making fresh entries, because on the longer term, yes, they are one of the better banks. With HDFC, State Bank, and ICICI are the three really driving both quality as well as growth. So these are the three which one should be invested in.
Let me close the loop and ask you what a good level is then for ICICI Bank. It's at 1300 or thereabouts. What level, according to you, is a good level to accumulate?
Look at around.
First of all, wishing you a very happy Diwali and prosperous New Year to all the NDTV Profit team as well as the viewers of NDTV Profits. Looking at the setup for ICICI Bank, this is the stock where, in this volatile market, stock is holding at 50-day moving average support area. And after today's move, again, stock comfortably holding about 20-day moving average. So strength is there in the near term as well as on the short-term chart for ICICI Bank. On the downside, 1230, 1240 are the important support area for the stock if you want to buy in the decline. So that's the attractive level for near-term to short-term setup. Your stop loss should be placed at around 1200 if you are buying in the dips. On the higher side, as the stock has already moved up around 1300 level, and if it's continued further, and 1320, 1330 are the immediate supply zone, if it crosses those levels, then possible really can extend to 1400 level also for ICICI Bank. As market is also showing some bit of recovery, Bank Nifty is also taking the lead in this recovery. So I think ICICI Bank is one component where we can see some strength and possible really can extend in this stock. So trailing stop loss, those who have already bought can be a strategy at this juncture. Now 1280 should be your stop loss, trailing stop loss for trading position. But for positional investor, wait for dip towards 1230, 1240. That's the attractive level to buy an accumulatory stock.
Okay, all right. So that's a comprehensive view on ICICI Bank. Let's jump straight to the questions. And you see that number that is flashing on your screen right now. That is where you send your questions to us. If you are writing in for the first time, this is a reminder to, not a reminder, but this is obviously my first message to you. Do write in with your name as well as your location. It'll help us and it'll also help you identify when your question is taken. The first one we're taking today is from Srinivas, who's writing in from Bengaluru. He's asking about M&M Finance and he's also asking about Coal India. So a couple of names here. He's bought M&M Finance at a price of 307 and Coal India at a price of 527. Lancelot, interesting question, right? Because M&M Finance, there have been question marks about asset quality, particularly in the spaces that it operates in, and Coal India has not had the best quarter. The second quarter was quite painful. The numbers were out on Friday. What would you do with these two?
I think as far as M&M Finance is concerned, I think he has bought it at a high price, and given the concerns that you are seeing in terms of asset quality, especially in the sectors that they are exposed to, more on the industrial side, it is, and looking at maybe the asset quality could get impacted going further. So one should, look at maybe exiting on a small bounce, because, there are far better financial companies to invest in, and valuations of many companies have come down. So I would look at, maybe exiting M&M Finance and maybe look at investing in something like a Bajaj Finance.
Okay.
As far as Coal India is concerned, I think the results for this quarter are pretty difficult for the company, or challenging. And given that the stock had risen considerably, over the last, maybe 18 months or so, I think the valuations still seem to be stretched, and maybe what we are seeing in the quarterly numbers will also translate into the annual numbers. So one should be a little cautious, but you can continue to hold Coal India for the time being, rather than looking to sell in a very negative kind of scenario.
Okay, I'm hoping that you have a view on this. Aptus Value Housing Finance India is the name of the counter. This is a question from Mohit, who's writing in from Ludhiana. The stock is currently trading up about 1% or so, 341. It's a 17,000 crore market cap company. He's looking for a 3-year time horizon, and he's bought at levels of 347, which is very close to where the current market price is. Lancelot, a view?
So I think on the housing finance side, Aptus Value is more looking at the smaller segment of customers. And I think at the end of the day, it's all going to be about how you manage the net interest margins and the NPAs. Now, smaller companies will find it difficult to, to maintain the net interest margins, because the cost of borrowing always is higher than, than bigger companies. Bigger companies can borrow at much lower cost. So I think the challenge is going to be in terms of maintaining the net interest margins and keeping NPAs lower. So from a longer term perspective, if you're looking at a 3-year perspective, I think one should, and if you're not, since you haven't made a loss, or you're not, the purchase price is more or less close to I think it would be better to look at exiting and look for, investing in the stronger companies in the space.
Okay, so that's the view. All right. I must say that we're going to take one question per viewer, so do bear that in mind. If you send us multiple stocks, I'll just have to select one of them. BPCL is the name of the counter that we're taking next, and I'm not sure who's writing this, but the question is about a buy or sell recommendation, what the target would be. Stock is currently trading at 311 or thereabouts. Rajesh, what's the view on the charts?
So structure has turned bearish for the stock, as the stock broken its important support area of 320 in this fall. If it's sustained below to 320, furthermore, follow-up selling we could see in the stock, and on the downside 300 to 90 are the next downside level for the stock in this corrective move. Stock is now trading below all its near-term, short-term moving averages, so that is also adding up some bearishness. Maybe some pullback action we could see in line with the market action. Possible pullback action can come towards 320 around those levels. So around if it comes around 320, where one can deploy some short trade if you want to trade in this stock, because our view is slightly bearish for the stock and possible target we are projecting towards 300. So one can wait for some pullback action. Your stop loss to go short around 325 to 326.
All right, so we're finally today in trade seeing a little bit of an abatement in the selling, but whether or not it's sustainable and whether this truly is a near-term halt in the selling is another question. Of course, it's all stock-specific action, isn't it, Rajesh? The question is, what would you buy at the current level for a period of less than a year, if at all? And this is a question from Guru. I'm sure it'll benefit a lot of people. Rajesh, for you.
Yeah, I think there are a lot of opportunities still. We believe that if anybody wants to buy stocks for 1 year time frame, I think some of the stocks from the pharma space are looking very promising. We believe that Lupin is one stock where we are focusing, and we believe that this stock may continue furthermore upside as overall structure across all time frames is on the bullish side. So for 1 year time frame, Lupin is looking attractive. Buy and accumulate should be your strategy. On the downside, 2020 should be your stop loss, and we are projecting target for Lupin for at least for 1 year time frame, that is around 2500 to 2600. So this stock is looking attractive on the pharma space. Again, Amber Enterprises is also looking promising. That stock can be also looked at for long-term perspective. And we are projecting target towards 6,800 for Amber Enterprises. So any minor dip or corrective move should be used as a buying opportunity in this stock. On the downside, 6,020 should be your stop loss. Buy and accumulate is the strategy for Amber also.
Okay, all right. Amber has seen quite a bit of chop and churn in the recent past. It's up about 2.5% as we speak right now. Atif from New Delhi has got a question on Vedanta, and it's a long-term question. Let's pull up the chart and see where it's currently trading. He's bought at levels of 481. He's bought 10 shares. It's not too far away from the market price right now, 470 or thereabouts. Lancelot, on the fundamentals, there are several questions about the kind of money that has been given away through dividends. What do you make of it? From the perspective of a shareholder, what would you look for when you're investing into Vedanta? Would you hold on to this?
So I think at the moment one should just hold on for a while, because while the past has seen good amount of dividends being paid out, Vedanta is becoming a serious player in the commodity space, especially in cases of iron ore and copper, etc. So one should wait and see, because these particular commodities would actually get repriced, and the industry would see further demand coming up. And since they control a large amount of capacity, they would be beneficiaries of any increase in prices, global prices of these commodities. So one should just wait, and maybe when the commodity prices are peaking, then that would be an opportunity to sell.
All right. Garden Reach Shipbuilders is the name of the counter that Karthikeyan wants to know about. He's writing in from Kerala, and he's wondering whether this is the opportune time to enter into the stock. And so from the perspective of the technicals, Rajesh, what are you seeing with the stock? It's up and about in trade today, over 3%. Would you buy right now?
So Garden Reach has corrected in last couple of months, and if we analyze on a longer term time frame, stock is just holding the strength on the long term chart. But yes, near term, short term structure has turned slightly bearish. But again, looking at the recovery from the important support area of 1500 is important for me. If it continues to hold above 1500, or if we are able to defend this level in this volatile market. So I think some pullback action, yes, possible pullback action towards 1700 to 1750 we can see in near term to short term perspective. So at this level, one can buy with strict stop loss of 1500. That needs to be kept as a stop loss if you are buying at current level.
I'm just checking, do we have the Nifty next 50 by any chance, if we can pull that up? I'm not sure if we do. But we have a viewer who is asking, Dr. Malhotra, who is asking for whether or not we can pull that up. And that's an interesting question, because often on the mutual fund show we talk about the idea of investing in index funds, and a lot of people gravitate towards the Nifty 50. But in the large cap space, there is also, of course, the Nifty Next 50, which is basically the next 50 stocks beyond the top 50 in terms of market capitalization, and that's certainly something to look forward to. This year, this is up as much as 31% or thereabouts. So it's certainly something to track. Hopefully that addresses your point that you were raising, Mr. Malhotra. We've got Rajan Iyer, who's a retired banker, who's writing in and asking about Yes Bank. And he's holding at levels of 27, and he's bought as much as 1,000 shares. It's up and about in trade today, but he's at a loss. And I'm just wondering whether, he's wondering whether it's a good idea to hold for the next 2 years. Lancelot, on the fundamentals, what's the view on this one?
So I think on the fundamentals, it still is a bit expensive as compared to the other banks. And yes, the bank had received support from SBI, and there was a turnaround story. But at the same time, capital of the bank had expanded because of conversion of various bond holders and loan holders into equity, which meant that it got recapitalized to that extent. But the return process in terms of generating higher ROA, return on assets, as well as, return on equity is going to take a while. And so I would see that the stock is really going to consolidate for a longer period of time till the earnings start to see a significant improvement. So at this point of time, I think it's better to consider that, you are holding an expensively valued stock, and that may continue to remain expensive at least for maybe a year or so. So in the meanwhile, if there is an opportunity, one should look at exiting and moving into much stronger banks, maybe like an HDFC bank.
And you mentioned those three at the start of the show. Mangesh from Pune is asking about Bharat Dynamics, which he's bought at a price of 1,676. He's currently in a loss. He says his time frame is 2 to 3 years. What can be done here? Rajesh, on the technicals, what strategy would you employ? Could you suggest a stop loss for him? And also, at what level can he consider accumulating, because it's a sizable loss?
Yeah, so the now stock prices is beyond the stop losses, because already he has bought it around 1,600. Now stock is putting at 1,000 level. So a very significant, corrective move in most of the defense stock, and this is the 5th consecutive month where we are seeing that still most of the stocks are still under supply pressure. But if we analyze on the BDL, in this corrective move, stock is now moving towards its important support area on the longer term chart. 980 is the important support area for this correction. If we wish to average out, I think for averaging quantity, I think we can keep a stop loss of 980. That stop loss needs to keep if he is averaging at this level, because if any pullback comes, so I think this average quantity would give some profit on the stocks which he already bought. So acquisition costs would come lower by averaging it out. So 980 should be your stop loss if you are averaging it out here. In pullback, yes, though stock is in oversold trajectory, some pullback action we can see towards 1150 to 1200, where the quantity which you are buying at lower level can book around those levels.
Okay. The next question is from Venkat Ramani, who's writing in from Bengaluru, asking about Nerolac paint and whether or not it can be bought at the current price. The question is to you, Lancelot, because he's essentially asking about festive demand and the real estate space, really, whether or not this particularly building materials company is going to benefit from the demand in the space. What would you say?
The paint industry, we've seen one or two new players get in, the Jindals, then you have Grasim also entering the paint space. So there is going to be competitive intensity going forward. And so I think given that competitive intensity, you will see redistribution of market share. It will be difficult for many of the paint companies to hold on to their existing market share as well as maintaining margins. So given that scenario, one should look at, maybe reducing exposure to these companies or wait for a real big dip, which may happen only once maybe the year end is over because at this point in time, because of festive season, you may see some growth, etc., for the quarter. But when you look at it over a 6-month period, you could see that companies are not able to sustain at the rates of growth that they had in the past. And that would mean re-rating of the stocks on the lower side. So one should look at, maybe exiting at this point in time.
Coming back to you, this is probably the last question we're taking today. It's on IDFC First, but it's a question all the way from Japan. And we've got Nagendra joining in from Tokyo who's asking about this. Would you buy at this point? Lancelot, the numbers just came out and they haven't looked the strongest in the second quarter, at least compared with some of their peers. Would you suggest a fresh entry though?
So I think if you wait for a little bit longer and maybe you get another 5-7% lower, then you could see, probably you're buying it at when the values are at a fairly low option. But at this point in time, given the structural changes that the bank is undergoing, it is getting merged with IDFC. That merger process is getting complete. And we are seeing, there were a certain high cost borrowings that are getting repaid. So there is a process of business restructuring that is underway. So I think you may get a chance to buy it at little lower valuations, because after this business process is over, it will take at least a year before you'll start seeing some improvement in the overall scenario.
Unfortunately, we're completely out of time with that answer, and point well taken on IDFC First Bank. But Lancelot as well as Rajesh, thanks so much as always for taking the time, and wish you again, you and your families, a very, very happy Diwali. That brings us to the end, as I said, of this edition of Ask Profit. Lots more coming up over the course of the day, so do stay tuned. This is NDTV Profit.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty.
Welcome, you're watching NDTV Profit and you're watching Cracker Stocks with NDTV Profit. A very happy Diwali to everybody who is watching NDTV Profit. This is Mahima Vachrajani and with me is Harsh Saita. Well, somewhat 2080 marked a historic milestone for the Indian equities. The Nifty did reach 26,000 in September. We also saw NSE and BSE post impressive gains of 24% and 26%. Mid-cap and small-cap indices also outperformed, delivering 42% and 40% respectively. But going ahead, what is the strategy that one needs to adopt, and also what are the factors that have led to all of these growth? To discuss all of this, we are joined by Deven Choksi, Managing Director of DR Choksi Investment Managers Private Limited, who joins us now. We also joined by Vijay Chopra, MD and CEO of Enoch Ventures, he is also joining us, and we're also joined by Amisha Voda, Chairperson and Managing Director at PL Capital, that is Prabhudas Leeladhar. All of you, first of all, a very happy Diwali to all of you and welcome to NDTV Profit. I'll start my first question with what I said. The Nifty has had a wonderful run. We did touch 26,000, marking outperformance in, left, right and center. The small caps, mid caps, everything outperformed. Do you think that this outperformance is sustainable since we're entering into somewhat 2081?
Well, I guess wish you all the happy Diwali first and foremost, and I would pray God for the blessed year, I think in 2081 somewhat. We all have seen, I think, a phenomenal run in the last 2 years in the market. This run has been propelled by a lower base on which higher growth has happened. And at the same time, I think the phenomenally high amount of liquidity which has entered into our markets, which probably, I think, fueled this entire bull run. To me, I think this entire bull run is likely to continue over next 10 years. However, in between, there are going to be the situation wherein probably you are going to see the corrections. And that's where probably I believe that we are getting into some kind of a price correction along with the time correction in the coming 1.5 to 2 years, as I see it. Nothing wrong fundamentally with the economy, nothing wrong with the prospects, nothing wrong with the companies and their workings. However, the market is supposed to get adjusted based on the price and the valuation, which currently remains at the elevated level. If the growth in the corporate sector, earnings sector, is not matching with the market valuation, probably the market valuation will have to correct first, because I think growth cannot speed up the way market is expecting. That's what I think the underlying narrative here would be. And one is expected to see the corrected market in 1 or 2 quarters to begin with.
Sure. So opening thoughts, Amisha, let me come to you with regard to how you believe valuations are stacking up. Can earnings catch up with the way valuations have moved?
So I broadly agree with the thesis that we had a earnings bump up, largely also because of the provisioning which went off from the banks. But also beyond that, our inflation trajectory was very stable, and also the interest rate trajectory. As we speak on the ground, we feel that a little bit of urban slowdown is visible across categories. Inflation is slightly inched up. And in that scenario, there are no extraordinary triggers or base correction effect or anything which can really pump up the growth numbers.
Vijay, let me come to you. So, when you're looking at how this theme of earnings is playing out, do you expect that markets will be range bound from this somewhat to the next?
Well, I think, first of all, thank you for having me on the show, and I wish the entire viewers of NDTV Profit a very happy festive season, happy Diwali, and a safe Diwali. Well, yes, we are going through the earnings season, and I'm kind of disappointed the kind of numbers we are seeing. I think I was on your show a few days back, and I mentioned that the disposable incomes have to go up. The inflation, as Amisha said, was quite sticky, and inflation is not leaving much money in the hands of the general public. Secondly, taxation. We are very high on taxes. So, these high taxes are definitely a drain on the balance sheet as well as the balance sheet of any household. Number three, in spite of the low crude prices, the government is not bringing down the fuel prices. I think that there should be something happening there. Number four, I was expecting that there would be at least 25 bips of rate cut in this credit policy, which did not happen. All these triggers have to come in and join hands together to pump up the economy. Definitely, we are seeing a slowdown. The auto numbers are not very exciting. I've been talking to auto ancillary people. They are also saying that there's a clear-cut slowdown in the auto space, and inventories are pretty high. Yes, the demand for luxury items it's growing leaps and bounds, but at the same time, the entry-level cars, the entry-level bikes, we saw what happened with Bajaj Auto, and they are not seeing a very good festive season either. So the two-wheeler segment, the entry-level car segment, or maybe cars still maybe 12-13 lakh rupees, it's not going up, and it's a clear we can derive from this that there is a slowdown. People are not having much disposable incomes in their hands, so the spending is not happening. So I would say the government should work on the spending side. Secondly, sort out the supply side issues as well as the agri-commodities go and leave more money in the hands of common people. This jugglery which happens in every budget, actually is not leaving much in the hands of people. I was talking to somebody or reading somewhere that the ATC level, the relaxation under Section ATC has been the same in the last 10 years, while the inflation has been inching up 5-6% every year. And the actual inflation is much higher than the numbers which are quoted by the RBI and actually what so I think that catch up with the earnings, we should see spending at the bottom of the pyramid.
Right. Okay. So opening thoughts. Devin, let me come back to you. You've triggered this conversation where likely markets will be either range bound, they're not going to go anywhere much because nothing wrong with the numbers per se, but just with regard to how valuations have run up. Now, if I were to just try and deviate from this argument and go more towards flows, FIs have been withdrawing money. It's a interest rate cycle which is anticipating sharper rate cuts going forward. In such a cycle, shouldn't markets actually be more buoyant?
Well, I think there is a logic behind it. On one side, we are talking FIs, we are not talking about the traders within FIs. Tell me one thing, which FI investor has withdrawn money from the market? People don't sell their stocks and they withdraw money out of this market. I think only the traders, they're swing their money from one market to the market. And that's what is causing the upsides and the downsides in the market. I don't think that it's permanent. Maybe I think they are waiting for the valuations to come down to bring money back into the country, which they will do, pretty sure. On the other side, the domestic funds are attracting significantly large amount of inflows of money. 24,000 crore worth of SIP has already been established. And I believe that the allocation of money towards financial assets, they continue, be it AMC, be it insurance fund, be it pension. I guess I think the money continue to accept fixed deposit. I think the money flows into the different areas of financial instruments. So in my viewpoint, domestic liquidity will continue to support the market. And that's why I'm not expecting sharp price correction. I'm expecting time correction as far as I think the market, the valuation of these stocks are concerned.
All right, Devend. I also want to understand that the small caps and the mid caps have seen a significant up move. Now they're trading at, very high valuations or premium valuations. So going forward, what should be the approach towards the small and mid caps, especially in pockets which are high growth sectors like the AI or the EMS or the EV sectors, that are really growing well. So Amisha, I'll come to you with this one. Your view on the small and mid caps, especially in the high growth pockets.
So, what's been really happening in the market is that the distinction between a very capable management, an upcoming management, or a mid-sized company's management, or an average management has completely gone away. So, the growth is an outcome of opportunity plus management capability to tape that growth.
But in your opinion, what are the top 3 sectors that you think will augur growth in summer 2081?
There are 2 outlooks to it. One is in terms of absolute growth. I still feel that on PAT basis, the capital goods segment will continue to throw YY very good numbers, be it coming from railway stocks or defense stocks or actual other stocks like Praj and so many more. Of course, Siemens, ABB, transformer companies, wire and cable companies. The growth will continue to be really very good in that. While I feel that the growth, actual PAT growth in some of the other sectors cannot match there, be it defensives like IT or pharma or consumer. But markets don't look at just the absolute growth. They look at growth as compared to the expectation as well as previous growth, and at what price the growth is available and how is the ownership of that growth. Good amount of portfolio should continue to remain in pharma, IT, consumer, AMC, and large and mid cap as compared to small and micro cap.
Right. Vijay, seems like we have a consensus here with regard to the fact that markets will be range bound. How should you outperform? Where is that pocket of opportunity according to you?
Well, I concur with Amisha ma'am when she says that there are pockets of excellence. There are certain sectors which are going to grow. I think that, metals give a great opportunity. With China coming down and they're giving a lot of stimulus in their economy. So I think that, it would propel global metal prices. And one of the stocks I'm going to mention today is also from the metal space. We are in a long-term bull run as far as the metals go, especially the industrial metals. We have seen what has happened with silver and copper. So I think that, metals are a great sector to be in and kind of safe also. The second sector I like is IT. I think that IT has been an underperformer in the last few years. But the next couple of years seemingly are very good and very exciting. AI is doing wonders. Most of the IT companies, they have done away with the bench strength and the extra flab which they had on their as on the rolls. So they are much smarter and much leaner as a company because most of the IT companies, the greatest amount of outflow is in salaries. So they have done quite a good job there. I think defense is also one area where I would focus. The reason is there are a few wars going on. People are and countries are worried about their security, and the government of India also wants to focus or is also already focusing on a lot of defense companies. We are great in shipbuilding. The kind of orders we have received in shipbuilding, they are actually stupendous. And the companies like HAL. And all, they are getting huge amount of orders from smaller countries. So I think that defense is one area which I would look at, IT, and of course, the luxury segment. As I mentioned earlier, there is a dearth of, if you go and to buy a luxury watch, they will tell you that, you can get it maybe 6 months down the line. Similarly with, luxury condos and apartments and, stuff like that. So I think that the rich are getting richer, the rich are getting richer, and there is a lot of money to be spent and to be splurged. So one of the stocks I'll mention today is also from that segment.
Oh, okay. Devin, let me come to you. You've said that dips are going to be smaller and therefore it's again going to be range bound, but dips are going to be smaller. So how much do you expect in terms of a dip or a correction? And if that were to happen, what would you be going out and buying?
Well, I think that can be a guesswork as well. But I believe that I think the across the market correction is possibly ruled out at this point of time. You might see in pockets, I think some corrections emerging and emerging stronger. For example, I think recently you saw, I think the sharper degree of fall in likes of Reliance, HDFC Bank, market corrected. But whether I think across the board everything has corrected that sharply, maybe answer is not. Maybe in some cases it has not. In my viewpoint, I think today, as I have been making a point, if you are on a richer valuation and if you do not have the commensurate growth catching up with it, then possibility of individual stock correction is much higher as against, I think, the entire market corrections happening in the Indian markets. So I think one will have to be very, very careful about how exactly one looks at individual companies and what the dynamics are on those companies. I would tend to believe that those companies which have created significantly large base and they have the ability to probably perform and deliver on the growth, they would be comparatively better off compared to the smaller ones, I think, who are probably not having the sustainability factor built into them.
Devan bhai, I want to understand that, you expect markets to remain range bound, but do you expect earnings momentum to continue? And if yes, how will you play it then? What will be your top picks then?
So I have kept a very simple formula in front of me. When your economy is growing at around 7.5%, add to it inflation, nominal rate of growth around 12%. On the 12% nominal growth in the economy, if you end up getting 18% kind of a growth and an average for next 2 years in respective business, respective companies, I would consider that as a good growth which this company will manage. So from that perspective, I think would be very comfortable. As far as individual stocks are concerned, I think we have kept our focus on accumulating some of the companies which I think may give an opportunity during the corrected phase. The likes of Tata Technology, the likes of Bajaj Housing Finance, or for that matter, likes of Geo Finance. I think we believe that these companies have got inherent strength. The fundamentals are definitely, I think, in place. And we could possibly see, I think, the surge in earning after a couple of years in these companies because of the business plan that they are executing. So certainly we remain more positive on that front.
Amisha, India has now surpassed China when it comes to the MSCI Emerging Market Index. So I want to understand that going forward, how do you see India's global positioning for the next 12 months?
So I think that we continue to remain, compared to most other large economies, one of the most robust economy, both in terms of government balance sheet, bank balance sheet, corporate balance sheet, and individual balance sheet, which reflects into the virtuous cycle of growth that we all are into. And because of that, as you see, the internal financialization of savings is also continuously picking up. So it's a matter of time when I think that at a slight correction also, the flows which have gone out from India in the second half of this summer probably would start re-looking at India with a lot of vengeance. In the meantime, I would still take a call of continuing with quality stocks. And within that, I did maintain certain sectors where the focus should continue to remain.
Fair point. Vijay, let me come to you. we've seen a year where everything's gone up. You've seen gold giving a 30% return. You've seen real estate do very, very well. You've seen the stock market, of course, extremely buoyant. You've also seen tight liquidity, and you're seeing even bond yields temper off a little bit, maybe at least over the last quarter or so. They've gone down by around 25 bips. So some gains in bonds as well. This is unprecedented. What explains it?
Well, yes, we've had a kind of dream run in practically every asset class. And, this is at times too good to be true. I think that markets, if they are correcting or they are consolidating, I would be really happy because, this unusual valuations, stretched valuations are not sustainable. And I think that, there would be pockets of excellence, as I said earlier. And the research work would definitely go up, and making money in the markets won't be that easy in the next couple of years. Now, the companies have to show a good balance sheet. They have to show a lot of fiscal discipline, so to say. And yes, the men would be separated from the boys. But yes, for sure, as I said, I think that the government should plan to leave more money as in the hands of people as disposable income so that they can spend.
Okay, absolutely. Devinbhai, let me come to you. Are you also of this view that policy needs to get better this year? Tax or otherwise?
Yeah, I think the governments have the habit of playing around with the tax rates, and I think they continue to do so. So we have to neglect that part of it to a certain extent.
Right.
Not that I think we would give up on that. I think we definitely represent our views, but I think they have the habit. For example, in capital market segment, I think they charge instance of tax, 5 different places. It's unwarranted, but I think somebody should go and tell them that I think this is not required. Now, having said that, I think whether they want to listen, that's a good question to ask. But nonetheless, I believe that I think this argument can not stop. I think it can keep on going. As far as we are concerned, I think our job should be to keep looking at the opportunities in the market, keep producing return for investors, and sustain this entire momentum over a longer period of time so that you can get compounded rate of return in your portfolios.
All right, we've already taken top picks from Devinbhai already. Amisha, your top picks Diwali, or let me put it this way, your cracker stocks for Diwali this time, and why, of course?
So I think I would go by these 5 names. I like Divi's. We as a house PL like Divi's, Trent, Praj Engineering, HDFC AMC, and Tech Mahindra. And I'll tell you one-liner for each. Divi's in last 2.5 years, post the COVID peak, had their earnings slashed down, profits by almost 50%. So there's going to be a huge base effect. Business is robust and growing. When it comes to Trent, they have been doing really well in all their formats, and their new launches are also very, very attractive. So from consumer opportunity size and their ability to penetrate, they are extremely well placed. Praj has its own significant technology advantage, and in the growing market of renewable fuels, they are having 65% market share in the engineering plants. And with their new strategy, I think they will continue to grow extremely well, both domestically and in exports. Tech Mahindra is one technology play which we think should be in the portfolio as the gears change in the IT side of the business. And HDFC AMC, because their robustness in their performance of the schemes, translating into the inflows, net, and in turn, completely net profit conversion into free cash flow is phenomenal. And in these markets, I think such stories can do really well.
Vijay, your cracker stocks for this Diwali and why?
I would name 3 companies, starting with Hindustan Zinc. So Hindustan Zinc primarily is a flagship, one of the flagship companies of the Anil Agarwal Group, Vedanta Group. They still hold about 64%. and the government of India holds about 30%. So the public float is lower than 3%. So I think that is a huge opportunity as there is a low public float. The company is extremely profitable, still trades at a price to earning of 24, with an MCAP of upwards of 2 lakh crores, a debt of only 14,000 crores. The other company I would like to recommend here is Hindustan Aeronautics. Again, a great company lately. And they've been working and doing a lot of R&D on the new product lines. So Tejas has been a fantastic product for that matter. It's a single jet engine, used in Air Force and Navy. They've received orders from various countries, the smaller countries who cannot afford the Rafales of the world. They cannot go to US, France, and other countries. They definitely turn their eyes towards India and see that what they can buy good airplanes at a cheaper price. So they also have HAL Dhruv, which is a helicopter used primarily right now in Indian Army, and HAL Rudra, which is a light helicopter. There are not many lightweight helicopters available now as options. So they have these few good products in their pipeline, and I think that the stock can do very well in the coming 1 year. And finally, as I said earlier, that the rich are getting richer. So DLF is my pick in the real estate space, and I think that they've done again a phenomenal job with launching a very super great ultra luxury project. So one of the projects they're launching is the Dahlias, which is nearby Camellias, which was one of the most expensive projects they've launched till date, and it is much higher, 25 times more in value than Camellias. So they're going to garner a sales value of close to 35,000 crores. So these three stocks I like as Diwali cracker companies, cracker stocks.
Okay, we've kind of put it all together in terms of stocks which are cracker stocks, but Devin bhai, crackers can also cause their fair share of injuries. So which stocks should you avoid?
Well, I think the list would probably go endless, but the fact remains that I think you will probably keep a close eye on, I think, those companies which are exuberantly valued. And there are plenty of them, unfortunately, in the market. Those who cannot probably meet the growth and probably their value reach, they are the ones who are likely to disappoint the market big time. Also, one of the point why it would be, because I think the market is going to be into the rotations. We are having plenty of new IPOs coming into the market. So certainly an investor would like to offload part of his existing investment portfolios, put money into IPOs. That process is also going to continue on the side. So reach valued companies certainly be prepared for disappointment going forward.
Okay, so stay cautious, but at the same time, there's plenty of opportunity. That's how I conclude it. But thank you so much, all three of you, for joining us today and for giving us your perspective with regard to how you believe markets are going to go, as well as what stocks to look for in this otherwise range-bound expected market. Thank you so much, and thanks viewers for tuning in. From Mahima, myself, everyone who puts the show together, thanks so much for watching. We hope you found this one productive, and wishing you and yours a very happy Diwali from all of us here.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth
and spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
let money work for you
and light up your future with prosperity. Let's celebrate growth,
wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Hello and welcome. You're watching Hot Money on NDTV Profit. I'm Harsh Saita. With me is Varsha Chandnani, and we both, as well as the entire team here at NDTV Profit, wish you and yours a very, very happy Diwali and a very prosperous New Year and a happy festive week. Of course, markets in fine fettle, cheering a very, what's going to be a very bright Diwali, hopefully. 1.25% higher on the Nifty 50. So you're doing fairly well. We're just off the day's highs, but clocking new highs, or rather breaching the day's highs as we speak as well. Let's quickly pull up the contributors, see which ones are contributing to the index. On the Nifty 50 itself, 4% now on ICICI Bank, the top gainer on the Nifty 50. Reliance Industries also has made a good move, or nearly 2% higher, and therefore aiding the Nifty. So those two really carrying the Nifty ahead. There's also M&M, which is doing fairly well in trade, 4% higher on M&M as well. So those are some of the movers. Shriram Finance, we can pull that stock up 6.5% higher on the back of very solid numbers. Very different from what we're seeing in terms of the other PV and CV financiers, and that's why you're seeing that reaction on the counter, 6.5% higher. IndusInd Bank, after that 19% lower move on Friday, is up 3 to 4 odd percent as well. So you're seeing some good moves within Nifty 50 companies. What's not doing well? Nothing major. Coal India is down 4% on the back of poor numbers. That margin miss hurting the stock today. But outside of that, on the Nifty, no major stocks on the decline, and that's a positive. Let's look at the advanced decline very, very quickly before we go on to our first guest for today. The advance decline, there you go, just getting better and better as the day has progressed. Now we are at 500 declines to 1660 advances. So the breadth of the market after that initial bit of whipsaw has seen a steady positivity, and that's what's reflecting on the small and mid cap indices as well. 1.5% odd on the small cap as well as on the mid cap, just about 1%. That's how it's essentially playing out. But let me quickly bring on board Vikas Maheshwari, who's the Group CFO at Rainbow Hospitals, to talk to us about the Q2 numbers, also get a sense from him as to how things are playing out. Welcome, Mr. Maheshwari. First off, I want to try and understand from you. You've grown well in Q2. That number not reflecting on your RPOB. What's happening there?
Yeah, thank you for inviting us and wish you and we are a very happy Diwali first of all.
Wish you the same, sir.
So the if you know is a pediatrics and the mother care hospital, first of all you have to understand that. And RPOB is the matrix which may not be a right matrix to judge the performance, because there's the multiple parameters which comes into it. Is ultimately is a derivative where the pair mix, case mix, and plus the alloys which can change the RPOB overall. So in this quarter, the pediatrics business, because of the seasonality, it was much higher. Plus our alloys has also gone up somewhat. So what is important in our business to monitor our growth and to judge the pediatrics and the mother care hospital is that how much is the IP and OP volume is growth and the occupancy. I think these are the two right metrics to judge us as because we are the only hospital in India which is more of pediatrics and the mother care hospital and the listed. So our metrics to judge has to be a little different because of little bit seasonal business which comes on the pediatric side, which is the September quarter, which is the more busier quarter for us. And then it's slightly tapers off as we come to the December and the March quarter. So I think the metrics which we should be judged is the occupancy, the revenue growth, and on the profitability side.
Well, Mr. Vikas, hi, this is Varsha. So let's talk about the occupancies then. So there has been increase quarter on quarter and year on year increase when it comes to your occupancies. I believe that this has been driven by the new capacities gaining traction. Now, what is your target when it comes to peak occupancy levels? Where you want to take this to?
There's a very right question, Prachi. So what we say is that since we keep adding the capacity every quarter, every year, we are adding the capacities. If we don't add the capacity and we leave that business as it is, we can target up to 55 to 65% of the occupancy. On an average, 60% occupancy for our matured hospital is a good occupancy levels, because in our case, there are the 2 or 3 parameters which is slightly different than all the other listed hospitals which is mostly on the adult care hospital, multi-specialty hospitals. In our case, what happens is loss is very less. It is between 2.6 to 2.7 on an average, whereas the multi-specialty other hospitals on an average has the loss of 3.5 to 4.5. So our throughput and the turnaround is much higher. So we drive our revenue profitability based on our throughput and the efficiency in terms of the bed rotation. So in case of pediatrics, if we can do on an average of 60% occupancy, I think we will deliver the same type of results which other hospitals will deliver at 75% occupancy.
All right, got it. So in that case, now let's talk about the revenue and some, a bit of financial numbers. So are you maintaining the guidance of the anticipated revenue growth in the late teens for FY25 that you have been guiding us?
Yeah, so for FY25 for the first half, we have already delivered good growth in terms of the revenue, and we continue to maintain our guidance for the current year that definitely we should be, whatever the trend we have seen in the first half and the current month, we should be able to maintain the mid-teen to high teens growth. What we should be, just since we are adding a lot of capacity in the coming years, which we have listed in our presentations, based on the existing units growth plus the new units growth. What we strive internally is that we should maintain 15 to 18% CAGR growth over the next 3 to 5 years time.
On that bed capacity, so you had a goal of adding 1,000 beds by FY27. Are you still on that track?
Yeah, we are absolutely on that track. So we have in the last year we have started 3 hospitals. We have added the capacity, and then whatever we have planned, I think Rajmundry Hospital is starting by March of coming financial year FY25. By March we will be adding, and then 2 hospitals at Bangalore and one regional hub hospital at Coimbatore is on track, plus our Gurgaon facility, which we have anticipated to come by FY27. There may be a 6 months delay because of the government approval. So by next 6 months delay, whatever we are anticipating, we are on the track to achieve 1,000 beds, whatever we have listed at the time of the IPO. And then as we have discussed multiple times with the investors, we are on track to add that. We have a very healthy balance sheet. We have a cash of 580 crore rupees in the books right now, and our cash generation is very, very robust. So we don't expect to borrow anything from the financial institutions. Our balance sheet will be able to take care of whatever the expansion plan we have listed.
Right, I want to quickly follow up on the guidance piece, right? You've guided for around 18% odd growth, but you're doing 25. You believe that there is a possible upside to the guidance, at least this year?
So is a right question. So what we have to be just that, if you go 1 year back, FY24 was very muted year. So based on that low base, you are seeing the higher growth. But if you go 1 year back, FY23, from there you will see our growth is 15-16% CAGR. So in case of business, one season or 1 quarter or 1 year can go bad. But what we are trying to strive is that next 3 to 5 years, we should be able to maintain 15 to 18% growth.
No, understood. Okay, that makes a lot of sense. And where should margins therefore lie for you? There are, of course, various moving parts with the kinds of hospitals that you operate, and therefore a margin, current margin, sustainable or not?
Is a very right question. So for us, the limiters test was the first quarter and the second quarter, because in the March quarter of last financial year, 6 months before, we have added 3 hospitals. And in case of hospital, the cost comes first, the revenue comes later, and the EBITDA comes little later. But I think because of our brand name plus the cost management, we have been able to maintain the EBITDA margin. Whatever our effort is that whatever the EBITDA margin we have shown for the 6 months, we should be able to maintain that. We are not looking for any increase or variation in the EBITDA margins. What is our effort is that to maintain those EBITDAs going forward, because a lot of capacity is getting added. There will be always some cost pressure on that. So our effort is to maintain this plus minus 1%. We should be able to maintain that EBITDA margin.
Also, Mr. Vikas, so coming to your capex plan, so are you going to add any greenfield project or brownfield project? Because if greenfield project is in plan, that may have dent in your profits.
So our business model is always on the lease rental model. We have right now 19 hospitals. Out of that, 18 are on the lease model. Is only 1 hospital, which is Vizag, is on the rental. Whatever the other hospitals like Coimbatore or in Bangalore, 2 hospitals, Rajmundry is also on the leased model. The only exception which we have made and gone ahead and doing the greenfield project is Gurgaon, and it made a lot of sense because the type of building which we wanted, the rental cost was very high, and the space which we get for the hospital we were not able to get it. After a lot of efforts, we invested a lot of time and efforts on that, we could not get it. Then later on, we decided, because it was not making commercial sense to go on the leased model, we have bought the land from the HSBP in the auction, in the competitive auction. We have got the position of the land. We have applied for the approvals, and then we'll build the hospital. Obviously, any greenfield projects, if the company is taking land and building on their books, there will be some impact on the ROC, but it makes a lot of sense for us. Once we were in the drawing board and board discussion, etc., it made a lot of commercial sense to go ahead for the greenfield project for those Gurgaon projects.
Okay, thank you so much, Mr. Maheshwari. It's been a pleasure chatting. Of course, somewhere during this quarter, we'll also call you back on the Smith Show, try and get a better understanding of how things are playing out for you. How should we look at you from a medium-term perspective? But thank you so much for coming in.
Thank you very much. Thanks very much.
Right. And also wishing you a very, very happy Diwali. Anyway, let's switch focus. Financials into focus. That's the one segment which is doing very well in trade today, or rather has moved. You've got a Bandhan which is up 9%, and then you've got an IDFC First which has taken a bit of a knock on a day like this. But let's go in and speak with the management, or rather we have spoken with the management of Bandhan Bank, reported a 31% uptick in profit. We spoke to MD CEO Ratan Kumar Kesh on the quarter gone by. Here's what he had to say.
So if you see, our overall slippages have gone up from something like 890 crore to 1110 odd crores. Large part of that is coming from the EEB portfolio, which is the microfinance sector. Roughly around 750 is from the EEB, and the rest of the portfolio is contributed to the remaining one. Retail is still holding up. Retail is just about the same level. Not much of slippages that you see. In the microfinance sector, while we've been improving significantly over the last 4 to 6 quarters, the overall over-leveraging and the overrating in the industry does have an impact on our portfolio as well. While in our portfolio scrub, we see that 60% is unique to Bandhan, 80% is Bandhan plus 1, Bandhan plus 4 and above is just about 4.5%. But given the fact that there are a lot of guardrails are now being applied, including the SRO guidelines of 4 plus borrower to be watchful about, these do have some rub-off effect on us. Having said that, we are fairly clear that our credit cost guidance for the year will continue to remain at 1.8 to 2%. Our belief is that quarter 3 will remain elevated in terms of slippages. However, quarter 4 onwards, things should turn it around. In fact, in October itself, we are seeing better offtake. At least the collection efficiency of the regular bucket has improved. And therefore, we are fairly confident at this stage that we should be able to hold on to our overall annualized credit cost guidance of 1.8 to 2%.
So you spoke of elevated slippages. Just wanted to understand of the total slippages, how much of it is coming from the MFI space? If you could just throw in a number for us.
As I said, of the 1110 odd crores, 750 is coming from EEB and rest all from the other businesses.
Okay. And so going forward, your asset quality, as you spoke of over leveraging of borrowers, so just wanted to understand going forward, how are you planning to contain your asset quality?
So as of now, if you see while the overall lending book, the advances have grown by 21%, but the EB book has grown by 10.6% on YOY basis. In fact, on quarter-on-quarter basis, the EB portfolio, the microfinance book has seen a degrowth of 4.2%. Now, our current focus is essentially to hold on to the portfolio quality, improve collection efficiency, and in specific pockets, we have taken few more guardrails. Not only that MFIN guideline, but even tightened that over and above that. We have also upgraded and taken higher bureau score cutoff for some of the specific geographies and parts and pockets and banking units. So we will continue to maintain that. As you know, and probably we have told in the last quarter earning call that we are the only company of such scale to have dedicated credit underwriting team in the microfinance sector. And therefore each banking unit has a dedicated credit officer who is evaluating independently. And also we are implementing a state-of-the-art collection system. Some of these should help us improve our portfolio quality going forward.
So, wanted to understand, you spoke of collection efficiency. It has fallen marginally, during this quarter. Could you, going forward, I just wanted to understand what is the ticket size of these MFI loans that you are seeing, and do you expect any spillover effect because of over leveraging of borrowers that is happening on ground?
So the ticket size, our ticket size remains in the range of roughly around 55,000 or 55 to 58,000 range. That ticket size did not change per se, but collection efficiency, if you see West Bengal, being the largest geography for us, we are still holding at 99% thereabout. Our rest of India collection efficiency has gone down by 1 percentage points. And there specifically, we are seeing some stress in parts of UP, Maharashtra, parts of Rajasthan, Gujarat, and a bit of Odisha. So that once we see the stress is building up, we obviously are going more granular at a banking unit level. We do focus on recovery rather than growing the book. So we'll continue to maintain that focus clearly.
So what is the overall strategy of your loan book? Are you planning to change the composition of your loan book, given that most of it depends on MFI and retail space, where you are actually seeing stress?
See, even in this quarter, if you see, my secured book has gone up from 42.9% to 47%. So our stated strategy is to move more secured. So therefore, while micro book will grow at 10 to 12% depending on how the market behaves, quarter 3, quarter 4 are generally better quarters for us. So micro book will still grow at 10 to 12%, as I said. But the retail has grown 90%, commercial 40%, and housing has grown 17%. Now, some of these products in the more secured book will continue to grow. So we will grow the secured book.
Okay. And you have a large presence in Bengal and, nearby states like Odisha. Given we spoke of over-leveraging, do you plan to change, your geographical presence in some of these areas? Do you plan to increase your presence in some other states as well?
See, it's not just for the current industry problem that we are witnessing. As a stated strategy, we have been doing a whole bunch of diversification. So therefore, if you see overall the microfinance business, share of microfinance business in the overall book is coming down, and the secured book is going up, number one. Number two, West Bengal and East is coming down. But as I said, West Bengal and Assam are doing extremely well for us. So while we will continue to grow in West Bengal and Assam, including some of the other geographies which are doing well for us, we clearly would like to see diversification as the market trends upwards, and some of the problems which we believe are more transitionary, once some of the problems go off, we will continue our diversification both geographically as also product-led diversification will continue.
All right, Bandhan Bank doing fairly well in trade today. Let's pull that stock up before we wrap this edition of Hot Money. Stock obviously doing very well on the back of the kind of numbers it's posted and the kind of valuations it's trading at. CLSA, for example, expects a target price of 240 rupees a share on this one. But before we wrap this edition of Hot Money, listen in to Hero Enterprises Group President Jogendra Singh's address at NDTV Real Estate Conclave. Listen in.
Very important for us has been relationship. And relationship is truly the cornerstone of the Hero Group. Hero Enterprise prides itself on, sometimes we say EQ is more important than IQ, right? Many times, when there is a change management issues that come in, whenever you come up with a new project, a new process, a new, anything new. And there are a whole lot of problems that come along with it. And when people come to me and say, what do we need to do? He said, there are only 3 solutions to that. People, people, people. You just take care of people and they will take care of whatever problem that come on the way for you. So this has been the cornerstone for the Hero Group. And that translates into all our projects. When we go for real estate, we have always said there are 4 cornerstones of our 4 pillars. We talk about community first. We make homes for people to live in, to live their dreams. A house is built by, girders and beams. A home is built by aspirations and dreams. So that is what really we need to do, and we are trying to do that. Second thing is creativity. Our brush with creativity, arts and culture, especially Mr. Sunil Kanmunjal, who runs a few not-for-profit entities which deal with arts and culture. It's called Serendipity Arts Foundation, and a new enterprise that is coming up is The Bridge, which is a physical cultural space that is being built currently in Vasant Kunj. Creativity becomes the second cornerstone of our value. The third one is fitness. We want to give spaces where physical fitness, mental fitness is given priority. Everybody should talk about physical fitness and mental fitness, and these two things are, the most ignored things in our society today, with the kind of stresses that we are living in. Absolutely important that all of us give a lot of importance to both of these, physical fitness as well as mental fitness. And fourth and very important thing is sustainability. Sustainability has been the Indian ethos from time immemorial. We have said, Pavan Guru Pani Pita Mata Dhart Mahat. Or we say, Mata Bhumihi Putro Aham Prithivya. So we are talking about people, profit, and planet in the same spirit, in the same breath. We talk about taking care of air, water, earth at the same time. And this has to be part of our DNA. It has to be a part of everybody's DNA. And real estate especially, it's very important that we all embrace it with a complete right spirit. And that is where we would create a planet, create a place that is not only livable today, but we would be transferring this to our future generations also. We will be transferring this planet to our future generations, as well. While we talk about this, the other aspect that we have to really think about is the impact of technology that is coming up on our lives. We talk about artificial intelligence, Gen AI, etc. These have gone beyond being buzzwords. And it is very important that how do we bring these into our daily lives? Mark Anderson made a very famous statement then when he said, software is eating the world. And today, I think the same thing can be said, products are eating the world. If we create those products with the kind of technologies which are available with us, which are livable, which are smart, which are sustainable, that is only when we will be able to transfer our legacy to future generations. So friends, the real estate, today is absolutely on the cusp of leapfrogging, from where we are, especially when we talk about doubling our contribution in the GDP of the country. It is very important that we embrace all of these kind of principles, and these principles are primarily nothing but common sense. These principles are time immemorial. So therefore, let us all embrace these principles and bring out a hero in each of you. And as I always say, once a hero, always a hero. Thank you very much.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens. as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey
towards happiness.
1, 2, 3, 4.
this festive season.
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
Wealth
and true happiness.
Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours. When the whole day passes like a blur,
The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a quick look at where the markets are at first. Well, for those hoping for some positive cues on the markets in Diwali week, we're off to a positive start. We did see some intermittent weakness closer to the start of today's day of trade, but we're currently up by about 1% on the Nifty 50, clocking gains of about 240 points, and we're currently hovering close to the 24,400 mark. Now, on the Sensex as well, we're up by over 1%, clocking gains of almost close to 900 points and hovering close to the 80,300 mark. Let's take a very quick look at the key contributories of the Nifty 50. Now, among the top performers, we have ICICI Bank that's contributing almost 80 points to the benchmark index. M&M, TCS and Shriram Finance are some of the other stocks that are lending support. In terms of the key losers, well, it's HDFC Bank on the top, with Axis Bank, Kotak Mahindra Bank and Coal India that are among those that are adding some weakness to the benchmark. Well, on the broader markets as well, there's not much to complain about at all. We're looking at gains of almost 1% on the Nifty Midcap 150 after a week last week, and on the Nifty Small Cap 250, we're up by over 1%, closer to 1.2% currently. With that, let's head straight to Mr. Devansh Jain, Executive Director at Inox GFL Group, who joins us to discuss the company's latest numbers. Mr. Jain, thank you so much for taking time out to speak to NDTV Profit today.
Hi, good afternoon. It's a pleasure to be on NDTV.
Well, to begin with, it's a good set of numbers we're looking at. Any thoughts, any reflections on the quarter gone by? And also do take us through your margin guidance that you've upped for the coming quarter.
You know, I think we're extremely happy, satisfied with the performance this quarter in terms of what we had guided, in terms of the path we had set out on over the past 6 quarters. It's a very happy moment that we've turned cash positive. The company is doing very well. I think quarterly we're getting stronger and stronger. Over this quarter has actually been the highest, in terms of financial performance, has been the best financial performance in terms of Q2 in the past 8 years. Our revenue was up about 93% compared to the same period last year. Our EBITDA was up 171%. EBITDA was at about 189 crores compared to about 70 crores. And we turned significantly PAT positive. PAT was at about 90 crores compared to about 27 crores of losses in the same period last financial year. I think as we move forward, we have said that Q3 and Q4 should get larger and stronger for us. Typically, H1 is slightly leaner compared to H2, given the seasonal impact of monsoons on this business. So we are very bullish. We're very excited about the quarters ahead. In terms of margin guidance, look, I think what we've done in Q1 and Q2 was typically about 21 and 22%. While we had guided for overall about 15% margin for this financial year, we believe that for the full financial year, we should be at about 17%. So we've upgraded guidance by about 200 basis points. We've done that keeping in mind that effective some of the strategic actions which we've taken, such as backward integration into our own cranes, as well as strategic manufacturing of certain critical components and tolling, we believe our margin should expand to about 17% this year. For FY26, we would expect that to potentially go up, but I think we'll keep that guidance in abeyance for the time being. We'll probably come back to the market as we move forward.
Good afternoon, Devansh. Mihika this side. H1 execution stands at around 200 megawatts, but the FY25 full year target, 280 megawatts, but the full year target is still at 800 megawatts. Is the company confident on hitting this target? But this is only 35% of the execution target that's currently been executed.
If you've heard the commentary earlier, Mihika, I think we've said typically H1 is about 30 to 40% of the full financial year. So first and foremost, we're bang on. We're well on target to achieve our full year guidance. If you look at the ramp up in execution from a megawattage percentage perspective, our ramp up has been almost 90% year on year. Quarter on quarter as well, there's been a continuous ramp up compared to the last financial years, of course. Q1 and Q2 are typically broadly the same. But don't forget, Q2 is peak monsoon. And we've been able to do these volumes, particularly in a period where this year Gujarat was fairly intense. I must say the team has done a phenomenal job. But yes, we are bang on target. And I think, as we've said for FY26, there's an upward bias towards, upping the guidance from 1200 megawatts to something more. For FY27, as you know well, we have guided for 2 gigawatts. We expect the market to get to about 8 to 10 gigawatts and potentially do much more as we move forward.
Devansh, afternoon, Neeraj here. Devansh, is this realistic? Is this conservative? Or is this an optimistic execution guidance? Because, capabilities notwithstanding, the execution targets are tall. So is this realistic or is this optimistic?
Look, Neeraj, I think we're being realistic here. I wouldn't say we're being conservative, and I would not say we are being aggressive at all. Having said that, if you look at what the government wants, typically they would want about 16 gigawatts to achieve the 350 gigawatt target which you set out, or the 125 gigawatt wind target which we have. We believe the market should be about 7 gigawatts next year, and in the following year, FY27, we should get to around about 10 gigawatts. If we do that, I think volumes would be far larger. I think the government is walking the talk in terms of taking all the right actions to resolve issues around transmission, connectivity, giving a global pitch for renewable energy. So, give or take a quarter, 2 quarters, 6 months here and there, I think I am optimistic that the government is walking the talk in terms of the larger vision which they have.
Other question, Devansh, is on the order winning and the nature of the order winning as well. Would you so 3.3 gigs is a good order book or a great order book, highest for you. what's the pace of execute or order book winning that you envisage in the second half, if you will, or the next 12 months, if you will? And would you, I don't know, I'm just asking this, would you move to having a larger pie of execution plus O&M kind of orders, or you are not really trying to do that or follow that model necessarily?
Let me answer the first question, then I'll come back. Look, I think over the course of this financial year, we've added about 1.2 gigawatts of orders so far. We have a very, very strong order pipeline. I think we're in discussions across some of the largest IPPs. We're participating in multiple PSU bids. There are a lot of C&I discussions going on. I would not quantify the order intake which we expect over the next 4 to 5 months of this financial year, but I think it should be fairly healthy, such that we should be exiting this financial year with the highest ever order book we've ever had, number one. Number two, I think in terms of the coming financial year and so on and so forth, we would continue to expect to pick up significant orders, more than what we have been executing every year. I mean, of course, at some point in time, it will peter out, because the longest order book you can get is about 24 to 30 months, since that's the longest lead time you get to execute. I am talking of firm order books here, Neeraj. I'm not talking of LOIs and MOUs, because, that could be fairly unlimited, but that's not something which we would like to factor in. Your second question was, I'm sorry, Neeraj, your second question was around turnkey versus equipment supply, right?
Yeah, and do you get into a combined necessarily so, or you're not kind of focusing there?
No, look, so what we're trying to do is, it's not O&M. Effectively, primarily, everybody would like to give operations and maintenance to the OEM, because we control the spare parts, we control the entire supply chain. Unless you are really big, if you're doing more than a gigawatt a year of a single turbine type, potentially it makes sense. But I would say it's absolutely non-core. It makes no sense for anybody really to take that in-house. It's not very rewarding, unless you're the OEM yourself. I think what we are focused on is we're guiding for about 50% of our orders to be turnkey, which means the supply, doing the foundations, erections, the land, connectivity, and we would expect 50% of the orders to be plain vanilla equipment supply. Currently, our order book would be roughly 60% turnkey and 40% equipment supply. But, give or take, the broad guidance is to be at about 50% turnkey and equipment supply. And broadly, all of these are with O&M coming back to us.
Okay. And, just to understand the kind of potential order inflow that we could see in H2, RTC, FDRE, hybrid kind of projects, all of the share of these projects have been rising in government tenders. So maybe if not for the company, but the industry as a whole, how much of more order inflow for pure vanilla as well as hybrid for wind do you expect?
See, we've had about 12 gigawatts of ordering happen over the course of this financial year. This is across wind, plain vanilla wind, FDRE and hybrid. We're seeing more and more hybrid and FDRE. That's the name of the game now. And what's already in the public domain is about 10 gigawatts worth of tenders across the entire ecosystem. Obviously, Q1 was a little slower given it was election year, but I think there's a lot of pent-up demand. Power is growing exponentially. I think that's a larger macro call. But I think there's just so much tendering, so much C&I, so much capital requirement. It's more a question of how much can be supplied and how much can be executed. But as I mentioned, 12 gigawatts already done, 10 already in the public domain. The government is talking about, as I mentioned, 10 gigawatts of wind, and about, potentially that could be a mix of FDRE hybrid. But I would say at about 20 odd gigawatts of FDRE hybrid and RTC, that's a very, very large quantum which is out there.
Devansh, one final question from my end. Now, everything else is known. I mean, your balance sheet, pristine shape, you've got that 2,200 crores of consortium lending signed up on the strength of your own balance sheet. So all of that is great. I would love to understand, as you look forward the next 18 months to next 36 months, let's say, would you go up and down the value chain, forward and backward integration? Because I saw, right, for example, Resco Global raising some equity helps you in presumably a bunch of things, and that is a bit of a forward or backward depending on how you look at it. Are you looking to do more of such things as you grow in size?
Yes, Neeraj. As we move forward, there will be more announcements, there will be more communication. we're looking at the entire spectrum of the energy transition play. At the Inox GFL Group, we are probably one of the deepest green energy transition conglomerates. We recently announced one of the largest fundraisers in the EV space in GFCL EV. And across the entire renewable arm, be it Inox Wind, be it Inox Green, be it Resco, which is our EPC arm, and going forward, even Igrel Renewables, our IPP arm, we are looking at capturing the entire spectrum. And that's going to entail a lot more forward and backward integration into EPC, solar as we move forward, wind, of course, we are very, very large, O&M. So there'll be a lot more news coming out from the renewable arm of the Inox GFL Group.
Devansh, last quick question about the merger scheme which got an approval in Q1. What's the update with the amalgamation process?
Look, so, the hearing was on the 24th of October. They were short of time in NCLT. You know how NCLT functions. So the next date is 8th of November. From what I understand from the legal fraternity, that should be hopefully the end of the journey there, and we should be getting an order out thereafter. As you know, we've had all the necessary approvals from the stock exchanges, from the bankers, from the creditors, from the shareholders. From our perspective, it's primarily an administrative job which is left. But effectively, we are driven by the speed and pace of NCLT. But I would expect in the next 2 to 3 months, the order should be out.
Out on the amalgamation scheme in the next 2 to 3 months. But thank you, Devansh, for joining us and speaking about the quarter went by and the outlook for the future. And we wish you all the best.
Thank you so much, Mihika.
Well, that was the management of Inox Wind for you. And I want to highlight Ambuja Cements, which has just posted its Q1 results. On a standalone basis, revenues have seen a 6% uptake and have beat estimates, Bloomberg estimates, by 7%. And this is despite the cement pricing environment being weak pan-India this quarter. EBITDA is down but has beaten estimates. Margins stand at 16.15%, which is higher than the estimate of 13.3% of Bloomberg. Net profit is down but has beaten estimates by more than 30 to 40%. Now, EBITDA was impacted by a 71% annual rise in purchase of stock in trade, but the power and fuel costs of the company are down 17% on a year-on-year basis. The freight expenses have seen a 2% downtake. Sales is which is one factor that supported the revenues for the company, despite it being a seasonally weaker quarter for the entire industry. Sales are up 9% annually to 14.2 million tons. Q2 volumes were actually the highest volume in a Q2 series in the last 5 years. When you talk about the outlook going ahead, where they expect a boost in demand starting H1 of 2025, they've mentioned the introduction of the PMAY Urban Housing 2.0 with the allocation of 11 lakh crores, along with the government's continued focus on infra development as key economic growth drivers for the cement sector as whole. Ambuja has also placed strategic investments in roads, railways, along with the urban commercial entities. All of these investments by the government is poised to, drive robust growth in the sector, and the company expects FY25 demand to grow in the range of 4 to 5%. But we now move on to ICICI Bank, Pallavi.
Absolutely, that's another stock. Ambuja, of course, quite a bit of a positive surprise, especially given the whole seasonality factor, Mehika. We're seeing the stock race up. It's up currently almost about 5%. But like you've mentioned, another stock that's performing particularly well in today's day of trade, given the on the back of its results, is of course ICICI Bank, that's reported a 14% rise in net profit for the first time since the September quarter to over 11,700 crore rupees, beating analyst estimates. Harsh joins us with the key takeaways and what the management commentary was. Listen in.
Well, extremely strong on the asset quality as well as on operating efficiencies. Both of those came in above what analysts were expecting, because OPEX has tapered on a slightly higher base. You're also seeing that asset quality in a tough quarter has remained surprisingly resilient. In fact, 1,450 crore is where the provisions number that we were anticipating versus our poll was standing at. It's come in well below 1,300 crore, which means that it's almost a 10 to 15% outperformance right there on that count. And that's led to, of course, profits being slightly above expected. And despite the NIM compression of around 9 basis points from 4.36% to 4.27%, you're not seeing that knock on ROAs, which has held up very, very well at 2.4%. Now, within private sector banks, that's the highest ROA among all the major private sector banks, and in a very tough environment. Deposit growth has been strained, where deposit growth has been at 5% sequential for ICICI. Loan growth has started to taper for a lot of banks, 4% sequential loan growth for ICICI Bank. LDR has been elevated. For ICICI Bank, LDR is shrinking this quarter. So across metrics, you're seeing a very robust performance. On the back of that, stock warranting that 4% jump in trade today.
All right, thanks a lot for that, Harsh. And keeping up with, the earnings season, we're also in conversation with Dhaval Ajmera, Director at Ajmera Realty and Infra. Now, Ajmera Realty's Q2 numbers, the net profit came up, was up 58.5% to 36.3 crore rupees. Revenue was up 37%, and Q2 collections for the company rose by 20%. So, Mr. Ajmera, thank you so much for taking time out and speaking to us. So what are you making of this set of numbers, and also what's the outlook for the second half of the year? Tell us a little bit more.
Well, the second half is firstly, we've been very excited and happy with the way the company's been performing over the last 6 months in the year. The next half is also looking exciting. We have a couple of project launches. We have some existing projects which are consistently doing great sales. So overall, we are aiming towards achieving our targets of 1350 crores as what we've guided as advance sales in this financial year, and I think we should be definitely achieving that.
Hi, Mr. Ajmera, Anushi joining in. Can you talk us to some of the launches that we should be looking forward to in the next 2 quarters, and also give us a sense beyond FY25 for Ajmera Realty for the next 2 years? What should be the target in terms of pre-sales, collections? How is this growth expected to be, since you have a big capex plan also going forward?
So the next 2-3 years is really going to be big for us in the company. We have 2-3 of our large projects and many other projects coming up in a bigger way. And from our, we're still panning out the numbers, but what I definitely know is that from the numbers what we've given, we should be expecting at least 30% to 40% jump year on year.
Okay, so 30 to 40. Yeah, please continue.
Yeah. So that's where we are looking at, from 1350 crores, which we've given as a guidance this year. We are looking at least 25, 30 to 40 range in the next 2 years to come.
And also, can you give us a sense on the collections and the price growth also of the key markets that you are seeing? There have been reports suggesting that there has been a substantial increase in the pricing growth in the industry. So do you expect this pricing growth from the double-digit number to come down to a single-digit number? Can you talk to us about what is the sense that the real estate industry is seeing currently?
So, the pricing is also very much related to the cost of the apartments and the input cost, which has also been on a rise. But what I overall see is that there will be a price rise, but it would not be significantly, mainly to the demand, because there is an excessive demand, so the prices are going to be high, because every developer today is looking at having good volume of sales and removing the inventory so that the transactions happen properly. So I believe that over the next 2 years' time, there will be a rise, but it should be in the single-digit level, where it will be related to cost and inflation.
All right, Mr. Ajmera, that's all the time we have for today. But thank you so much for speaking to us at NDTV Profit.
Thank you.
And moving on, as the countdown to Diwali 2024 kicks off, we at NDTV Profit have been setting the mood for you with ground reports from across the country. Diwali means shopping for new items, and electronic gadgets are the hottest items this year. Here's a ground report from NDTV Profit's Ishan Rathi.
Seems this Diwali, new fridges, ACs and mobile phones are the favorite of Mumbaikars. Retailers are seeing sharp rise in sales as customers prepare to upgrade their homes.
So we are expecting the overall sales growth up to 30%. Consumer goods, something like AC, fridges. So they do they visit first and they do take the dimensions and they choose all the products for the new houses as well.
Walk-ins have surged thanks in part to attractive discounts and festive offers. Retailers are offering Diwali special bundles and extended warranties to lure customers.
पिछली बार ऐसे सीजन में फेस्टिवल में लिया था, फ्रिज लिया था, तो उसमें हमें 20,000 का डिस्काउंट मिला कम प्राइस में। जो MRP थी वो उसकी ज़्यादा थी, तो इसी हिसाब से हम ये दिन तय करते हैं कि चलो कोई डिस्काउंट रहेगा।
हम लोग टीवी परचेस करने के लिए आए थे, अभी टीवी पे हम लोग को 10-15 हज़ार का डिस्काउंट मिल रहा है, तो कोई भी सिंपल पर्सन ये पे परचेस करे।
But supply chain issues due to global chip shortages have led to limited availability of some products, pushing up the prices of high-end gadgets. According to data from Datum Intelligence, sales on e-commerce platforms grew 26% in the first week of October compared to the same period in 2023. Mobiles, electronics, consumer durables, and general merchandise accounted for 75%, with Tier 2 and Tier 3 cities contributing to over 70% of smartphone and TV sales. However, store owners say that they don't feel threatened by online platforms, as many customers like to try before they buy.
Indian customers are very much used to it. They want to touch and feel of the product, and then then only they want to buy. And we are running good cashback offers. We have good finance schemes. So all this mix really works for us.
From large showrooms to small stores to e-commerce platforms, everyone is hoping to make the most of Diwali shopping trends. With camera person Vishal Patel, Ishan Rathi for NDTV Profit in Mumbai.
And the stage is set for Maharashtra elections on November 20th, and as polling day approaches, the heat is building up in all camps. Worli in Mumbai is a hot seat, and in the last election, Raj Thakre's MNS did not put up any candidate from Worli, as it was Aditya Thakre's electoral debut. At the NDTV Marathi conclave, Maharashtra Ja Jahirnama, my colleague Yash Tiwari caught up with Sandeep Deshpande. Take a look.
That is a very big seat, because my fight is against the prince of Shiv Sena. So really it's a big fight. There is no competition about the resources, what he is having and what I am having. But we are with the people, we are very approachable. People do know us, we have done a lot of work. It's not that we are like Mr. India, that you put on the red button at the time of election and then appear on the stage and all these things. So we have worked hard for the last 5 years in Worli, because people are very unhappy. They are not able to approach the MLA, they are not able to talk to him. There is a hurdle race to meet him. So it's people are very unhappy. So people are with MNS.
Well, that's all we have on the show for now, but do stay tuned to NDTV Profit. Thank you for watching.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits. Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that Hello and welcome. You're watching NDTV Profit, and it's the run-up to Diwali, Profit Wali Diwali like we're calling it. The markets, of course, supporting that sentiment on the street today. All eyes will be in the festive season, and it is Dhanteras tomorrow. So keeping that in mind, we decided to make this show a special one where we'll tell you whether or not you should be adding and how much should you be adding gold to your financial portfolio. Well, over the next 20 minutes, I will try and assess whether or not gold looks like an asset class that one should aggressively invest in, or should it be just cultural in that sense. Joining me on the show are going to be Chirag Mehta, CIO of Quantum AMC, and Chintan Mehta, CEO of Abans Holding. Thank you, gentlemen, for joining us today on the show. Chirag, I'm going to start with you first. It is the mood for festivities. It's Dhanteras tomorrow. We all know as Indians, we will all want to go out and buy that one sikka of gold, if nothing else. But gold has become even more significant, especially after the run-up that gold has seen this year. It's done better than equity markets, to say the least. What are your thoughts on gold? And then, of course, we'll elaborate on how one should use gold to add or structure one's strategic long-term portfolio.
Absolutely. We have been natural buyers of gold, but the trends are changing in terms of not buying a sikka, but buying a gold fund. So we are seeing that change in trends. And when it comes to this year, I think it should be bought into. Because if you see the rally that we've seen in gold so far has been fundamentally backed. And we see no reason why many of those fundamental factors should not lead to more support for prices going ahead. So if you see what has led to the gold price is, one is, of course, geopolitical tensions, but speaking more fundamentally, it is related to the change in interest rate cycle that we are seeing currently. So as we see the real interest rates stabilize or go down from here on, gold generally does well in those time periods. There have been some headwinds for gold last year when you saw that interest rates were moving high and staying high for a longer time. Despite that, geopolitical tensions were supportive, and hence gold kind of stayed where it was. And this year, when we see more indications of interest rates cuts coming, we have seen gold prices move up. So we think that we are in a rate cutting cycle, which is going to be extended into the next year. And hence, gold will get support because of that. Second is, there has been a lot of central bank buying because there is losing confidence in the dollar to some extent. And if you see the share of reserves that central banks hold, the dollar share is coming down. It was about 70, 72% few years back. It's come down to 58% now. So, and where are they going? Given there are not many alternatives available which can absorb that much liquidity, it is going into gold. So lack of alternatives to move away from the dollar is also leading a bid in gold from these central banks. We don't see these trends changing, even in light of the dollar strength that we have seen recently from 100 to 104, 105, and also yields, strengthening from 360 to around 410, 420. Still, we have seen that gold is doing better. So from all these perspectives, I think there will be a support for gold prices going ahead. And probably the past bull runs that we have seen in gold, this increase hasn't been as significant or as high as what we have seen previously. Most bull markets have seen around, say, 4 to 5x increase in prices. This time it's just doubled in price from the lows of 2016 that we have seen. So overall, I think there are still more fundamental factors backing this price move, and I don't see them going away in a hurry.
Right. We also have with us Chintan Mehta who joins in. Chintan, we talk about gold at least once a year during this time, right? Just before Dhanteras, everyone is talking about gold and the outlook of gold. But the fact remains, as we've talked about it this year a lot more than we've done historically, largely because of the kind of performance that we've seen on gold prices. How do you feel about gold? Do you feel the outlook still looks very constructive? And I know while it has an important role in a strategic portfolio, tactically as well, is gold a good buy?
Gold, I see always a good buy. Over a period, if you see, that's what I was even telling one of our friend also. If you see from last 15 years, gold has gone up from 12,000 to 80,000 rupees, especially in Indian terms with the currency depreciation and the kind of geopolitical tensions going around in the Middle East. Plus, if you see fundamental change, what is happening is a currency crisis. Initially, what used to happen is USD was a king, but slowly, if you see, there are a lot of shifts from this. So ultimately, we have to decide what is the next reserve currency it can be. So gold and the Bitcoin are the two major component we can think, but gold has a larger history, proven history, a track record from a very long point of time. So I see gold in a current situation as a great buy, and it's in a good bull run. But once again, it has rallied from the lows of 2200 to 2700 in a no time. So it might take a little breather here, but in a long term, it is still a very, very good buy, and everybody have to have a chunk of gold in that portfolio. And I would say sizing should be sizable, not like before where we just have to be 4 to 5% on only our portfolio.
Right. Chirag, it's very tempting, as a woman at least, to go out there and buy gold jewelry instead of putting that money in a gold mutual fund or an SGP, right? But tell me, physical gold still qualifies as a strategic financial investment?
It does qualify as a strategic financial investment. Only problem with that is it's very inefficient. If you buy physical gold in any form, there are making charges associated with it. There are concerns on purity. There is storage and the chance of a theft that happens. So all those issues go away when you buy gold in a gold fund or a gold saving fund. I mean, an ETF and a saving fund, because you don't have to worry about purity. It's guaranteed. The kind of gold bars that we buy, it's 100% backed by gold. It's 24 karat gold again, which Indians like, and we stored in professional vaults and it's completely insured. So from that perspective, I think it's time that we differentiate between what is there for consumption and what is for investment. We wouldn't count anything left for consumption as an investment for you from a portfolio standpoint. So you can leave that aside, and anything that you want to buy for, investment has to be in form of which are very, very price efficient. In a gold ETF, you are buying gold at prices where tons and tons of gold get exchanged between a gold producer and a bullion bank. That is the efficiency that gold ETFs bring from a very wholesale level to a retail level. And we have seen in a gold market, right? The lower the denomination you go, the higher the premium you need to pay. Whereas in a gold ETF, even you're buying 0.01 grams of gold, which is virtually not possible if you go and visit a jewelry store or a store that sends coins and bars. Minimum you have to buy 1 gram. And the lower the denomination you go, the higher the premium you pay, which is not the case with gold ETF. Even you buy 0.01 grams of gold or you buy 1 kg of gold, you get the very wholesale prices when you buy it. So from all these standpoint, it's a really hands down winner when it comes to gold ETFs and gold fund. And I think gone are the days when those choices were not available and people were forced to buy physical. I think today we have plethora of choices which are very, very efficient, and hence you should go into those.
And I know with Quantum AMC, of course, is more than just a gold fund, right? You've got a multi-asset fund of funds. You've got some gold fund, the gold savings fund, and I'll talk to you about all of that, Chirag, in a minute. Chintan, how much % of one's portfolio should be allocated to gold? And I'm talking with somebody who's average age with an average risk profile. But the bias is to equities for wealth creation.
I think in a current situation, your portfolio allocation should be in a gold should not be less than 15 to 20%, depends upon what exactly the financial arrangement one has made, because gold has been given a good return, which was not the case initially, and it is a hedge against the other investment like equity, real estate. In case of difficult years, gold will outperform, and on a normal years also, with the kind of situation we are into, which is a downward interest rate, and the real interest rates are going to be for a gold would be positive, you know. So 20% is my punt, it's minimum, and I always have loved gold. And if you see the returns over a period of time in equity index, if I see, is around 13% per annum since inception, and gold would be somewhere around 8 to 10%. But the kind of comfort and the kind of the solidity which it gives, you know, it's tremendous. So I would say minimum 20% investment for the middle age and the medium income size.
Chirag, what are your thoughts on that? What percentage of one's portfolio should be allocated to gold? And also, do you recommend this to be done through an SIP, or should this be done upfronted or in lump sum investments?
So we have done some studies in terms of the more you add gold to your portfolio, what is the impact on returns and risk reduction that gold tends to bring. So we kind of added 5% to the portfolio, and about at 15% allocation, you don't impact overall portfolio returns. It just got augmented to some extent. And the risk reduction keeps happening with every 5% addition. So 15% is that sweet spot where you kind of add to portfolio returns and still reduce the risk of the portfolio by adding gold. Beyond 15%, it does reduce your risk, but you start compromising on the return potential of your overall portfolio. So 15% is that optimal level where you kind of balance out the benefits of adding gold from a risk return perspective.
So Chirag, in a case where somebody doesn't have any gold as part of their financial portfolio currently, what do you recommend he should do? Should he buy the 15% upfront, or should that the entry be staggered? Because we have seen gold up 33% year to date, right?
So I think, as I said, fundamentally, it looks good from a medium to long-term perspective. Short term, yes, there could be anybody's guess where the gold price are headed. Of course, it has moved higher, but we have seen those cycles, right? From 2002-3 to 2007, how gold moved up, and there was a brief correction in between, and then again it moved up. So you will see those cycles in gold, and this cycle looks favorable. So if you don't have any allocation to gold, maybe I would say that if you, assuming you want to reach that 15% goal, maybe buy half of it now and half of it stagger over next 12 months would be an optimal strategy that you should adopt.
Chintan, what about you? What do you recommend to your clients? What is a preferred instrument to invest in gold?
See, I think Chirag has spoken very nicely that whatever is there to consume, I think physical is the natural choice, and with the kind of demography of our population, every year marriages are going to be on a top of the list, whereas female have to wear the ornaments or have to consume gold. That is where the physical gold comes into play. And that is why we see that even though we import on an average somewhere around 800 tons of gold every year, but AUM in gold ETFs are not more than 60 tons, only 60 tons. Whereas globally, where people are not consuming gold, it is still at 3,000 tons. So there is a long way to go. People are still believing in physical, but yes, trend has to change. And investment product, whatever our clients have to make, we always suggest them as an ETF. ETF is a wonderful product where you can marginized also. So if somebody is playing a derivatives, then he can also pledge these units and get the margin. So as per my understanding, whoever wants to levered return, they can maximize the return by leveraging it through ETFs and fund of fund or the multi-asset fund. Okay. So whatever is there for the consumption, you please buy it in physical. Otherwise, paper products are the best products.
Paper products, the best products. And then begins the debate. ETFs, SGBs, Chirag, or pure and simple active funds. Where is your bias? Or all of them? That's an open question, by the way.
So I think in today's parlance, gold ETFs are one of the best instruments. I explained most of the reason because it's one of the very price efficient products available, and gold funds are just a wrapper around the gold ETF. So they are mostly the same. They will have similar returns over a period of time. When it comes to choice between this and SGBs, so today we don't have any tranches for SGBs coming out, so it's difficult to buy. You need to go onto the exchange, find that liquidity. Today we have also seen instances of it trading at a premium. So the interest benefit that you get, to some extent it gets washed away because of the premium you end up paying. Plus, to get the tax benefit, you have to hold till maturity. Say tomorrow if gold prices were to go to $3,500, $4,000, and if you want to say book your profits or rebalance your portfolio, which will be very, very difficult in those times when there will be more sellers as opposed to buyers at that point in time. And we don't know if the premium that you will pay, it will continue to pay, trade at that premium, or it comes to a discount. So there are a lot of uncertainties now with the SGBs overall in terms of buying, selling, etc., which kind of leads to uncertainty on the benefits that it provides. And hence, today, there is no match to gold ETFs, gold funds, given the liquidity it has, given the gold backing it has, given the convenience it has. It's virtually available by 24/7. Even in the COVID lockdowns, this was the only product that was available 24/7 virtually, as opposed to even the shops that were closed at that point in time. So given that all these benefits that it brings to the table, I think it's a clear winner for me.
Chintan, do you feel like gold and silver are interchangeable and silver is a good proxy to gold? So if not gold, can somebody look at adding silver to their portfolio?
No, big no. This is, I would not like to go away with the common contention people what make is silver can run away and it can replace gold as a portfolio to make a better return, because silver in a span it might run very high than the gold. But if you see in a long run, so I was just giving a stat to someone, if you go to somewhere around 2010, silver was available at 25,000 rupees per kilo and gold was available at somewhere around 12,000 rupees per 10 grams. Right now it is at 80,000 rupees per 10 gram for gold, and it is just the 4 times in silver. Plus gold is a perfect hedge. It acts like a currency in case of any global disruption, any risk to the currency or the war zones, whereas silver acts like a more of an industrial metal. When something goes wrong, it is the one which goes down terribly. If you see the COVID, if you see the Lehman Brothers, and it doesn't give you that base where you can depend upon the return what you can depend upon the gold. Gold is like an elephant. It just doesn't move like that. The volatility of silver is somewhere around 22, whereas gold is around 10. So it's very solid, plus it is giving returns. So what's the point shifting it to silver?
It's the role of adding stability to the portfolio, so you don't want to take that away. I want to talk about another angle, Chirag, and it's always good to be completely mindful and aware of the asset class and the instrument you're going into, right? So talk to us about taxation. Is gold taxed in the same way as equities, whether it's short-term and long-term? Capital gains, if any, and any sort of exit, entry loads that one should be aware of before making that investment into gold through a mutual fund route?
Sure. So when it comes to gold ETFs, they are taxed up to 1 year based on your marginal tax rate. And above 1 year, it is exactly in line with equities at 12.5%. When it comes to the gold fund of funds or gold saving funds, as they are called, up to 2 years, it's taxed as per your tax slab. And after 2 years, again, it's in line with the equity taxation rate, which is 12.5%. So I would generally presume that anyone has at least 1 or 2 years of horizon minimum to add these asset classes in their portfolio. And having said that, if that is the case, then probably it doesn't matter which instrument you go into, because both are very, very similar from a return perspective. But only taxation difference is that you have to wait for 2 years in a gold saving fund, whereas you have to wait for 1 year up to for the gold ETFs. So taxation has been rationalized now. So this creates one more incentive for investors to look at these efficient products.
Chintan, in your opinion, because of course you don't represent a single instrument in that sense, where do you think, or where is your bias? So when you recommend to your clients to go out and invest in gold, what is your preferred route of investments, keeping in mind taxation, cost, and everything else?
We always recommend, depend upon the investor's profile, but this is a very generic question because it has come now. So if somebody wants a mix of it, then the multi-asset funds are the good asset, because there the portfolio manager can decide about what percentage they wanted to invest into gold or equity or fixed income. Because every asset class of the capital market gives at a different time a different kind of return. So if somebody is in the current horizon, where gold is already rallied, but fixed income is still keeping it long, I would suggest in a multi-asset fund, portfolio manager would put his weightage on the GSEC more, because it also comes with a capital gain. So interest rate is inversely related with the GSEC price. So if interest rate starts going down, I think with a levered return what GSEC can generate, a fixed income can generate, will outperform equity as well as gold. So my point would be on a multi-asset funds rather than just straight away investing into gold, because it's just the one asset class. If you trust the fund house and the portfolio manager with their past track record, I think multi-asset funds are the better choice right now.
Multi-asset fund. Chirag, you want to come on this one because you do have an ETF and a fund, and you also have a multi-asset fund of fund. If you had an investor who asked you, without any biases, what should they be looking to do, and somebody who's got an average risk profile in that sense, what would you recommend? Where should be the starting point for an early investor?
It's very, very clear, right? If you are choosing, say, multi-assets, a one-stop solution for any investor's need of investing. So you are outsourcing the entire asset allocation to the fund manager. So if you're doing that, then that's good. Then that takes care of your all the asset classes investment and tactically changing it over time as you get opportunities in each of the asset classes. But when it comes to, and this is most investors end up making as a mistake, is, you allocate 20%, for example, to a multi-asset fund and do other allocation on your own. In that case, if you have 20% allocation to the multi-asset fund and the fund manager has 10% allocation to gold, then you end up having only 2% allocation to gold on an entire portfolio, as opposed to what is desirable is 10 to 15%. So you need to choose between how you are approaching your investments. If you are outsourcing entirely to the multi-asset fund, which is well and good, then that's completely fine. But if you do a mix of the two, where you take a multi-asset fund and then allocate something on your own, then probably you need to be mindful of the allocations you end up getting.
Then in Chirag, we have a few minutes to go before we have to, of course, run out of time. But let's take a few queries, and it'd be nice to have, investors or viewers actually ask both of you about their questions. Kashish writes in, Kashish is 25 years. Kashish's goal is she would like to sell an SIP of 5,000 and needs fund recommendations for the same. I'll have you go for it because, Chirag, you've been tracking this quite closely. I mean, it of course gives a broader perspective.
Yes, I think 5,000 rupees SIP, I think 3,000 one can go with the large cap fund or the index fund, and 2,000 we can just allocate towards a small cap fund. Whereas average return, what we can expect would be somewhere around 17 to 18% CAGR, which I think it's a very, very great size when you enlarge the period, compounding, I always say that it is the eighth wonder of the world. It looks pretty small, but when you expand the horizon or expand the time zone, it really gives you around, amazing return. So 3,000 toward large cap or the index fund and 2,000 towards the small cap, because India is a perfect place to invest right now.
Right, I agree. The power of compounding is what we talk about often. It's not timing the market, but timing the markets, which is very commonly said. The next question comes in from Kostub. Kostub is 34. Kostub is looking for a recommendation. He has about 30,000 SIP in a gold ETF. Is it a good idea to diversify into silver ETFs as well? Chintan, Chirag, you want to have a go at this one? We've already talked to Chintan about silver. It'd be good to know what you're thinking about silver right now too.
Yeah, absolutely. So if you see, a lot of people call it poor cousins, gold's poor cousin, right? We think that it is half copper, half gold. Well, like Chintan said before, if you look at, it's an industrial commodity. 65% of the use of silver comes from industrial uses. And it behaves more towards giving you exposure towards growth in the economy per se, because industrial metals will do well when there is growth in the economy, and that's a similar exposure you end up getting with equities. So if you have a good equity portfolio, no point diversifying. It won't give you a diversification that you're looking for. Gold at the other end does help you diversify. And there are many stories that we hear about silver, right? That, their demand will go through the roof. Today, everything green uses silver. But as history has taught me that, the commodity remains viable till its price remains viable. And when its price starts crossing a limit, the usage of it becomes unviable, and there will be technological advancements and substitution that will take place, which will reduce the demand. And what you thought that's going to be a bull story for that metal, it ends up going the other way. For example, silver is used in solar panels. So the silver paste is used in solar panels. And if you look at a new technology that has come in, reduces the use of silver in solar panels by 30% immediately. So if that kind of things happen, what you thought was a great demand driver really fizzles out, and it leads to not what you expected. So I think gold is a better place to be if the investor is allocated to gold. I think that's kind of warrants he's done a good job in terms of getting allocation to the right place. I think venturing out to silver comes with, it's like a double-edged sword. It has its own volatility on the upside as well as downside. So I think gold from a portfolio standpoint is a good place to be. Silver, if you understand the demand supply dynamics, and if you can understand that, time it in terms of entry and exit, then probably you could go for it. Otherwise, gold is better.
And what better time than now to buy gold, given what's happening globally and the fact that we're celebrating Dhanteras tomorrow. Please go out and buy gold. While you might want to buy the Sikka, the better way to do this could be to buy paper gold. But hey, who's stopping you? Get both. With that, we're completely out of time. Chintan, Chirag, thank you for your time. Happy Diwali, happy Dhanteras, and may this be a good year for both of you. Thank you very much. With that, completely out of time on this edition of the Mutual Fund Show. Thanks for watching.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
see the world through a brighter lens as you turn your efforts into profits. Transform your goals into wealth.
and spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching Large Trades. I am Agam Vakil. In this show, we take you through all that is happening in terms of key stocks which are buzzing. But for now, we take a look at the markets and they are advancing this Monday morning. It's good news. It does seem like there's a little bit of short covering on the way. We have covered a lot of ground in terms of especially covering up for that which we've seen in terms of declines last Friday, and Nifty is back above the mark of 24,400. It does seem like we're looking at consolidation around this specific level, and as far as the benchmark is concerned, the Bank Nifty, pardon me, that is actually driving up the Nifty higher because we have a 1.3% up move there as well. Naturally, in terms of key constituents for the Nifty, it has to be the banks which is leading the gains, but this time around it's ICICI Bank which is in fact leading the pack. We have M&M, SBI as well as Shriram Finance, all of them advancing in trade. We don't have too much which is weighing down on the benchmark, and that is the other big positive here. Let's take a look at the broader markets. Are we looking at advances there? Are we looking at outperformance in the mid cap and the small cap indices with respect to the Nifty? Well, that's a wait and watch. That should be up for you on your screen as well in terms of what the mid cap and the small cap indices are doing, and we'll get a better idea of how things are faring. So the mid cap index is up around 0.9% but underperforming the Nifty. The small cap index on the other hand is showing a little bit of outperformance, but the key takeaway is that the little bit of buying has returned. whether or not this actually sustains, whether or not, in fact, a lot of participants use this as an opportunity to go ahead and sell these markets forward. Can we expect range-bound movement for a lot of these key indices? Those are questions which will be answered eventually down the line. But for now, this is what we're looking at, the small cap index advancing by around 1.3%. And let's take a look at some of your key movers in the broader markets too. We do have advances for three major stocks. One of them is Aditya Birla Real Estate, which is up and about, is advancing by as much as, nearly 8% right now. It's come off from days highs, it's, now 6%. And of course, besides that, we're also keeping an eye on something like, something like a Motilal Oswal that is also reacting to earnings. But that's as far as stocks are concerned. We now have Shrimi, who's joining us to give us some exclusive news on government plans as far as restructuring of custom levies are concerned. Shrimi, over to you. Good afternoon.
Good afternoon. So, the July budget has, proposed to have a restructuring of customs, the entire duty, keeping various challenges in mind at this point of time because of the classification issues. There are a lot of dispute at this point of time. So what we are picking up from our sources is that they are working on the restructuring of custom levies, and in fact, they are aiming to sort of reduce the number of rates which is there, 12 to 13 rates at this point of time to 6 or 7 is what we are picking up. In fact, they are also looking at streamlining the duties on a couple of sectors, particularly steel, solar, batteries, aluminium, lithium cells. And they are in fact going to have an entire review done by February, and they are looking to sort of introduce this review in the budget itself, the February budget itself. There are some other, things are also in the pipeline as far as custom duty rigid is concerned, including how to sort of increase some duty on certain items to boost local manufacturing, also how to adjust and, fix inverted duty structure which is there at specific items. And in fact, this entire exercise is to have simplification in the custom duty and also to have a less classification so that it would not lead to litigation is what we are picking up. And they have sought some, industry stakeholders' views as well, and they are going to consider all that, in the upcoming budget. Back to you.
Right, Shrimi, thank you so much for getting us all those details. Of course, we'll await for more on that specific NDTV Profit exclusive. But moving on to Ambuja Cement, where, the company's announced earnings, we have seen a drop in profit to the tune of nearly 42%, but the stock is up. It's up as much as 4.4%. And naturally, there's a lot in terms of the outlook, which is positive. In fact, we did catch up with the director, the whole-time director and CEO of Ambuja Cement on the quarter gone by, and this is what he had to say. Listen in.
I'm happy to share with you the performance of Ambuja Cements for Q2 FY25. Ambuja Cements has delivered steady performance, supported by cost leadership, improved efficiencies, and growth. For the Q2 year-on-year, consolidated performances are as under: revenue at 7,516 crores, operating costs went down by 4% at rupees 4,497 per ton, a reduction of 184 per ton. This is mainly on account of reduction in energy and freight and forwarding costs, 10% decrease in energy cost driven by our efficient fuel management and strong focus on green power. We achieved a 13% reduction in kiln fuel cost, now at 1 rupees 59 paisa from the previous ₹1 rupees 82 per 1,000 kilocalories. On green power share has gone up from 15.6 to 18.2%. Freight and forwarding costs have gone down by 7% from 1,377 to rupees 1,282 per ton. With these improvements in cost, our EBITDA is now at rupees 1,111 crores. The EBITDA per ton stands at rupees 780 and margin at 14.8%. Profit after tax stands at rupees 473 crores. Our consolidated cash and cash equivalents at the end of 30th September 24 remains at rupees 10,135 crores. On a standalone basis, net revenue at rupees 4,213 crores with a 14% volume increment at 8.7 million tons. Our EBITDA is 681 crores. EBITDA per ton is at rupees 784 and margin at 16.2%. Profit after tax of rupees 501 crores. Coming to strategic investments and expansions, post successful completion of the Orient Cements transaction, our total cement capacity will go up to 97 million tons per annum. Multiple acquisitions are adding to the economies of scale, greater efficiency, better use of resources, and long-term environmental sustainability. The acquired assets with captive jetties as well as coast-based bulk cement terminals have reinforced the marine logistics. Assets of Orient Cement will further strengthen our presence in core markets and improve our pan-India market share by 2%. Orient Cement's assets are highly efficient, equipped with railway sidings and well supported by captive power plants, renewable energy, waste heat recovery systems and AFR. Today, Ambuja and ACC are one of the largest cement entities in sustainability, innovation and green offerings. Ambuja has become the world's first cement company to join the Alliance for Industry Decarbonization, an initiative of International Renewable Energy Association. It became a signatory to the Transitioning Industrial Cluster initiative of World Economic Forum. With the additional 11 million tons clinker capacity at Bhattapara in Chhattisgarh and Maratha in Maharashtra and Jodhpur in Rajasthan, we are well on our way to further expand in our brownfield operations. As these capacities will become operational, we will also be raising our ESG standards by including WHRS and AFR usage for the new plants. Addition of 21 million tons of blended green cement capacity will take our cement capacity to 118 million tons by FY26. We are aiming for a significant increase in green power capacity, taking green power share to 60%. We are reaffirming our commitment to sustainable practices with an investment of rupees 10,000 crores in 1 gigawatt solar and wind power projects. Additionally, we are also adding more waste heat recovery systems and alternative fuels to the mix. By the end of FY25, we will reach 218 megawatts of WHRS, promising compelling economic benefits to our planned larger capacity of 140 million tons per annum. As a responsible group engaged in nation building, we are committed to promote sustainable products and construction practices on the ground. Our technical services educate customers and conduct certification programs for inclusive growth and socio-economic impact on society. We are committed to sustainable growth with a strong focus on women empowerment, sustainable livelihoods, rural infrastructure improvement, and social inclusivity. Alongside our dedication to water governance, our community development initiatives have positively impacted over 4.7 million beneficiaries. Strong infrastructure demand and ongoing needs from the housing and commercial sectors are anticipated to boost cement demand in H2 FY 2025. The introduction of Pradhan Mantri Awas Yojana Urban Housing 2 with an allocation of rupees 11 lakh crores along with government's continued focus on infrastructure development as the key to economic growth augurs well for cement sector. Strategic investments in roads, railways, along with urban and commercial amenities is poised to drive robust growth. We expect demand during FY 2025 to grow in the range of 4 to 5%. It is encouraging to witness the government's commitment to boosting capital expenditure and encouraging private sector participation in infrastructure projects. The focus on employment and skilling will create a robust workforce for the future. The special focus on building rural connectivity and infrastructural capabilities in various states further strengthens our resolve towards making significant contribution to India's growth story.
All right, moving on. Shifting focus to financials, Bank of Baroda also reported its second quarter numbers. We spoke to the management on the quarter gone by and what has aided growth. Listen in.
Let me say Bank of Baroda, the performance has been very consistent for last 8-9 quarters. So whether it is net profit, whether it is the top line growth, whether it is the ROA that we have been guiding, it has been very consistent. And this quarter has been something special for us for two reasons. One is that we achieved a 25 lakhs crore of business. That's the top line number. And that's a significant in terms of scale, and we have achieved that this quarter. Secondly, the profit has been in excess of 5,000 crore for the first time in last many quarters. Earlier, the profit used to be more than 4,000 crore quarter to quarter, but this time it has gone above 5,000 crore. There are two reasons for that. One is that the profit out of the operation has been very strong. At the same time, the other income has seen a significant boost up because there are two factors who contributed. One is that treasury income has been very good this quarter. Secondly, the recovery out of the TWO, that's the return of accounts, that has been very strong. So I think it's a combination of all factors where it's operating growth, the profitability matrix, the kind of construct we want to have for the book in terms of both top line and bottom line, everything contributed to have a strong top line, at the same time a very good bottom line for the Q2.
I want to touch upon something that you mentioned during a discussion of the results after announcing, where you talked about the guidance for advances and deposit growth, right? You've tempered both those down by about 1 percentage point. If you could explain to our viewers the reason behind that and what that means on ground in terms of business growth.
So there are two factors here. Actually, when we gave a guidance at the beginning of the year in terms of deposit, it was 10 to 12%. And consequently, the advance growth that we projected was 12 to 14%. If you look at the Q1 and Q2 deposit growth, not only for Bank of Baroda, but also for the system, the deposit growth has been in single digit. Our growth in Q1 is almost slightly less than 9%, and growth in Q2 deposit is slightly above 9%. Considering that, when I look for the full year, achieving something on a higher band may not be possible. At the same time, we have been guiding the market saying that we as a bank want to reduce dependency on the bulk deposit. Funds are available in the wholesale market, but obviously at an elevated cost.
Correct.
I do not want to get into big time on that market. So considering everything, it's not a cut. I will put that as a recalibrating the entire the deposit guidance, keeping the actuals for 2 quarters, not only for Bank of Baroda but also for the system. At the same time, I also said that when I gave a guidance of 9 to 11%, I'll try to operate in the upper band. That means I'll try to get into that 11% growth.
Right.
And when we have changed the guidance on the deposit, obviously we don't have to widen the credit deposit gap.
Yeah.
That's something debated in the market big time. So keeping the credit deposit at a very reasonable level, we recalibrated the advance growth also. That is 12 to 14% earlier. Now we made it 11 to 13%. Saying so, the segment of RAM would continue to grow stronger. Rather, the retail growth, which was above 20% earlier, continued to be more than 20%. Agri MSME, the quarter Q2, we had almost 11%, going to be higher at 12 to 14%. The corporate book, Q1 has been lower at 1.6, Q2 has been 10.6. Want to operate the corporate book at 10%. In case we do that, we'll achieve our growth in line with the guidance of 11 to 13. There also we'll try to operate at 13 rather than 11. But let me tell you one thing, this is more of a recalibration based on the actual scenario prevailing in the market. At the same time, I'm also fairly confident that with this kind of growth, I'll be at least aligned to the market growth or better than the market growth. That's something we're very confident of.
Okay. Looking at the credit deposit ratio situation, you're at about 82% right now, right? For most banks, private banks especially, that would be a gold number. They'd be wanting to be there. But then that also allows you to grow the advances still faster, despite your lower deposit growth. Why did you make this choice to calibrate both of them?
See, the reason being, as far as the credit deposit, you want to operate in the band of around 82 or 83 kind of a level. It's not optimal in terms of we can still grow faster, but then we need to be mindful of the deposit growth and the profile of liquidity available in the system.
Correct.
So considering that, I think currently we are at 83.5. We want to operate at 82, 83 level. One thing that you have to keep in mind that our international book is substantial. That is almost 18% of the book.
Right.
And international market, the credit deposit is always more than 100%.
Correct.
At one point of time, our credit deposit ratio international was as high as 120%. Now we have brought it down to 96%. We are going moderately now on the international advance just to keep the credit deposit ratio at a reasonable level. International market, couple of changes happening. Yeah. Actually, the reversal of rate cycle has started over there. Many of the advanced deals which we had at a higher price now getting repriced at a lower price because the international NIM has taken a cut of around 10 bps. So it's a more of a balanced call in terms of how do you construct the book, at the same time achieve certain parameters like the level at which you want to be on the credit deposit ratio, at the same time keeping the margin intact. That's something I think very fundamental as far as the Bank of Baroda is concerned.
When you look at the retail portfolio, unsecured is a piece where you're hearing a lot of commentary from other banks talking about caution on the portfolio. You've been bringing it down for the last 1 year or so. This is even before the RBI, heightened the risk weights on this. Why that call then, and are you feeling good about that right now?
No, actually, that is what precisely when I interacted with the market in September 23, at that time itself, the growth of personal loan was almost like 80-100%. We wanted to moderate that growth precisely for two reasons. We wanted to because the personal loan book is more of a data-driven thing. So we had a vintage of almost 2.5-3 years the time in September 23, so I wanted to have a look on the data. So based on the data, actually, if you look at my book is not large enough, very small in comparison to many of the peers. But at the same time, there are two components. One is a physical sourcing, another is a digital sourcing. Now also almost 70% of the unsecured personal loan are sourced physically. Only around 10,000-11,000 has been sourced digitally. Two things we have done in the process, because if you look at the last quarter growth, it is only at 4.9%. Quarter to quarter, annualized can be around 25-30%. So there are two reasons for that. One, I mean, if you look at the run rate of slippage on the personal book, obviously it is slightly higher as compared to a year back. For obvious reason that we have seen in the system, and that is also true for us. But the amount is not significant. It's very insignificant as far as my book is concerned. My fresh slippage is, let's say, 2,700 crore. This slippage may be something less than 150 crore.
Okay.
So that's not significant for me. My book is less. But in the process of last 1 year, when we moderated, it allowed us to two things. One is to strengthen the underwriting process on the digital loan segment. At the same time, the physical loan segment, some of the segment where the slippage is slightly more, we have strengthened the covenants therein. So I think at this point of time, we are fairly balanced the way the book construct is. But if you look at, yes, there is a bit of elevated slippage, but because my book size is less, that's not significant for me.
Okay.
On that note, it's a wrap on this edition of Large Trades, but we leave you with the management of Waaree Energies Limited, which listed at a 66% premium today. We spoke to the chairman and managing director, Hitesh Doshi, on the company's use of proceeds and a lot more. Listen in.
Company is now increasing the capacity from 13 gigawatt to the 21 gigawatt. As well as we are going in a backward integration. Of course, our one of the cell manufacturing capacity is going in a upstream in this financial year. But apart from that, we are going for the additional cell, wafer and ingot facility. So company is a completely expansion mode. And of course, the money which we have raised, it will be used, majority of it will be used for the backward expansion of these products.
How is the capex plan for the next 2 to 3 years for the proposed capacity additions?
For the next 2 years, like what I have mentioned about going into the 6 gigawatt of ingot wafer, we'll be investing around 9,000 crore in this plan. Of course, company has already tied up for a date long time back. Company, you know, that is quite on a strong cash position, almost debt-free company, and this additional fund. So with all that way, company is all ready in terms of the finance.
And in terms of, as and when the new capacity comes in terms of the revenue potential that it would, indicate for the company, could you give us some context on that?
From 13 gigawatt today, we are going to the 21 gigawatt, right? So, and same time, we are going in a backward integration. So this gives a clear idea what is the company's plan and how company is going to increase their top lines and the bottom lines.
And in terms of, with solar wafers and solar cell capacity coming in, would this also kind of benefit your costs, because these are key components for making the solar modules?
Right. Of course, when we are going into the backward integration, that will help to improve our bottom lines. But the most important is it will be the security of the supply chain. So globally, customers are looking for the alternative supply chain. And when we will offer them made in India cells, ingot and wafers, that gives the edge over their requirement, or I will say competition, but the most important will be able to fulfill the customer's requirements.
But coming back to the cost perspective, in terms of how it could impact your margins, is there maybe a range that you do expect your margins to benefit or improve from?
It will be difficult today to answer that, but definitely it will help to improve the margins.
And there are, because of the importance and the influx that the solar industry is getting as a whole, there's a lot of solar cell and module capacity coming on stream. What's your view on competition in this space?
So I think the investors' trust and confidence in the last IPO has answered all these questions. 97 lakhs plus applications, precisely 97.3 and all. This gives the clear trust of the investors and on our Honorable Prime Minister's vision, as well as the country's plans and the global energy transition. Of course, the biggest confidence is on our company, our plans and the management. So all these future worries have been very well came on the board, and it was record breaking in all terms.
And in terms of FY25 growth, your last 3 years you've seen very significant growth in the company. What is your outlook for FY25 as a whole?
We'll continue to grow. We'll continue to expand our manufacturing capacities. We'll continue to add on the products. The company is moving from solar to the complete energy transition. So that means whatever the products we'll need, we discuss about the hydrogen, we are setting up the electrolyzer factory, we're talking about the batteries and many more products. So as a company's plan is to continuously increase the product lines, capacities, backward integration. This gives a clear indication in which way we are moving ahead.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
Bold ambitions
and renewed dreams.
see the world through a brighter lens as you turn your efforts into profits. Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
let money work for you.
and light up your future with prosperity. Let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours. whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissed.
Well, thanks for tuning into India Market Close. By the way, some flashes on your screen. Sumitomo Chemicals and a 9% uptick in revenue, but I reckon that the operational metrics might have pleased the street, as a result of which that stock is really zooming in trade. The net profit is up 34.4% at 192 crores, and Sumitomo Chemicals is up 7.5% as we speak. The intraday would help. Just very quickly, just mark this one, because the stock is buzzing as the flashes are on your screen. So good, solid move for a company back with results. Look at that spike there. The last 1 week, we've been hit by companies which are come out with weak numbers and the stocks are plummeting. This is good to see. Nevertheless, the markets done well. When we were doing India Market Open, at that point of time, the Nifty had flattened out completely. Right here, right? Flattened out completely. Now, not at the high point of the day, but doing okay for itself. And ICICI Bank and some others are to be given the credit here. Very well the stock of the ICICI Bank. In fact, let's pull up the heat map and show you what's moving and what's not on the large cap end of the market, which is a good solid day for large cap. So, result disappointments getting beaten, Coal India. Then it may well be the case that people are really impressed with what ICICI Bank is doing. 3.5% higher. Some of the other banks have taken it on the stick, including HDFC Bank. But beyond that, I think the 1% move is also broadened out, because there is an Adani Enterprises up 4.5%. Auto is making a bit of a comeback. There is a bit of strength in JSW Steel and Tata Steel and Hindalco as well. So metals have not done too badly, and Shriram Finance is holding out. So all in all, a broader rally today. And Tamanna, not too many losers, and at least not too many losers with weightage, save for HDFC Bank, which is probably also aiding the rally today.
Would it be safe to say that we have indeed brought in the Diwali cheer to D Street by starting our celebrations on NDTV Profit? Let's go ahead and say that, because
why not?
I mean, the change in the mood is astonishing. Palpable. We should actually pull up Nifty contributors for a second before we bring in the breadth of the market as well. Because truly, I mean, yes, ICICI Bank was doing well from the morning. We'd called it Shriram Finance. We called it as a positive set of numbers. But the way M&M has roared in, and this is the point that Neeraj was making, that it's a broad-based rally, at least as far as the Nifty is concerned, because 152 points being contributed in the others category. Let's pull up the advanced decline ratio just to give you a sense of the market breadth. Is this just a Nifty and Sensex story? Not quite, because look at the yawning gap over here. It's 1:3 almost. Advance is two declines at this point and getting even broader. So you've seen an up move, a sharp up move from the markets, in the markets mid-morning onwards. Let's pull up the broader indices, the mid-cap and the small-cap indices, to see if they've joined the party. Yes, indeed they have. The Nifty Mid-Cap 150 up there. Small cap up about 1.5%. And remember, here's where the maximum damage had taken place. Bank Nifty also one of the winners today. If you pull up sectoral indices, you'll get that sense. Bank Nifty up over 1%, so it's definitely a strong morning. PSU banks, metals, realty. So you're seeing all of it, everything except the India Wix in the green, which is always good news. All right, specific stocks, it's all about results. These are some that didn't do too well. Interglobe, Chola, Finance, Coal India, Credit Access, Grameen. You're seeing result impact there, 8% down. I mean, Interglobe really is the story over here. Why is India's largest airline with over 65% market share seeing such a huge knock? We should talk about it in a little more detail on the show. Chola Holdings, the other one, about 4% down. Coal India, Credit Access, Grameen, all of them reacting to their results over between 3 and 4% down right now. In terms of upswing, Sirma, Motilal Oswal, Bank of Baroda, Bandhan. I mean, Sirma truly the winner of the day. We spoke to the management as well, 14.5% up. Motilal Oswal and that whole pack of capital markets players doing well, obviously courtesy all of the investors, Indian investors who have come in, 8.5% up on Motilal Oswal. Bank of Baroda, Bandhan, some banking stocks which have done well. Bandhan is another big winner today, 8% up, 8.5% up in trade. So good numbers being rewarded. Neeraj, and BHEL, Wellspun, some of the other numbers that have just come in, also doing fairly well. It's all about timing, right? So right now, good numbers hitting in a purple patch for the markets.
Yeah, and I think the common thread seems to be, Tamanna, that some of them have got good margin performance to themselves. In BHEL's case, 106 crores profit versus a loss. Forever being touted as a stock which has gotten an order book but not showing profits. I think BHEL deserves a mention here because the profitability numbers look very impressive. I would reckon that the operational metrics in BHEL too could have been okay. So revenues ahead of estimates. I think there is an EBITDA performance which is strong, and there is markets which are, and then the bottom line numbers looking very, very solid for BHEL as well. Let's get in our experts to talk about the scenario today. And actually, Kunal, Senior Technical and Derivative Analyst at Sharekhan, joins us. Kunal, before I talk about the indices, just a quick word on BHEL or a Sumitomo or a Welspun Living, stocks which have come out with results and are getting duly rewarded, particularly BHEL.
Yeah, I think particularly if you talk about BHEL, the stock has seen a good amount of beating from the higher levels. Yes, in today's trading session, we have seen buying because of the result action, but still the stock is trading below its 20 DMA, which is the short-term moving average. It needs to surpass that mark, which is trading at 256. So still the 20-day moving average is quite a bit far. If we sustain above that, then probably we can see that the worst for the stock is over, and then we can see some higher levels of 320, 330 coming in. So at the current levels, yes, we have seen a spot, but how much does it sustain? That is more important. So in today's trading session, if we close above yesterday's high, that is 228, then probably one can take a long trade and look for targets of 245, 250 on the upside.
Such a chalk and cheese performance by BHEL over the quarters. Sure, they had a profit of 490 crores in March 24, but they had a loss of 211 crores in June, and therefore this optimism is working well. As we speak, of course, Heidelberg numbers, and those numbers don't look that great, unfortunately, but BHEL is seriously packing a punch. Okay, Kunal, what about the index though? Good, solid number on the markets today. It's been stable, if you will. Or maybe off a little bit from the highs of the day, but still relatively stable. Is there a long trade that you can take, or would you rather believe this is a sell on rise?
Yeah, I'll just add on some data points over here, Neeraj. The rally which we started from 24,000 to that 26,300 on the upside. If I take the Fibonacci retracement, the 0.786% retracement comes at 24,400 mark. On Friday's trading session, we broke that level, but in today's trading session, again, we are trying to reclaim that level. So for me, the closing for Nifty in today's trading session will be very, very important. If we close about 24,450, that's the level which I'm watching for. If we are closing about that mark, then probably we are heading toward 24,600 and even 750 on the upside. So even from the current levels, you can have a 350 points rally on the upside. However, if that doesn't happen in today's trading session, my stake is that wait for tomorrow's trading session. Don't try to hurry up. If in the early opening minutes, if we surpass that 24,450 mark decisively and sustain above it, then probably we can take a long trade from those levels again for 300 points upside rally. So clear cut at the current levels, we are in somewhere in between. We need to wait and watch where does the market close and how does the market react probably tomorrow, and then probably we can take a trade. So two instances I would like to point out here. First, either just the market is about to end before that, if it is closing about 24,450, take a long trade, go home, or else wait for tomorrow, see if the market in the initial 10 to 15 minutes is sustaining about 24,450. If that is the case, one can initiate long position.
Take a long break and go home. Kunal, party is just starting.
Yeah, if 24,450 is taken out, we can have some at least a relief rally till 24,700, 750 on the upside.
Okay. So 24,700 is where you think the relief rally starts. What are the stocks that you're looking at this afternoon?
So firstly, I would like to highlight the stock of PEL, that is Piramal Enterprise. In today's trading session, it has seen a cut down of open interest of 10%, clearly indicating there's a short covering in the stock. Plus, the stock is trading above its yesterday's high and surpasses short-term moving average, that is of the 20-day. So clear-cut bullish indication. From the current levels, the stock can go up to 1120. So that's the target on the higher end. One can keep a stop loss of 1040 on the downside. The second stock where I'm focusing on the long side over here is Samvardhan Motherson. In today's trading session, the stock has seen good amount of buying from the lower levels. The stock has been relatively stable. The correction has been relatively stable compared to what the other mid cap, small cap stocks have seen. So clear cut relative strength is visible in the stock. We can go higher towards 200 on a short term basis. So one can initiate long positions at the current levels, keeping a target of 200 and looking and keep a stop loss of 186 on the downside.
Okay, Sun Pharma numbers have just come in and they look decent on the face of it. Net profits has beaten estimates at 3,040 crores versus estimates of 2,932 crores. Bit of a spike there, about 2.5% up. Revenues are tad below estimates, or in line largely. But the net profit number is looking good. So Sun Pharma in focus. Kunal, Sun Pharma, Motilal Oswal, Sirma. These three stocks, if they are on your radar.
Yes, if I would like to pick the order, I think Motilal stands out at the current levels as well. I think the structure is quite bullish, even in a weak market. If I look at the long-term chart, the high top, high bottom structure is still intact, which clearly indicates that the stock is trading in a strong uptrend. We can again expect the stock to go towards that four-figure mark of 1,000. So 1,010 would be the target on the upside in the short term. One can keep a stop loss of 920 on the downside.
Kunal, what are the recommendations that you are making in the session today?
So I think the recommendation.
PEL, you mentioned PEL, but my question is, so those are amongst the two which haven't quite rallied from stocks which have rallied today. So let's say I'm giving you three names: ICICI Bank, let's say Shriram Finance, and Adani Enterprises. These are the top three gainers on the index. Would you make a recommendation on any of those?
Yes, 100%. I would make a recommendation on Shriram Finance. I think in today's trading session, the kind of volume-based buying what we have seen, the stock today's high what it has made is the resistance of the 20 DMA. I'm expecting that to be taken out in tomorrow's trading session. So again, there will be a more short covering move that would what we can see in the stock as well. So even from the current levels, if I see 150 points rally can be visible in the stock even from the current levels. So 3280 is where it is trading. I can expect the stock to go towards 3450 on the upside. On the lower end, the support is now placed at 3180, 3200 zone. So till the time the support is not breached, I'll be bullish on the stock.
Okay, well, that's the word on Shriram Finance. 6% higher. So Shriram Finance, Motilal Oswal, Piramal Enterprises, a cluster of those financial names standing out for Kunal. And I'm not surprised, simply because there is some bit of optimism today in financials, led no doubt by the big boy ICICI Bank, up about 3.5% across the board. Brokerages have gone out and said that they believe that this is a good one to look at. So really good going by ICICI Bank. Vijay Chopra is with us as well. Vijay, we've got the technical view on ICICI Bank. Before Harsh comes in and tells us what the street has thought of it, a fundamental view from your end on ICICI Bank. Would you be a buyer here? Why or why not?
Hi, thanks for having me on the show. My sense is that there are very few banks who have posted good results. ICICI is one of them, one of the banks. I think that it has done better than other peers, even HDFC. So I would say if somebody wants to buy it with a medium-term perspective, wait for about 1250 odd levels for a target of about 1400. We had the results of Indian Bank today, which was stupendous. I think that Indian Bank is also one bank which we also have. This is a disclaimer. We also have in the clients' accounts. But yes, even from here, it looks very good for a up move of close to about 70-80 rupees. So there are pockets of excellence for sure. And these markets are such markets that you need to do your own research. It's not that left, right, and center buy banks and that's it. So look for better options. Amongst all the banks, even now, I think there's a good opportunity in SBI. SBI is looking fantastic on the charts, and I think that SBI should do well even with the results. So I would say that you have to be very choosy. Today is a classical day of a short covering where people get confused whether the buying has come back or it's a short covering. I think it's a short covering, and it would probably propel further for the next couple of days. But yes, we have to be very cautious and very choosy on the stocks we pick.
Hi, Vijay. Good afternoon. Tamanna here. So you're saying this is classic short covering. The question is that are we going to see a sort of a one-way move upwards, or you're spotting some winners here, and which ones are those?
As I said, Tamanna, we're starting with tanking. What happened with IndusInd Bank? 20% downside on IndusInd Bank is on Friday. So today, I think that all the banks which we are seeing up, or all the sectors we are seeing green. This doesn't mean that the worst is over, or there might be no other corrections. Whenever short coverings happen, it carries on for a few days. So I would say that this would continue. If you're asking me what sectors I would be investing in, as I said earlier, I think I recommended DLF very strongly. They've launched a new project. So I like real estate, especially the premium ones, because premium ones are selling. The rich are getting richer, and that is one of the reasons why we are seeing all these super premium projects. They are sold like hotcakes. So one sector is real estate, the other is IT, and I think that good metal companies, good mining companies. I like NMDC a lot. I like Hindustan Zinc a lot. I've recommended it, I think, on your Diwali show as well. Banking, SBI, I've already mentioned. DLF, I've already mentioned. And, another company which I like is CDSL. All the companies we are seeing, Motilal Oswal, they are posting good results. Companies which are related to capital markets. And irrespective whether the market goes up or down, these people make money. These companies make money. CDSL is one of those companies which is going to anyway make money, because every exit from the, from the depository, would attract a fee, and they are making big money there. So the bottom line, the cash register keeps on ringing all the time, and these people make money. So CDSL is one stock which I think is a potential multi-bagger, and one should keep in the portfolio. This might even double up if somebody holds it for
so CDSL looks good. Meanwhile, look at what the Nifty PSU Bank is doing. Let's pull up the intraday as well. Indian Bank now 12% up. Canara Bank, Central Bank, Bank of Baroda. Bank of Baroda, of course, thanks to its numbers, but the Nifty PSU index doing really well. I mean, these have been a bucket of, I would say, not very loved stocks for the last few weeks. Anything here that you're looking at, Kunal, especially an Indian bank? And let's talk a bit about a Bank of Baroda as well.
Yeah, I think I'll talk about Bank of Baroda here. I think the chart looks very interesting at the current levels. We can say that the correction what the stock had in the recent time that has been completed, and now the stock is likely to resume its uptrend. So in today's trading session, if you specifically see on the technical chart, there was a falling trend line which we broke out in today's trading session with volumes. So clear cut, the trend has changed for the stock. The stock is likely to fill up a gap what it had formed earlier. That gap is placed at around 270. So 250 is where currently the stock is trading. So clearly 20 bucks from the current levels could be easily achievable in the stock. So Bank of Baroda would be a buy over here. And now the support for the stock is at 240. So as long as 240 is not reached, I will be bullish on the stock. 270 is what I'm looking in the short term.
Stock of the day and top stock is definitely ICICI Bank. Harsh is joining us for this spotlight on the back of a strong second quarter. The winners and the losers being sorted out very, very clearly this quarter in the BFSI space. Harsh, and ICICI Bank coming out on top.
Absolutely, Tamanna. Stellar set, and let's talk about asset quality, because that's the one metric which is absolutely in focus this quarter. You've seen provisioning sub 1300 crore versus the 1450 crore as per our estimates that the number was expected at. So not just provisioning, but GNPA and NPA ratios came in better, and therefore overall, just in terms of comfort, in terms of asset quality and processes, it just clearly demarcated how ICICI has been doing very well on that metric. Not just that, growth too was extremely strong. 4% on a sequential basis on the loan growth front, 5% on deposits, and that's the other metric which has really stood out, because over the last few quarters deposit growth has come under pressure, and this kind of a growth number not only eases the burden on loan to deposit ratio, which has been a burden on the system, but also shows that ICICI is able to shore up deposits very, very well in a very competitive environment. So gives a lot of comfort. The only possible negative is the margin number coming in at 4.27%. It's a 9 basis point drop on a sequential basis, but growth more than making up for it, and contained OPEX leading to that 2.4% best in class ROA.
Okay, so ICICI Bank in the winners list, so is Shriram Finance, to be honest. I mean, what an up move there on Shriram Finance coming in and aided in a large part by what their vehicle loans are doing. Vijay, if you had to choose in the top private banks and rate in order of preference, ICICI, HDFC and let's say Axis, how would that order fall? I mean, there's lots to add today actually. I should be honestly asking about a Yes Bank as well. But all right, let's start with these three.
Yes Bank, a strict no. So my, hands down ICICI Bank first, followed by HDFC. These are top two banks, and I think that I would go with them. I think that, other banks need to work a lot. Even IDFC, I was going through the numbers, they are absolutely, disheartening the way banks have been working. Yes, the NBFCs and banks have a lot of things, and, there are small finance banks, and there is a lot of, lot of stuff happening on the internet as well. People are not keeping money in the banks, they're keeping money in their wallets. So this has also, drifted away a lot of deposits from the bank. So I would say that, be with ICICI Bank, the top bank in the private space. And if at all somebody wants to buy a PSU, I think SBI, hands down, the first choice.
SBI, hands down, indeed, the first choice. Okay, on the PSU side. Okay, charging ahead is BHEL though. Let's change tracks and look at that, because that one, though it's off the highs of the day, you have to admit. Mika is here to tell us what went behind these numbers. Mika, it's not that BHEL has posted a profit after a while, and it keeps on doing this, lost profit. How has this quarter number been? What has led to this uptick?
Yeah, let's talk about the numbers, because we have limited details right now. Revenue is up 28.5% on a year-on-year basis to over 6,500 crores, which have beaten the street estimates by 12%. The revenue growth was mainly driven by the industry segment, where revenue saw 47% uptick, but the power segment also saw growth of 23.4%, and this is all on an annual basis. The EBITDA profit came at 275 crore rupees versus an EBITDA loss of 154 crore a year ago. EBITDA margin stand at 4.2%, and the company posted a net net profit of 106 crore versus net loss a year ago, and this net profit was also ahead of the 83 crore loss estimate as per the streets. Now more details are to come. We'll listen to the con call highlights, we'll wait for the investor presentations. But one of the BHEL was the talk of the town even last quarter. We had a whole bull versus bear situation coming on. Their order book as of Q1 stood high at 1.3 lakh crores, but it was the order execution that was the concern or the question mark. So as and when we get more details, we'll provide it. But seems to be that revenue has seen an uptick, means some orders have been executed this quarter.
Okay, but the stock is now cooled off, of course, so bear that in mind, because it's not a cheap stock. Mika, thanks for that. Remember, it's not a cheap stock. Now, March 2024, the company's done a profit after tax of 300 crores. It is trading at a market capitalization of 77,000 crores. That's like over 200 times or 300 times or what have you. So it's not a very cheap stock, and hence I think sustaining some of these financials would be important for BHEL. By the way, the street is not rewarding all margin expansions. JBM Auto on your screen, the numbers have looked okay, but the stock is down about 1% because the revenues and the net profit numbers don't look all that great in terms of growth. Single digit growth out there, so nothing too great. Also, what is not too great is Interglobe Aviation, because the stock skid in trade and has stayed low after posting a weak quarter, and more importantly, the commentary around Q3 not the best either. My colleague Puneet is with us. Puneet, troubled times, if you say, for Indigo.
Interglobe Aviation is active in trade today after posing a surprise loss in its quarter 2 earnings. While revenues grew about 14% to come in roughly at 16,900 odd crores, EBITDA was flat at 2,400 odd crores, but the loss in this particular quarter came at roughly about 987 crores versus a profit of about 189 crores the company reported in the same time last year. But what led to this particular loss is the higher expenses that the company had in this particular quarter. Now the EBITDA also missed by roughly 46% the consensus Bloomberg estimates, and this is because the total expenses in this particular quarter grew by 21%. When you look at which were the key expenses, the supplementary rentals as well as aircraft repair grew by roughly about 30% in this particular quarter, roughly about 2,700 odd crores, while employee costs were also up 21%, coming in at 1,800 odd crores, and airport fees and charges grew by a whopping 41% in this particular quarter, coming in at roughly around 1,300 odd crores. Now Nuvama has downgraded the stock. They have a hold rating on the stock, and they've said that the valuations are now 1.5 times its global peers and have now been out of whack. They've also said that the slowing demand as well as overcapacity is some of the key concerns for Indigo. September to November flight schedules also showed that there has been a domestic market share loss for the company as well. Apart from that, the relentless promoter selling in Indigo has been one of the key overhangs of the stock as well. And going forward, it'll be interesting to see, because the company is also moving from a LCC model to a hybrid model, which might raise risk as well. They've also said that they're cutting EPS estimates as well as EBITDA estimates by roughly about 14 and 7% for the next 2 years, which is FY25 and 26. And they've revised down the EV to EBITDA valuation to 8 times from 9 times earlier to get a price target of about 4,400. That's the key thing, a surprise loss, which is, that's the reason why Indigo is down in trade today.
Okay, so this is why Interglobe is feeling the pain. Vijay, I want to come to you on this, because if you see, a lot of brokerages are not negative per se on Interglobe, but the street has definitely seen something to be concerned about. Vijay, that's for you.
So the kind of results Interglobe has posted, I am really surprised. Because whenever you go to the airports, the flights are full. There might be certain because revenue-wise, I'm not worried that much, because they are making revenue. What is happening to the profits? So is the operational efficiency which Interglobe used to have going down? Yes, there could be this could be one of the reasons. Secondly, as mentioned by your colleague, that the promoters have been relentlessly selling. So why is that? Why are the promoters exiting? So this is also something what the street doesn't take easily, or it doesn't digest so easily. But yes, I think that this correction was kind of overdue also. Last 1 year, the stock has gone up almost from 20, it doubled up actually. So if at all that stock corrects about 20-30%, I won't be surprised. That the Interglobe again comes maybe around say 3,200, 3,100 levels, and from there we can start buying. We definitely saw a stretch, in the valuations across the board, across sectors. Interglobe is one of the reasons. But yes, I think that operational efficiencies have gone down, and that's why there is some leakage of revenues and profits. Because airplanes all over, I keep on traveling quite often, practically every week. I don't see much seats, empty seats in Interglobe. So there must be certain things which they need to correct, and they should put their house in order so that profitability is in place.
Kunal, what about Interglobe? Are you seeing an opportunity here?
Yeah, I think at the current levels, if you look at today's low for Interglobe Aviation, that is 3780, and if you look at the budget day low for that, and that is at 3768. So clearly, it is respecting that budget day low. For me, the stock is trading just around the 200 DMA. I would be a buyer on dips in this. 3,900 to 3,850. This could be the ideal zone in which one can buy Interglobe Aviation. Again, 3,800 could act as a very strong support on the downside, and again look for targets of 4,050 to 4,200 on the upside. So I'll be a buyer, not at the current price, but around 3,900 could be a good risk to reward ratio what will be getting.
Around 3,900 you would come in. Well, some distance from there, although 7.5% down off the day's lows though. We'll take a very short break. We're coming back with the top BTST call and also a strategy for the rest of the week. Stay tuned.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens
as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
let money work for you.
And light up your future with prosperity. Let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Feeling the festive cheer here at NDTV Profit. We hope you are too. The markets definitely are. Nifty off its highs at this point, but no complaining on what has been a very substantial pullback after the drubbing of a week. Can it continue or not really is the question. Kunal, let me come to you on what would be the top trades you'd look at for the closing portion of the afternoon. Little early for BTST, but what's on your radar?
Yeah, I think NMDC is something which is looking very strong on the charts. I think from the current levels, we can easily see a more 3 to 4% upside over here. So NMDC would be a buy from the current levels. 227 is where the stock is trading. Probably you can look at a range of 227 to 225, where you can accumulate the stock, keeping a stop loss of 221 and looking for targets of 233 to 240 on the upside.
Okay, NMDC is one of the top picks, but as part of our Diwali special programming, we have been giving you what the top cracker stocks are. We spoke to 3 voices from the market and asked them about their top picks for Samvat 2081. Harsh has that list with him. Harsh, what are the Fataka stocks of this season?
Yes, absolutely. Let me first start off with Vijay Chopra's picks because he's right here with us. I want to start off with his. Metals, defense is what he likes. He also likes IT and luxury products. Hindustan Zinc, HAL and DLF are his top 3 picks. Let me talk about Deven Choksi's views. He likes IT and within that he likes Tata Technologies. Something in the lending space he likes is Bajaj Housing Finance post the IPO, and Geo Finance as well is something that he really likes, Deven Choksi. Amisha Vora's views from Prabhudas Leeladhar, well, she likes Divi's Labs, which has had a phenomenal run. She continues to like Trent, even at these valuations. Praj Engineers is the other one, along with Tech Mahindra, which she seems to like, again, within the IT pack and larger cap IT pack. And HDFC AMC is her last pick within all of her top picks. So 5 picks coming in from her.
Okay, so those are your top 6 picks. Vijay, some of your picks are also on that list. Anything that you want to add there? And how are you looking at a Bharti, Airtel and also an Adani end ahead of their numbers?
Yeah, well, I think that Bharti has done very well in the last, few quarters. And I think that, it has corrected a bit. Probably if the numbers start looking up, I would be a buyer in Bharti. If the numbers are good, again, I'm giving a disclaimer. As far as Adani Enterprises is concerned, I think that the stock has seriously corrected, in the last few sessions, almost from 3,200 to 2,700, 500 rupees loss. But even on the technical charts, I'm not very happy the way charts are looking. So I would stay, away from Adani Enterprises. And there are, as you asked me, that, what else do you like? I think that there are good opportunities to buy a stock like Iron Exchange, which is into water treatment and management. Iron Exchange is looking very good. My sense is that, the crude oil prices would come down eventually in the next few months. So, Kansai Nerolac is another stock which I like. I also like NMDC Steel, which is Nagarnar Steel, an offshoot of NMDC. The company is extremely profitable. now, and from losses it has come to profits. They have a fantastic plant in Nagarnar. So I think that at these levels, NMDC Steel is also looking very good on the charts.
Okay, what else? There is strength today in a clutch of names. I think the liquor companies have done very well for themselves. Piccadilly Agro is up 5%. Allied Blenders 6.6% up in trade. Radico Khaitan is up 1.2% as well. I wonder if United Spirits too has done okay, because everybody said that the quarter notwithstanding, the outlook ahead for some of these look very strong. Kunal, I can spot 2 or 3 in the green, and 2 of them well and truly in the green, which is Piccadilly Agro, Allied Blenders. Any thoughts on the charts on some of these?
Yeah, I think Radico is something which is looking very strong on the chart. Yes, yesterday we had a session where we saw some selling pressure around that 2,500 mark. But I think we would eventually surpass this level as well and go towards 2680 on the upside. So Radico is something which is looking very good. Have a buy on dip approach in the stock since the market is still volatile. The 20-day moving average for the stock is placed at 2150. So 21 till 2,300 where it is currently trading, till 2250 to 240 could be a good buying zone. Keeping a stop loss of 2140 on the downside and looking for 2680 on the upside.
Okay, so Radico Khaitan is on the list for Kunal Shah. But, I'm wondering, Kunal, if you're looking at any of the auto companies, M&M has had a good rebound, but not really too many of its other peers. Would you look at any of the auto names right now?
I think just for a pullback, I could look at Tata Motors at the current levels. That looks interesting to me. The stock needs to sustain above the 885 mark, currently trading at 878. So it will be a conditional buy that if it surpasses 885, one can initiate a long position in Tata Motors and look for targets of 910 to 920 on the upside. So that this is something where it has entered into the oversold territory. At least a meaningful pullback rally could be seen from the current levels.
Okay, Sudarshan, chemical numbers up there and not looking bad at all. Revenues up 16% year on year. EBITDA is up 44%. Let's pull up the intraday. You're seeing a bit of a spike there. It's come off fairly quickly, but the first cut of the numbers looks pretty decent. Net profit up 67% at 29.9 crores. But the financials in focus today, Bandhan Bank reported a 31% profit uptick in its numbers. We spoke to MD and CEO Ratan Kumar Kesh on the quarter gone by. Listen in.
See, even in this quarter, if you see, my secured book has gone up from 42.9% to 47%. So our stated strategy is to move more secured. So therefore, while micro book will grow at 10 to 12% depending on how the market behaves, quarter 3, quarter 4 are generally better quarters for us. So micro book will still grow at 10 to 12%, as I said. But the retail has grown 90%, commercial 40%, and housing has grown 17%. Now, some of these products in the more secured book will continue to grow. So we will grow the secured book.
Okay, so Bandhan had a good day, 9.5% on the stock. IDFC First Bank, not too much. The lender posted its second quarter earnings where asset quality took a hit, especially in the microfinance segment. It hit their profits as well. Listen in to what MD and CEO V. Vaidyanathan had to say.
So this was a bit of a freak incident that happened because the concerned state government made toll free. So our client for entry and exit out of Mumbai, and our client got stuck in the midst of this. It's a force majeure incident that happened. By the way, this client, our exposure was 1,100 crores when we started maybe 5 years ago at the time of merger. This was an account coming from pre-merger times. It came down to 500 crore, but or 480 crore. But last, it was still paying. But now, because of this incident, we know they can't service the account now. And we never know when the state government is going to settle this issue with the client, etc. So we didn't want to be hostage for the future profitability of the future quarters. So we took it all upfront. We've taken 100% provision for that account. And that took the profit down by 250 crores this quarter.
Well, in different ways and forms, I think asset quality challenges have cropped up for banking names, and I think maybe one of the reasons why a larger bank might be preferred as well, that accidents, if happen, that the book size is large enough for those accidents to be cushioned and form a very small part of the book. For a lot of not so large banks, it's turning out to be a bit of an issue.
But this is
prudent accounting.
Prudent accounting that they've taken the hit upfront, but it's also a great example of how politics, elections hit businesses firsthand. So the state government he's talking about is the Maharashtra government, where all tolls have been waived ahead of the polls, which will take place on November 20th. Great news for people living in Mumbai, right? All 5 exit and entry points have now no toll.
Yeah.
It's become a force majeure. That means an unseen calamity of sorts for the company running it. The bank has had to take a hit. So you might be enjoying not taking the tolls, but if you were an investor in IDFC First, you'd be hit in a different way. So which is that direct line is so clear in this kind of an example.
Most certainly. And it's been different for different banks, but clearly some of these have gotten hit. What else? I mean, so one is, of course, we spoke about liquor company. The other one, Vijay, very quickly, is the wind power companies, and Inox Wind, very solid numbers, up 5%. It's carried Suzlon along with it. Any thoughts here?
Well, I think that, just a sec. I think that, I feel the stock is still a bit expensive and there are other options available in the market. So why go for companies which are expensive? So I think that, with such a high PE of close to 150, I won't be a buyer in Inox Wind. When you have if you want to invest in power companies, go for Tata Power. That's a great company. Even a company like Genus Power looks good. Even companies like PFC, PTC, these are great companies. And, power transmission is also a big business, and, it is as responsible a business as power generation. So I think that, although I like the renewable energy space, but again, why go for expensive companies? I would rather go for companies which look much better on the balance sheet and much cheaper.
Okay. All right. One company which is definitely looking robust on the balance sheet is Motilal Oswal Financial Services. Their numbers out today, and you're seeing the uptick in the stock because of the kind of numbers that have come through. Net profits at 1,122 crores, over double actually. Total income up 72%. More details with Shalibhadra Shah, the CFO of Motilal Oswal Financial Services. Mr. Shah, great to speak with you here on NDTV Profit. Let's begin with the quarter gone by. This is the highest ever revenue you've clocked in first half, I believe.
Yeah, good afternoon. Hi, that's right. So while this is one of the highest ever quarterly profit and even the half yearly profit the group has achieved in the first half of this financial year, where our profit is actually 1,242 crores, which is actually up about 123% on a year-on-year basis. In fact, last quarter while was also one of the highest ever quarter in Q1, but this is another high where even quarter-on-quarter basis, sequentially our profit growth is 22%. So it's sparkling Diwali for the numbers and the highest ever profit that we have achieved.
When the people are having a very rough Q2, but for this I think this segment, and of course for Motilal Oswal it's a different story altogether, but for the capital market segment it's a different story. I'm just trying to understand, Mr. Shah, that when your weekly expiries reduce, Bank Nifty and the Bank X goes out of play, and with the kind of squeeze which is coming in on the futures and options side, are you seeing any possible hit in volumes, etc.?
Yeah, so those regulatory changes have been announced and they are being implemented in phase-wise fashion. So market was expecting they may get implemented in one shot, but I think the regulator has taken a calibrated call and has actually implemented these changes over next few months. So certainly there would be a bit of change in the overall options volume, because if one of the major expiries goes off, industry is estimating there could be a bit of impact on that option volumes as far as the retail play in options is concerned. However, we can't predict the retail behavior given the very, very strong tailwinds of retailization in the equity markets and the digital play which has happened over last many years. So we've seen a lot of regulatory changes have come, and they have been overall a positive impact for medium to longer term for the industry per se, where serious customers would come in the market, and overall we would see more healthy customers coming in. So there could be immediate jittery impacts of that, but we believe it would settle in due course. And again, you can't predict the retail behavior, so that would get adjusted as this keeps on coming in.
Right. Shadi brother, good afternoon. Neeraj here. Your margins have come high despite the fact that employee expense has shown a very sharp uptick, right? 45% uptick in employee expense. So what's happened here for the employee expense to go up the way it has? And despite that, I know financial company, you don't look at operating margins, but humor me, despite that, if you've clocked in such high operational metrics, can these improve further?
Yeah. So as far as the talent investment is there, the company has been continuously investing in a lot of talent, and I would say in last 12 months actually more than 350 senior employees have joined the company. So it's a function of investing in senior talent which the company is undergoing, whether it is in terms of our private wealth management business, where we continue to invest in our relationship managers. The RM count is now touched 585 RMs and is up almost 28% on a year-on-year basis in terms of the RM count. Further, we have been investing in our asset management business as well as the housing finance business, where people investment continue to grow. Even on our investment banking side, we have been expanding the team, given that we are getting a lot of mandates. The order book is growing. We are again coming back in that space with very, very sharp growth in the revenues. And also, it is a function of growth in the ESOP expenses, which is there because the company has also granted higher employee stock options in last 12 months to a lot of senior employees who have joined. So it's a function of investment in talent, which we continue to do. And at the same time, operating leverage is already started coming in, because if you look at our margins, they have expanded by almost about 300 basis point on a year-on-year basis. So overall operating leverage is very strong. So while absolute growth in the revenue is also very sharp, because almost all businesses have grown between 50 to 60% in the revenue growth, and people cost has grown by about 45%. So still it has led to overall operating leverage for the firm even in this quarter.
Now, not too much time with you, Mr. Shah, but let me ask you, everything's doing great except your housing finance segment. Are you hoping for a turnaround there?
So housing finance is also coming back on track, actually. The disbursement growth is pretty strong there. Our disbursements have grown by almost about 120% on a YOY basis. So we have invested in the talent again on the sales side here, and the sales RM count is actually up by almost 85% on a YOY basis. So the investment in sales would lead to further improvement in our disbursement curve, which would actually result in the higher revenues and profitability in this segment. Already we are seeing the revenue growth and the EOM growth already happening, and once the investment continues to be more productive in the coming periods, we would see the profitability growth also coming in line with those.
So you have 94 lakh clients now, 13,300 employees. How do you aim to close the financial year on those two metrics?
So I think so investment in talent continues to grow, as I was talking about, because as the group is expanding and each of the businesses are actually, all the cylinders are firing at the same time, and it is a very well diversified play. So we expect this client base to grow, because this client base is also a function of, a lot of folios getting added on our AMC side, because that business is outperforming the entire sphere and has been biggest biggest beneficiaries given our very strong performance on our products. So we are expecting a lot of folios addition to happen there because we've already added almost 12 lakh folios in a quarter. That's a very sharp rise, and that is leading to the overall client base and upticking to almost 94 lakh. So while we're not guiding on the overall end result of FY25, but we expect very strong contours of addition of the customers both on our retail broking platform and our asset management platform. In terms of the employees, so we have been investing, as I spoke about, and these investments would continue to uptake. So I think the more investments is toward the senior talent, which is coming in our private wealth business and investment banking and so on. So in terms of the count, it will not grow so fast, but I think more from a senior management, we are adding the entire sphere.
One more small question is, what are the formal growth targets that you're laying out, if you have, let's say for FY25 and 26? Is there a formal target that you're giving on terms of percentage of growth?
So while we're not putting out those guidances of the growth,
okay, so no formal guidance, but rough estimate, I mean, broadly.
So I think you can see our run rate of growth. Last decade, our total profit has grown by 42% CAGR. Yeah, last 1 year, I would say FY24 was almost about 38% growth. This year, we are already at about overall 53% growth in our operating profit. So I think it's very sharp run rates of growth that we are seeing, and even sequentially, the growth rates are rising because, as I spoke about, sequential growth is also 22% in our total profit. So I think the base is getting expanded. So I think that's what we stand for at this juncture.
Okay, thank you so much, Shalibhadra Shah, CFO, Motilal Oswal Financial Services. They're speaking about a stellar quarter. Like he says, Diwali's arrived early in the dealing rooms. And as long as the retail investor participation continues, definitely it will. But the larger Q2 factor then continues to be concerned. Thank you so much, Mr. Shah, for joining us today. A pleasure as always to speak with you. Vijay Chopra, capital market play is where the gravy train is still very much on.
Can you reframe your question? I didn't understand, Tamanna.
Capital market play looking good to you?
Well, I think that I've been in the markets for over 3 decades now, and God willing, I'll be for another 3 decades. Capital market play, for sure, the kind of additions we have seen in the number of customers, all these brokers, and as I said about CDSL, whatever the market goes up, goes down, capital market companies or related companies make money. So Motilal Oswal is one of the better companies in the entire space. I think that I really respect the kind of profits they have posted. So congratulations to them. But I think that, these companies would be multi-baggers in the next 10 years, because if at all the kind of additions we have seen in the last 4 or 5 years, even if we do half the additions in the number of customers and the way people have started participating either through mutual funds directly or indirectly in equities, I think that capital market related companies would do very well in the next 10 years. So for sure, in a dip, these are companies which one should buy.
We'll let you go. Thank you so much for taking the time out and being with us. Really appreciate your time. Kunal, before we let you go, your top closing strategy.
Yeah, I think over here I'll focus on Hudco. I think the stock is looking good for a decent rally in the near term. If you look on a technical chart, it has been forming a positive divergence. So at least a pullback rally towards 220 can be expected from the current levels. So Hudco would be a buy from the current levels, keeping a stop loss of 199 and looking for targets of 212 to 220 on the upside.
Okay, Kunal, so that's one. Two, I didn't ask you this, but very quickly, a thought on Inox and Suzlon. Both of them have done very well today.
Yeah, I think Suzlon, if I talk about, yes, the chart structure is looking very stable at the current levels. The stock has taken support around the mark of 66, 65. So I think a very strong support from the current levels. The risk to reward ratio is also favorable. I can expect this rally to extend towards first is 78 and second is 84 on the upside. So Suzlon could be a buy from the current levels.
Okay. Okay, Kunal, we'll let you go on that note. Thanks so much for taking the time out and being with us. Really appreciate your time. Before we start wrapping up the markets, hear out a view from Manav Chopra, Director of Technical Research at Nuvama Institutional Equities, on what is looking good and what is not.
See, the NBFCs in such markets, where you see some bit of markets getting weakened in the broader space, NBFCs usually gets hit equally. Barring few names, but largely I think NBFC, the structure still remains quite weak. I haven't seen any bit of a recovery. There might be a short squeeze bounce, but not that I'm expecting a good, meaningful buy and hold kind of a scenario coming for the NBFC's name. So when we're looking at the financial Nifty chart in general, it's been quite range bound only because of some private banks holding the guns, but largely if the bank Nifty is in a range of say 5,500 to 52,500, and that has just been the savior from the private banks. So my sense is that the NBFCs would be an avoid, but certain private banks you might just want to have that place to hide in, nothing like a aggressive buy and hold.
Which are those apart from ICICI?
So at the moment it's ICICI and HDFC Bank, which looks fine, but the broader construct even in the other private names are on the weak foot.
Right, that's Manav Chopra, of course, with his thoughts as well. But let's start wrapping up the markets. It's not been a bad day. You're not ending in the highs of the day, which is the complaint. But be that as it may, I think the intraday of the Nifty will be interesting because we're now just 0.7% higher. At a point of time, we were doing very well. So there's a bit of a pullback. No, this is the VIX, which is fine, which is cooling off, which is great. But that's the index, and as Tamanna is pointing.
Not too much of a complaint.
Yeah, I mean, relative to what you've done the whole of last week, this is music to the ears. So really good. Just advance decline once, and then I'll just quickly mark the heat map. The market breadth has looked solid, which is a great sign. So good steady move today. And the heat map will show you financials like ICICI Bank and Shriram Finance up there, but Adani Enterprises and Adani Ports too, I think both of them were doing very well today. And there's a bit of flavor of IT there. Adani Ports is 2.5% higher. And then Wipro high, M&M Eicher bringing up the auto pack. So fairly broad base, save for Coal India and Bajaj Auto, Tamanna, not too many complaints.
So autos overall, apart from an M&M, because Bajaj Auto, Hero Moto, all of them feeling a bit of pain, little more red than when we started the show. But again, the kind of profit booking that we've been seeing, this is halfway decent. Interesting to see the DI and the FI number. Has there been some relief coming in today? Let's quickly pull up the broader markets, what the mid-cap and the small-cap indices are doing at close. And has the Bank Nifty also come off? I'd be curious to see. A bit, you're okay actually. You're not too bad on the small-cap 250 either. You've not really come off the day's best levels. But let's look at the Bank Nifty. And wow, Neeraj has had a long day.
Very long.
Too much Diwali partying, Neeraj,
can be harmful for health.
It's harmful for health. Bank Nifty though is feeling no harm today as well at all. Let's pull up the top losers and gainers on the BSE 500 or the NSE 500. Take a look at what's happening there. Interglobe has had no respite. Cloudy skies over there. This is the result of their Q2 numbers, which is showing some pain there. But overall not bad on the upside. Indian Bank has had a fantastic move. Bandhan Bank, because of numbers. Poonawalla FinCorp, I would say, is the rebound master of the day. And Vodafone has been buzzing since morning. I'm not very sure why. But a lot of financials there in that list, which reflects the market move. Some big numbers post markets close today. So Bharti Airtel one we'll definitely watch out for. And hopefully we carry this mood back into trade tomorrow as well.
Yeah, cross fingers for that. Maybe the Diwali week usher in the much needed respite. But with that, it's a wrap on this leg of India Market Close. Thanks so much for tuning in.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens
as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
And light up your future with prosperity. Let's celebrate growth,
Wealth and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
What I want to understand from you is, how is sustainability playing its role in material selection now?
Actually, a very pertinent question, somewhat related to our work also. We look at materials with low carbon footprint and low embodied energy. So we feel as much as material, if possible, can be locally sourced. That's been one of the parameters when you come at the SDG goals also. Of course, it can't really happen in all the projects, and to what Abhishek mentioned, we have a projects of a very different scale, but at least in smaller projects, I think the way forward should be to really locally source the material. What does it mean? Materials which are available in 15 to 30 kilometer radius, that is what is a good practice, so that the amount of cost in transportation is just spikes up the carbon embodied energy. So there are projects where you can do, and India has abundant materials. When you also mentioned about natural materials, India has abundance of materials. So whether it is stone or earth, and you mix it up with different components to make them stabilize, to make it into building products, it is still possible. We do it at a level which is possible. It also gives employment to local labor, which is also part of the sustainability aspect. Yes, but to an extent, when you talk about large projects, of course, it cannot happen. And to picking up on what Abhishek mentioned, if the materials become, which I mentioned earlier also, if the materials can become modular, scalability when I mentioned. So if materials are precast, if they are modular, if they're cut to size, however of the work can happen at the factory, so that at the site, the large amount of work and energy required to put it out there, if that can also be minimized, it will make the projects much faster, which is also one way to look at sustainability at a much larger level.
Abhishek Sumari, before I ask you this next question, I want to admit I have this really bad habit of scrolling through Instagram reels. And I was doing that and I came across something really fascinating. People are 3D printing their houses. In what ways do you think these advancements in technology, such as 3D printing or large format slabs, they are impacting projects in India?
So I'm not an expert on 3D printing, but yes, the kind of technology advancements which have happened across industries is very fascinating. I remember, I can talk of my sector, we used to silk screen print the tiles, and now the printing technology has moved leaps and bounds where it's almost like a digital printer, kind of a 3D digital printer, where we, instead of putting in a paper for that printer, we're putting in a tile, and on the other side it comes up with various kinds of designs and thicknesses and indentations, so we can actually achieve surfaces. So for example, a flamed granite look, if you had to flame a granite and make an undulated surface, that earlier was not available, but today we can easily do it with the printing technology. That is one advancement. The other advancements which are happening across the globe, there are kinetic tiles available now, where there are glazes on the tile. This was used for, the first time it was used a couple of years ago for the Tour de France cycling phenomena which happens in the world. They'd put these tiles on where the start and finish line were, and it was generating electricity every time somebody stepped on it and walked on it. Another advancement in tiles which we're hearing is coming up is they're going to be solar chips embedded in the glazes, wherein if tomorrow if you're going to do a ventilated facade, you could actually generate a little bit of electricity from the tile. Obviously not like a solar panel, but maybe a fraction of that, but at least it would aid towards reducing your cost of electricity. So lots of advancements happening. Currently what we see in India is not both of those. What we see in India is the big slabs and how we are able to mimic with complete accuracy any fabric, any stone or any wood for that matter.
But do you see that happening in the future, in the near future?
It's already happened. It's a question of getting the cost down for it to become affordable. Right now it's already there, but it's too expensive. But it's a question of time.
And Siddharth, there is India, our country is such a diverse country, and it is climatically diverse, it is culturally diverse. I want to understand from you, how does the cultural and climatic diversity in India influence the choice of materials that we use?
So India has, you're right, very diverse cultural zones from, if you go span from north to south, languages, the way you even dress up, that changes because of the cultural diversity and especially the climate. India, I think, has about...
And the houses.
And of course the houses. So India has about, if I remember, it has about 18 climatic zones. So it has an number of climatic zones if you divide it further. And of course, architecture and material plays a very, very important role. So for example, you can't really do a glass box building into something like, you can say, in Rajasthan. So that's not really the relevant practice. So what I mean by that is the climatic response to architecture is very important, and hence the selection of materials. So if you are in Rajasthan, stone will play a very important role, or even how to build the houses or build the buildings. The U values will come into play. Insulation will still be very important, whether you're working in the hills or working at the sea. So this climatic diversity creates the architecture, especially in our projects. Again, you will not really be finding brick in the south, whereas brick is a predominant building material in the north. So to add to this, I feel in today's context, again, if you are, of course, because at real estate you're building in volumes, I still feel the best practices is still to do the right shading to give response to the every climatic direction, depending on which climate you are in and which zone you are in. And I still feel whether it is an old material which is still there like a brick or a stone, or whether these are the new advancement of materials such as tiles and all, I feel how you can really integrate that material into your architecture by really working with solar shading, by working with devices which can cut the sun and allow the light. I think it can, and we've seen it worldwide, it can still give very dramatic solutions to really like very bespoke different architecture. So I'm not saying that just because you have to follow the old material, it will become a very old vernacular kind of architecture. I think a very modern, contemporary, crisp architecture can be created, even using the wisdoms of these climatic zones and the kind of materials, whether new age or old age, we can mix it. I think there is still a huge amount of possibility going forward.
All right, before we let you go, my final question to both of you. What advice would you give to young architects in India, especially about experimenting with new materials, also at the same time staying true to the local context? Starting with you.
Starting with him.
So as I just mentioned, I think the way the Indian education is probably, especially in architecture, if you're asking me as an architect, I think there is no focus on materials. I think that comes last. There is not a lot of practicing architects which are involved in the education sector, academics. And even when we come out as young architects, I think there should be a lot of forum and engagements where the exposure to the materials can happen. I struggle even in office where I need to really, and you are part of this, I really need to ensure that this young generation, young architects should get exposed to the kind of materials which are on offer. So I think it depends us as practicing architects and even working with building industry, how to ensure that a lot of this wisdom goes to these young architects. They can really pick it up. I think some are already doing it, but some should do it by really ensuring all these engagements keep on happening and they get exposed to the kind of possibilities of material which are there in the market now.
For us, I think it's the advice is use material made in India. The more you use it, the more industry will grow, the more industry will become more competitive. So we are a big believer. I think a lot of brands have tried to take a dig on Made in India, but we're probably one of the only brands which have been around for 53 years now, and we've been 100% made in India. In fact, our latest range, which is a range called Colorado, we've taken inspiration from all the colors of Colorado are inspirations from large buildings, historical buildings, namely from Jodhpur, from Jaipur, from parts of South India, temples, palaces, etc. So we're a large believer in Made in India, and my advice would be as much as Made in India one can do. If it's available in India, a product is available in India, please use Indian material, nothing but Indian material, whatever that may be.
Fabulous. Thank you very much, Abhishek Somani and Siddharth Talwar. Thank you for this fabulous conversation, and thank you for being a part of the NDTV Real Estate Conclave.
Thank you.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities,
bold ambitions,
and renewed dreams.
See the world through a brighter lens.
As you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity. Let's celebrate growth,
Wealth and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
from our home to yours.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
This Diwali, embrace the spirit of new beginnings.
All right, let's start with the smashing news. Bollywood actor Amitabh Bachchan and his son Abhishek Bachchan have bought apartments worth 25 crore rupees in Oberoi's Realty Mulund project. I'm sure they already have thousands of crores of property with them. Radhika Merchant's mother, Shaila Merchant, has purchased a sea-facing luxury apartment in South Mumbai in Prestige Ocean Tower. Now, closer to us in Gurgaon, luxury projects like the Arbor have made headlines, selling 8,000 crore rupees worth of inventory or apartments in common language in just 3 days. Now, another point, very important one, Nikhil Kamath, who had been advocating just renting a home, has actually decided or shifted his stance and bought a luxury apartment in Bengaluru very recently. So India's housing market is riding a wave of very strong demand despite rising prices. Developers continue to strike land deals despite prices of land rising dramatically as well. Now, why are India's property markets hotter than ever? And how long will this rising wave continue? Let's get some answers from my expert guest today. I have with me on my left, Rajan Bandelkar, Vice Chairman, Narretco, Amit Goyal, Managing Director, India Sotheby's International Realty, Vikram Tanwar, Founding Director and CEO of Nitara Projects, and Vikas Dua, Founder and Director of Chintamani. So, gentlemen, thank you very much for joining me. We will give the first question to our outstation guest who's come from Mumbai to Delhi. Rajan, I have never seen this kind of excitement, and this is across all segments, middle class, upper middle class, and the truly wealthy at the top, including the startup founders that we just spoke about. What is happening?
First of all, Manisha, thank you. See, if you see a real estate market, because I am in the industry from last 4 decades, so the industry is like waves. It comes up, goes down, then comes up. But unfortunately, the market was practically flatter, or rather it went down. From 2013 to 2021, almost 8 years. Thanks to Corona, because I keep on telling every time, because you just told that Nikhil Kamath, who was advocating on being on rental housing, rather than he bought his own apartment.
Right.
So Corona has made that change into all Indian people, and especially the people like you, the homemakers. Today I keep on telling, if you ask any lady, aapko sona jawrat de do ya ghar de do, so she chooses home. So we all, thanks to all you women, and that too also you might have seen all the governments.
So all the excitement in the real estate market and residential is because of the women. They want a home.
Of course, and see that why it is, my point is proved. Majority of the governments have given 1%, 2% rebate on stamp duty.
Women.
See, that's add to my point. No doubt, I don't advocate. Whatever is going on is not good for the industry. Let me be very honest, because…
Can you repeat that in a little bit louder words? Not good for the industry.
In the industry, people don't like me because I'm very blunt. Because, see, rising price is like मीठा है. आप जितना मीठा खाओगे, तो no doubt आपको बीमारियां आने वाली है. So, my humble submission to each and every developer. Why I am telling you submission? Because, Manisha, majority of the developer, I don't tell each and everyone because somebody may not like it, I telling them, majority of the developers sell only 10% of their inventory at a higher price. If you see, by the time the price rise happens, only we sell 10% or 15% or 20%
Which
maximum
you keep for the
inventory.
last.
Yeah, but when we go and take, because our raw material is land, so when we go and buy a new land, the landowner says, नहीं आप तो 25,000 में बेच रहे हो और आपको कंस्ट्रक्शन कॉस्ट, भले हमको 5, 6, 7 हज़ार आता होगा, वो तो 3,000 गिनता है, बोला कि आपको तो 3,000 कंस्ट्रक्शन कॉस्ट आ रहा है, बाकी तो सारा आपका मुनाफा है, मुझे इतने पैसे दे दो. So that's the vicious circle. But today, why it is happening? See, the people who are age-old people, if you see in the industry, majority of them stop buying lands. They either do JV, JD or DM. That they do it. But the corporates who have come new, so उन्होंने अभी तक उसका उन्होंने सारा अच्छा ही देखा हुआ है, बिकॉज जितने भी कॉर्पोरेट आए वो पोस्ट रेरा आए, प्री रेरा वहाँ पे कॉर्पोरेट थी नहीं, बिकॉज रियल एस्टेट इंडस्ट्री शुड बी लुक एट 2 एंगल्स, प्री रेरा एंड पोस्ट रेरा. तो आज कॉर्पोरेट्स आने से ये चल रहा है एंड everybody is enjoying.
Everybody's enjoying.
Yeah.
But I think what you've mentioned, and Vikram, I'll come to you, what Mr. Bandhelkar has mentioned is that all the rise has been post-COVID. So ऐसा लग रहा है कि market has become very hot, right? But अगर आप 2013-14 से लेके 2020 तक देखें, literally मोरी बंद हो गया था, and post-demonetization तो it had in some markets it had also come down. But do you agree that runaway prices are not good for real estate or for developers? Till what point will you continue to buy land as land prices go up?
Manisha, thank you very much for having me here, first of all. So, जो prices हैं उनका मैं बोलूँगा direct relation है customer के confidence से. Buying a home is the largest or the biggest decision any person can take in their life, whether it is financial or emotional decision. So during last few years, that confidence has increased. उसी की वजह से there is a beeline for in all the offices of developers, and वो confidence जो है उसके multiple reason हैं. रेरा आने के बाद में there is a confidence increase. Infrastructure जैसे develop हो रहा है उसकी वजह से there is a confidence increase. इंडिया एज ए कंट्री जैसे ग्लोबल मार्केट्स में परफॉर्म कर रहा है, हमारी जीडीपी जितना अच्छा परफॉर्म कर रही है, उसकी वजह से बायर दे आर वेरी कॉन्फिडेंट दैट दे शुड हैव अ होम, और उसकी वजह से ही देयर इज अ डिमांड. सो दिस डिमांड इज एक्चुअली ट्रिगरिंग द प्राइस हाइक. बट फॉर श्योर अगर करेक्शन आता भी है, घर तो चाहिए. सो घर चाहिए तो देयर विल बी अ डिमांड फॉर श्योर.
करेक्ट.
So I think this is the price increase, whether there will be a correction or not, but demand will be there, and that's a fantastic opportunity for every developer.
For every developer. All right. Amit, as an advisor to, of course, the top end of the market, which is the HNIs, but you have a deep perspective of what's happening in India's real estate. Are there pockets which are hot? And therefore, we believe all of India, all top 7 cities, all markets are doing well? Or there is pent-up demand which we are seeing today, which is making this bull run seem very strong? What's your view?
You're right, Manisha. So there is a lot of liquidity. These strong economic, macroeconomic factors are really playing a role where people are wanting to buy good homes, upgrade their homes. And in terms of my view on, the way forward, I think it's all about demand and supply dynamics. Those dynamics indicate that the demand remains robust and the supply is lesser, because a lot of inventory has been taken up, has been picked up by home buyers in the last 3 years when market has seen good run, as my co-panelist Rajan also said. Given the low inventory levels, especially in the luxury segment where we operate, I see, whether it is new IPOs coming or the stock market performance, these are, reasons where there is excessive liquidity in the system, and that liquidity is going into people upgrading their homes and also investing in properties. So all these, 2021, prior to 2021, for about 8-9 years, we saw investor demand slowing down, and mostly end users were coming and buying properties. But in the last 3 years, we've seen
more and more investors coming back into the real estate space and investing. In fact, we do a survey, and this year our survey findings were that 44% of the investors who invested into real estate in the last 1 year, actually their primary reason was investment besides other factors, right? So that indicates that investor is back into the real estate market. They are optimistic about the future. They're optimistic on the price appreciation, capital appreciation, and also rentals have been growing.
Rentals have also caught up. So
Absolutely.
that's another thing. No, you're right. I mean, I cannot believe that Amitabh Bachchan and Abhishek Bachchan don't already own at least 1,000 crore worth of real estate, but they've still invested in some more flats from a quality developer. Vikas, let me come to you. You're in a market which is one of the hottest. When we talk about the fact that, okay, some are hot markets, some are good markets, but most markets are doing well in top 7 cities, but some are really hot, and Dwarka Expressway is one of them. Do you believe that it's pent-up demand, and because there is not that much supply that prices are going up? Or do you feel that there is some एस्पेक्ट ऑफ, वो कहते हैं ना हमारे हिंदी में एक कहावत होती है, बहती गंगा में हाथ धो लेते हैं. अब आ ही रहा है बायर, तो हम बिल्डर है, थोड़ा अभी कर लेते, बढ़ा लेते. वी डोंट नो अबाउट फ्यूचर वेदर इट रिमेन द सेम और नॉट. व्हाट्स हैपनिंग?
Well, Manisha, although I'm a strong advocate of that, we developers, ourselves being the developers, we should not aim for appreciations. Our job is to buy in hectares and convert those hectares into constructed, developed, fully developed square feet areas. And our bottom line should only be generated from that value addition job that we are doing.
That's
that core area we should focus to, stick to. But yeah, once in a while, such spurts are more than welcome. It serves as a booster dose for revival and sustenance. And as far as the conversation going on as if there's a big boom which has already happened in the industry is concerned, I don't think so. It has just come up from the undervalued levels to fairly valued now, by now.
Oh, you think right now it's fairly valued? Dwarka Expressway is now ranging between what? Amit, give me the price. 12,000 to 20 पहुंच क्या होगा?
Correct. How does it matter? How does it matter?
It matters because it's becoming unaffordable. No, but here's my very solid question and a more pointed question for which I would seek an answer. At some point, what some of the experts tell me is that yes, there is demand, so developers like you will continue to buy land vikas, right? But there will be a point where you will do your math and say, now it's too expensive. And we don't feel that there will be demand and the land deals will stop. Do you think we are close to that, or do you think that's a far away, maybe 3 years, 4 years, 5 years into the future? What's your take?
Allow me to be candid here. Though it has doubled, the land prices having been doubled or a little more than that, or even in past 2 years, more so in Dwarka Expressway, and the hotter beds have commanded more premium, more appreciations happening. But उसको अगर हम आज भी कंपेयर करें, what does that 30 crore rupees translate to per acre? It's only 60,000 rupees per square yard, which is 1/9, 1/10 the price of average Delhi plot. So that's the room going forward. Even E grade, D grade, E grade places in Delhi, the land prices are much more. And the average places 8, 9, 10 times more than Dwarka Expressway. So there's a room. I'm a strong advocate that, yeah, though we should command premium at the times when God permits us to, but we should always keep on buying more land. The more units we sell, we should cover up in buying land. As Rajan Bhai was earlier telling us that by the time we sell, and as we were able to sell at higher rates, only some 10-15% of the inventory. Hence, we are unable to buy the land in the next round of things. So if we don't want that to happen to us, we should be fairly quick.
So you're saying that keep accumulating land because times are good and you feel that they're still much cheaper than, let's say, Delhi. Amit, I'll move that way now. So real estate is cyclical, we all know that. At least that's the way it's behaved in the past. It's about a 7-year cycle. Let's assume that we started in 2021. We are in 2024, so we are 3 years into the cycle. Do you believe that because there's a pivotal shift in India's economic blocks, that this rally in real estate could be longer? Or do you think that we will follow that 7 years, which means another 4 years of good times left?
That's a great question, Manisha. And I would be optimistic that yes, 7 years and perhaps longer this time, because all the factors are in the positive zone, whether it is capital markets performance, stable government, robust consumption within India, right? So we are consuming, whether it is data, automobile, pharma, most of the productions. Overall, global investors, they are looking at India in a big way, very positive way, because they see, again, stability of governance, countries full of enterprising people, right? There is consumption within India, within the country. We are able to consume quite a lot. So considering all of it, I feel the interest rate cycle is again something which is going to be favorable. Interest rates may soften in the years to come. So all of it may make all the reason for this cycle to continue maybe 7, 8, 9 years, if not longer.
Why are the rich buying so much real estate? I mean, one is investment, but are there other reasons? Is it they already live in beautiful homes? So is it truly with the perspective of capital appreciation, diversification? Because they're also taking the prices up, Amit.
So it is definitely diversification as one of the key reasons. And also socio-economic factors. Psychologically, people buying homes in prime locations of the city that they live in. Branded residence, they want to buy upgraded, homes, larger, more amenities, and also buying for their future generations. So it is not just the property purchase is being done for that person who's writing the check, but also their son, daughter, more family members.
So intergenerational wealth.
Absolutely.
That's what they want to create.
Absolutely.
Okay. Vikram, what's your plan? I mean, is there enough? NCR market goes crazy, ये तो सबको पता है, that in bad time पटकता भी सबसे ज़्यादा है, और अच्छे time में it also goes up or it goes a little bit crazy or nuts, as they say. Investors come in very quickly because they love real estate in North India. How long do you believe that this cycle will continue? Because a lot of people that I meet keep asking me, is this the right time to buy a home? Manisha, the prices have already gone up so much. Should I wait? Do you think prices will stabilize? What should I tell them? Honest answer.
Yeah. So I'll answer this in a different manner. I am actually not talking about Gurgaon or Delhi, but I'm talking about India as a country.
Yeah.
So we have a big population, and the way GDP and per capita income is shifting, so there will be lots of urbanization in coming years. So in next 10 years, there will be a huge demand for housing. And I think that this is a big opportunity for developers to develop homes. And the infrastructure will actually give a boost to new satellite cities. So, आपने द्वारका एक्सप्रेसवे का 2 बार जिक्र किया. So द्वारका एक्सप्रेसवे अगर एक्सपेंसिव है और इंफ्रास्ट्रक्चर अवेलेबल है, so लोग सोना जाएंगे, जहाँ पे कि लैंड या फ्लैट्स.
Oh yeah, absolutely.
So this is actually interrelated. और रियल एस्टेट प्राइजेस जो हैं वो लोकेशन की वजह से हैं. हो सकता है आज द्वारका एक्सप्रेसवे महंगा लग रहा हो, बट 10 साल पहले